RIU Conferences acknowledges the traditional custodians of the land on which we gather, the Gadigal people of the Eora Nation. We pay our respects to elders past, present and emerging.
That is a magnificent shot of that quaddie, isn't it, going across the dirt. They're just absolutely beautiful. Really well put together, team. I love that intro video. I feel like we should have been jumping up and doing perhaps some little body movements, etc., to get us physically nimble, because we do spend a lot of time in this room. There's 1,100 of us came through yesterday. So 1,100. I think we've got between 16 and 1,700 jacks registered at this point in time. Yeah, so a lot of people, usually around 250 of us in the room. A little bit quieter at the moment, but the audience will build, I'm sure, once they realise that Rob Murdoch is in the room. So I think I did 34 presentations, not personally, but I introduced you to 34 opportunities yesterday, and we've got 36 more today. And of course, aside from the companies that we're putting in front of you, the investment opportunities, we have individuals like the great Rob Murdoch here. Now, who's part of Rob's investment education for the Wise Club in here? Who is regularly reading his newsletters every morning? There's a couple of you in here. It's great. I really enjoy it because while we can get our news flow from many different sources, a lot of it sometimes is quite biased. Rob is not biased. He just sits there and he goes through the facts. So I love listening to you, sir, because you cut through. I say they're in the dirt world, the bullshit. He cuts through the bullshit and just gets straight through the nitty-gritty. He's not influenced by anyone else, and I really, really enjoy this. So if you haven't met this gentleman before and you're in the room for the first time, I do strongly recommend you have a look at what he does. It's called Oztech Resource Opportunities. It's basically a newsletter, isn't it, Rob, that comes out? How often do you put it out?
5 days a week.
Yeah, so it is every day of the week. Now he's going to have a chat with us today. Himself, he's got a presentation, and what we're going to do tomorrow morning, if you've got time and you come in early, I know a couple of you like to get the train and beat the traffic in, Rob's going to come and we're going to do a bit of a Q&A. So if there's anything that you've seen over the last couple of days with the different companies that you want to know a bit more of Rob's take on, or just the market in general, I'll put some questions to him, but you're more than welcome to join us for a bit of an informal discussion. So without any further ado, I'd like you all to put your hands together and welcome speaker number 1, day 2, Rob Murdoch.
Thanks very much, Christy, and thanks to Jackson, Charm and Andrea and everyone else behind RIU and organising this conference. And thank you all for getting up so early and coming along. I thought when I was preparing this I might be talking to the cleaners, but I see there's a lot of clean, really lovely people out there, so thanks very much for coming along. Listen, Austex is just basically what we do is just basically provide a totally independent, critical review of all the relevant project announcements. So we're talking about the project, we're not talking about the company. We're not doing it from the journalist point of view, it's from purely 56 years of technical experience working in mining companies and exploration companies and even oil and coal companies, from the junior end right through to the CEO. Okay, this is where we're at. We're going to talk about the ASX resource projects market as of May 2026. This is a graph, just basically a starting point, if you like, of what's happened with the average share price over recent time. Probably very familiar to you all. The question is where to now? I've got no idea. What's the room think? Who thinks it's going to continue to go down between now and the rest of the year? Who thinks it's going to go up? Well, there you go. I love positive people. The view is, the room is that it's going to turn around and go back up again. Fantastic. It's great to see. Well, one of the good things is you don't get far in an exploration or mining company if you don't have cash. And this is a graph of the quarterly cash flow reports with total capital raisings, ASX companies over the last 7 years, quarter by quarter. This is compiled from the Appendix 5B cash flow reports that the accountants put in and file with the ASX. It covers about 87% of companies. It doesn't include all the majors or most of the producers. Some of the producers still put a report in. Look at that, quarter four last year, in 2025, a record $4.7 billion was raised on the ASX for exploration. Okay, we've just crunched the numbers last weekend, thanks to some hard work, and they're preliminary numbers, but the quarter just finished, the March quarter. The reports have just come out last week, and we've raised $2.5 billion in that. It's come back down to a little bit more normal. Understanding the breakup of capital raisings, this is how it works. We have a whole lot of raisings for specific projects and specific companies that are doing well, that are in excess of $10 million. We have a myriad of under $10 million, and this is where the ASX is the greatest exploration resource capital market in the world, because it always can provide the smaller companies in raisings under $10 million with about $500 million. So there's always something for the little small explorer to be able to pick up to keep going. In the quarter we've just finished, you can see how it's come down there. We had greater than $10 million raisings by 91 companies during that time. 23 gold and silver companies raised $900 million. 9 were copper companies, 4 lithium, 3 rare earths, 3 uranium, and so on down the list. And that just reflects what is the market out there you and other investors prepared to put your money into. They're the commodities at the moment. The thing is this, we're raising a lot more money, but we're not spending it on exploration. Exploration has not increased. Exploration spend, this is whether it's capitalised or whether it's expensed, we add the two together, it really has not increased since 2022. It rose over COVID time, and then from there it's just drifted along. Okay, it's $900 million in the first quarter of 26. It's just not going high. And I think some of that, I've spoken to drilling companies and so forth about this, and this is just basically the capacity of companies that provide exploration services outside of the company to be able to do the job. So what we like to do in Austex is to break our report down so that it helps the investors that are and the other companies identify opportunities, because our readers include everyone from most of the major mining companies of the world down to mums and dads investors. So we divide our report up, and it's up the tree as a project is developed. Section A is a new project, early days, speculative. Don't go there if you're a mum and dad and don't really know where you are. A lot of people do, and a lot of people get hurt. You just really got to wait for that, what I call the drilling excitement zone. This is where money's made on exploration companies. As the drilling results come out, you can assess whether you feel the company is right for you to invest in, whether the project is right, and we put that in our sections E and in D. Because the drilling results in E and the resource updates in section D. Then we get into this very frustrating permitting and financing zone, and we'll come back to how you've got to be careful how you choose your commodities in that section, because it can take a long time. We've had, I think, up to 15 years, and then we've had some that have been going that long in New South Wales. Take, for example, McPhillamys or the Boggabri gas project, and they still don't get through because of some frustration that comes through from the environmental courts. This is an area where investors will get tired of the stock and go look for something else. So it's not an area, it's a tough area to go through. And the people that run companies today, I take my hat off to you, because I tell you what, I wouldn't have done it 10, 15, 50 years ago when I started. It's just out of control. And some government's got to focus on getting rid of the black tape, the red tape, the green tape, and any other tape there, and get projects working again. And then, of course, there's also money to be made as the project goes into production and gets up and reaches nameplate. So if we compare share and commodity prices over the last 3 months, this is what we see. If we look at the share prices of those that I've coloured in green there, the share price is well below the commodity price change. So there's opportunities in tin, tungsten, oil and gas, lithium, nickel, bauxites, rare earths, iron ore, zinc, lead, uranium and silver. They're there. They're undervalued relative to the price of those commodity changes over that period of time. And that's an important one we bring out on a Sunday morning on our weekend edition every week, where we look at that over the week to guide our readers. Now, the other thing to keep in mind, and this one is extremely important, the demand for resource commodities is not all equal. We have in Group 1 those commodities where the world needs over $100 billion per annum. Petroleum, coal, copper, iron ore, aluminium, gold. The second group are those between 10 and 100 billion. Zinc, lead, titanium, manganese, silver, lithium and nickel. Lithium has come up into that group from what you might call the new age minerals of over recent time. Group 3 and 4, this is a danger. The world market for these commodities at the moment, and it will grow, but grow only slowly, is 10 billion or under $10 billion. Tin, cobalt, molybdenum, rare earths, tungsten. Then we get into some real crazy ones that are very hard to sell. Molybdenum, vanadium, gallium, antimony and germanium. And people, mums and dads are going out there and investing in these exploration companies with no idea whether that company's ever going to be able to find a market for their product. So it's a quick in and out. It's a day trader stuff, and what I do, it does not appeal to day traders. The average cash held per company as of the 31st of March also tells us something. So this is after the cash raisings. Companies in Group 1 and 2 that we had on the last slide hold the bulk of the cash. So the market is wise. It understands the commodities where there is a market. Things like silver, bauxite, copper, zinc, lead, lithium, uranium, iron ore, manganese companies all have a relatively good bit of cash, averaging more than $10 million per company. Then we get down from there. The gold companies don't even figure on that list above 5 million. the moment. So the demand and chances for an explorer to become a producer increases with that group. So if you look at the global demand in Group 1, there's 505 companies on the ASX, and 35% of those are producers and 13% of explorers. So that's a pretty good ratio of going from exploration into development. In Group 2 minerals, 22% are producers. In Group 3, let's say they're the ones under 10 million with what are regarded at the moment with the better growth prospects. These are rare earths, titanium, tin, tungsten, uranium and helium. They're 7%, and those with more challenging projects, the fertilisers, graphites, kaolins and so forth of this world, the scandiums and fluorspars, only 4%. So let's have a look at a few of these sectors. Oil and gas. Well, this country pissed our oil and gas people off years ago. You know, there's talk now with the Straits of Hormuz situation of getting them back to drill a well. Find an oil and gas company that wants to spend 60 million drilling an offshore well in the environment for exploration that this country has developed over the last 10 years. You know, my profession, the geologists, have been trying to warn the politicians 10 years ago and over that 10-year period that they were going down the wrong track with energy policy, but whether it's Liberal or Labor, they've continued on to destroy this potential of this country for energy. So this is our problem today. So we've got to get these guys back, we've got to get them spending, we've got to stop talking about the taxes that the gas companies pay. They pay plenty of tax, and get on with getting development going in this country in oil and gas. So there I've listed the 10 best and worst performed gas stocks. We've had, the best has been OMA, who's promoted the Taroom Trough as we've had the minister here in Queensland. Oh no, sorry, we're not in Queensland, are we? We're in New South. We had the minister up in Queensland talk about a sea of oil. It's actually a gas project. Some of the guys that have got into Mongolia have done well, and some of those are listed there. Or you can go down the other end where the prices are cheap. They've lost a lot of ground in the last 3 months, and look at some of the companies there. AEL, for example, is a very good Victorian gas producer, and their stock has been absolutely hammered. So there's a few opportunities there for you. If you get in touch with me, I'll send you a copy of the presentation. The gold and silver sector has been the most popular on the ASX, and the reason this gets into production pretty easy, it's just easy and quick to explore for it, develop. There's thousands of, well, I won't say thousands, but tens of engineering companies that will build you a plant off the rack, and you produce some gold, you can flog it off. They're the 10 or 15 best companies there over the last 15 months. And I haven't got time to go into them, but as I say, you get the report, you get this, you can look at yourself. One of the things to look at as the gold producers, and you might have seen yesterday that Regis and Vault have agreed to merge. These companies, the gold companies have been really successful, gold producers. They've got a mountain of cash, and they'll be looking out there for opportunities. So don't ignore this sector. Their costs have gone up 15% over the last year, yes, and they'll go up further with the diesel price, but they've got plenty of money, they've got plenty of muscle power. A lot of them have got over 500 million in the bank. There's opportunities there. Copper and nickel. Copper's in demand, of course, growing demand there, and nickel's just floating back in the last few months, and I think we'll do very well. It's only, when I looked at that table, there's only one nickel stock made it, and it is CHN, which has got a pretty good project over there at Goonaville, and it's gone down 40%. So have a look at that one. Lithium, rare earths and titanium. These are the 10 best stocks there. A lot of the problems with rare earths, lithium's come back in price, of course, but the rare earths is that people are calling monazites rare earths, and cracking a monazite is very hard. So look at the ionic clays projects there. They're the ones that can get back into production a lot easier and a lot cheaper. Should explorers headed to the US or stayed at home? Well, there's a lot of them went over there and the promise that Trump was going to do all sorts of things for them, give them money, get them projects, and a lot of them there on the right-hand side it's been a disaster for shareholders. They should have stayed home. So with rising prices, with diesel, air transport and so forth, my recommendation to all exploration companies, stay at home, stay in Australia, and let's just work through the politicians to get the permitting sorted out and get rid of the green, red and black and other tape, and let's get projects off the ground. Let's get the people of Australia on side and make this industry great again. Thank you.
You would all laugh there immensely. I love Rob's presentations, as you can tell, because I'm looking, I'm down, I'm taking pictures, and my job, as I said to you at the very start of this event, was to keep things rolling. Ding the bell at 2 minutes, stand up at 1. Rob had 25 seconds left on his presentation. I've got 2 phone calls from Sharon that going, come on, Chrissy, stand up. Boa's waiting. They're waiting. Rob, thank you so much. If you'd like to hear more from Rob, he's back again tomorrow morning. Can you give him another big round of applause, please? You managed to fascinate me, Rob, so well done to you. Now, you did say that companies don't go far without cash. So our first company this morning has strengthened their balance sheet to execute their 2026 drilling strategy. I did take notice of that. And they also fit into that first group that Rob was describing of in-demand resources. So they're in copper. So this is Graham Purcell, isn't it? Graham Purcell? Thank you, correct. And he's here today to talk about Boa Resources. Would you please make him very welcome?
Well, good morning and thanks for being here. It's been a long while since Boa's presented at this type of forum, and the reason we're here today is, you know, generally speaking, there's only 2 ways a junior explorer like ourselves can create value, and that's through transactions, doing deals and acquiring quality projects, and the other way is by drilling and making discoveries and defining economic resources. And in the recent acquisition of the Neds Creek copper project, we've moved into the copper space, and it's and so we've sort of started with that first part of the first tool that we have, and we're also working towards starting our drilling campaign, which should hopefully kick off in the next month or 2, and that's where we're going to start, we think, generating resources and generating value for the company. So just to give you a little very brief snapshot of the company, as said, we've recently acquired the project. We have earlier this year just strengthened our balance sheet with a placement to make sure that we can fully fund all our exploration plans and execute all our drilling this year and into next year. And we're also sort of building the exploration team so we can do that. This is the team, led by Kath Norman. She was instrumental in acquiring the project, very patient, very persistent. And along with Kath and Mark Tomlinson, our other director, they've got a lot of extensive capital market experience. In terms of the technical, that's myself, and also a recent appointment for exploration manager is Dave Reed. Dave's very important to us because he led the discovery of about 150,000 tonnes of copper at the Duna and Green Dragon project for Bentnor Resources about 10 years ago, until it was acquired by Sandfire. But the thing about Dave is, why he's important to us, he brings a lot of technical knowledge immediately into the company. It's in-house now, and we don't have to go and learn and develop that over months and years. So we get a bit of a flying start. So just where are we? Where is the Neds Creek project and what is it? Well, we're sitting up in the Murchison. We're just south of the Plutonic Gold Mine and east of the DeGrussa, Sandfire's DeGrussa operations, which is now closed, or in the process of closing. It's an 1,100 square kilometre package. It sits in the Yerrada Basin, so it's a bit different to DeGrussa. We're looking at sediment-hosted copper, epigenetic, structurally controlled sediment-hosted copper. That's one of the questions when we were talking to investors earlier on this year, was why should we go into a project that Sandfire have previously held, because we know they've done a hell of a lot of drilling over the years while they had DeGrussa, but the key thing is most of that work was focused in the Bryah Basin looking for VMS-style deposits. The Neds Creek project is fundamentally different. We're looking at said copper, different mineralisation style, different controls, and has only been quite lightly explored relative to the Bryah Basin. One of the advantages we have is with Dave, and when he discovered the Thaduna and Green Dragon deposits, it's used as an analogue. We're going to be using it as an analogue for how we're going to explore within the broader Neds Creek project. The beauty of the project is there's a whole bunch, there's multiple prospects already identified with ore grade intersections that have been lightly explored, and you'll probably see that, hopefully see that as we talk through one of our primary ones. In addition to the prospects, there is some expensive geophysical and geochemical data that we're processing and using as a targeting exercise, using a bit of modern technology to help quicken that process to find additional targets and allow prospect ranking prioritisation. Just to zoom into the project, this is where the main prospects are. Most of them, 7 of these 8 prospects you can see here, are sitting in the Thaduna Formation. It's a big, monotonous, thick grey wax sequence, but that's where we've got the fault control of structurally hosted epigenetic copper mineralisation. It's a very simple exploration model, and we're lucky enough to have Thaduna and Green Dragon deposits as analogues that we can use to assist our exploration. The most advanced of these that we're going to talk about in a moment is the Ricky Lee prospect. It's our priority really for 2026, and something that we think can come up pretty quickly to resource definition stage. And there's a bunch of other prospects which sit in structural corridors which have been lightly explored. The one you can see on the map here that's a bit of an outlier, is the Enigma prospect. It's sitting in a lower formation, Johnson Can Formation. It's got carbonaceous shales, carbonates and stromatolites. It's a bit of a funky package, fundamentally different to the Thaduna Formation, and that's where Sandfire and previously SIPA Resources focused most of their work. It's a very large and extensive system. It's got a footprint of at least 3 by 1 kilometres. Most of the previous drilling was looking in the oxide zone. There are some deeper holes with sulphide intersections, but basically it's at an earlier exploration stage because the mineralisation controls are very poorly understood, at least in the sulphide zone. And one of the things that we're going to be doing in conjunction with drilling is pulling that one apart and trying to understand the mineralisation controls, whether it's structural, like we see at Thaduna and Ricky Lee, or if it's something a little more stratigraphic control with the carbonaceous shales. Once we understand that, we'll be able to get in and drill and confirm some of that model, and then hopefully apply that to the rest of the project and even basin scale. So I just want to zoom in. This is our priority target, the Ricky Lee target, the first thing we want to drill. It sits 2 kilometres from the Thaduna deposit of 120,000 tonnes of copper. It sits in the same orientation, north-northwest fault zone. What we have on surface is some old, historic, small-scale copper workings. It's 500 metres worth of strike. It has been drilled shallowly with RAB drilling and then lightly followed up with RC drilling. You can see on that long section there's some pretty healthy economic copper intersections. It's open long strike, it's untested at depth. That is all the drilling that we got in there, and this sort of reinforces this is our most advanced prospect, but it also reinforces the underexplored nature of most of the project, of the prospects themselves and of the broader project. There we go. This is just to give you an idea of why we think the Ricky Lee prospect is important to us and why we want to target it first. This is the main long section you see here is the Thaduna resource that we extracted from Ventnor Resources. This is at the same scale. The Ricky Lee section you just looked at is at the same scale sitting above it. Thaduna, 120,000 tonnes of copper. It's 500 metre strike. It's steeply dipping back to the west, just like Ricky Lee. It's got a moderate northerly plunge control, and Dave Reed explained to us that the upper part of this system is more chalcopyrite rich, and the bottom part of this system, down to around 500-600 metres vertical depth, is more bornite rich, and hence you get higher grades as you go deeper into the system. So this is basically the analogue that we want to repeat at Ricky Lee. This is just to zoom back to Ricky Lee, to sort of explain what we're going to do and why. You can see the cross-section there. This is obviously one of the better ones. But in 2007, SIPA Resources came through and drilled some RAB in and around the old workings, got some encouraging numbers. 3 years later, they drilled 3 RC holes, got some encouraging numbers. And then another 3 years later, they drilled 5 holes and got some very good ore grade intersections. Since that time, there's been no drilling, and this thing is just screaming out to be drilled to look at that 500 by 200 metre panel to try and generate resources. Our plan is very simple, grid-based RC drill program. We're going to test up, dip down, dip along strike, all the usual stuff. Establish controls. We expect there to be a plunge component, so all up we're just going to be drilling about 5,500 metres. And that should commence once we get through the heritage protocols, do a couple of surveys, and that gives us then the running room to be able to go and drill. As I said before, there's a lot of other prospects that have also been lightly touched. Essentially, it's just RAB or air core drilling with ore grade intersections. The main ones you see there is the east-west trending Green Dragon trend. We've got a series of prospects along that. And also we have the Thaduna corridor. The Rooney's prospect is our next priority, mainly because it sits at the structural intersection and has, again, a series of RAB holes with high-grade copper intersections in the oxide, and we'll be looking to test that at depth for the sulphide potential. And again, once we test these projects and move them up or out of the pipeline, we'll be using all the geophysics, geochemical data sets to be able to generate new targets and feed that in to the pipeline. It's just an ongoing process, as we all know. So one of the things that attracted us to the project was that the whole project comes with a full project pipeline, from some earlier target delineation prospects, some of them more in drill testing stage, and the most advanced one being the Ricky Lee thing, which we think we can get that up to resource status very quickly just with that program I just showed you before. And we're feeding these things from the target generation, feeding more prospects into the pipeline and just keep on feeding it and rinse and repeat. But the aim is really for us, as we look at a bit of a timeline, just to sort of start winding up here. At the moment we have 2 overlapping native title claims. We have 1 heritage protection agreement executed. A second one is imminently to be executed. We have 1 heritage survey booked and hopefully have another one booked around the same time, early next month. Once we get that clearance, then we're masters of our own destiny, really. We just start drilling. And hopefully towards the end of 2026, it's a bit of a stretch, but we like to think we'll be able to get some resource on the Ricky Lee prospect. So that's it, really, just in a nutshell. That's the Boa Resources story. We've had what we think is a bit of a transformational acquisition for the company, and it's something now that we can do some drilling. We can hopefully generate some longer term value. We've got the funds to be able to do that. We're building the exploration team and the skills within that, and hopefully build a copper resource by the end of this year. So I'll leave it there. If there's any queries or questions, please come to our booth. I think it's booth 30, and be happy to discuss in more detail. But thanks for your time.
Graham, hold on. You've got 3 minutes up your sleeve, Graham. Did anyone have a question that you wanted to put to him? Because he does have a couple of minutes up his sleeve. You're more than welcome to yell it out now. All right, it's a date at your booth then with these people. They want to ask you their question in private. Would you please thank Graham again, everyone? All right. Look at this gentleman that's coming up here on stage today. He's usually more at home on the top of a mountain in Nepal or somewhere like that. I didn't actually realise he'd actually climbed to the top of mountains in the Antarctica as well. You're a crazy individual. When you read the bios of people, you think that's interesting. He's got this amount of years of experience in the resources industry, etc. But you do amazing things for young children in Nepal. You're head of an organisation over there looking after kids in Nepal. He's trekked all over the world. He's climbed up mountains. He knows what hard work means and pushing his body to the limit. And he takes a lot of care with himself, and he takes a lot of care, from what I understand, with the people who work for him, and also his projects. So, nice guy, good project. Let's find out what he's doing over in Nevada. This is Duncan Chessel, and the company is Altitude Minerals. Please make him welcome.
Yeah. Okay, thanks, Chrissy. Great to be here, and great introduction. Great to be here in New South Wales, the home of world-class copper gold porphyry deposits such as Cadia and North Parks, which we're about to go out and do an exploration program, hoping to make a new discovery for the next one. But it's also, as you mentioned, Nevada. It's also we're really super excited about a new project we announced, the W project in Nevada, our second acquisition of recent times on gold and silver assets in Nevada. We're building a portfolio there. So quite a bit to go on, but I do want to spend a fair bit of time today talking about, as we are in Sydney, in the great state of New South Wales, talking about the copper gold porphyry potential of our BIROC project, which we're going to go out and drill test next on our pipeline of drill targets. So, and that sort of big new discovery, that's what Altitude Minerals is really all about, is unlocking that shareholder value through that next big or high quality discoveries or greenfield discoveries. We are currently in trading halt, should be out of that this morning, so what you see on the screen on the right hand side will change a little bit, so I can't say too much about that until that comes out. But needless to say, our strategy is to basically test and refresh a pipeline of high quality drill targets, so that we've always got, we've got 2 or 3 really compelling projects that we want to get out and drill test this year. New South Wales and a couple in Nevada. So, and then we're continually validating and refreshing that with looking at new projects that might replace those that haven't quite met criteria, or we're working up drill targets with quick early stage geophysics surveys and so on to get those ready for that drill testing. And how we do that drill testing, that drill target selection criteria is pretty critical. We're sort of, at the moment, we're looking at just focusing on those in-demand strategic and precious metals commodities, and the ones we're focusing on is copper and gold and silver. So, and where we do that is also pretty critical in our selection process. So we want to go to areas where there's profitable mines in the region. So if you're looking for and why do we do that? Because probably that tells you a little bit about the social licensing. So if you do make a discovery, are there existing operating profitable mines? Are there typically deposits that are of the scale, metallurgy, tenor of where you're looking that can turn into an economic resource can be mined? We also look at the prospect scale on the economic scale potential of each prospect, favourable jurisdictions. And I don't think, in this room we can argue too much about New South Wales is very much a top-tier destination, and Nevada are ranked #1 in the world by the Fraser Institute. So that's our two jurisdictions at the moment. And just to have a quick summary of our current pipeline, and these are what we're hoping to get out on the ground and do active work programs on this year. Drill ready in New South Wales on the BIROC project, and I'll talk a lot more about that in a moment. Forens we acquired in Nevada, high-grade silver and gold. We're drill ready on that. We've got earthworks building roads at the moment on that one. So that one's going to be drill tested before too long. And then the new one, the W project on the right-hand side, a new acquisition, and I'll talk to that briefly at the end. I don't have time to talk about the southern Macquarie Arc, the Theseus project. Come past the booth and have a chat to us about that as well. So let's talk about Macquarie Arc. We're going to spend a little bit more time on New South Wales today than on Nevada, but the Macquarie Arc is host to those world-class copper gold porphyry deposits such as Cadia and North Parks. And if you have a quick look at the map on the screen at the moment, on the sort of in the middle towards the bottom, you've got the North Parks one in the green, Cadia off to the right, and this is part of the Macquarie Arc. And those green belts, as they disappear underneath the tan-coloured section of the map, that's where the cover becomes sort of anything from 30, 40, 50 metres straight north of North Parks. It's more like 200 to 400 metres of cover. Where we are, in the pink, up on the top left-hand side of the screen, our BIROC project, The cover there is sort of in that sort of 40 to 100 metres of cover. So it's accessible for us with air core drilling and RC drilling. So that's a competitive advantage we've got in that area. If we were on the straight north-south zone, we'd be having to drill a lot deeper to get to those targets. But these are the kind of areas that the modern explorer has to go. The ground around North Parkes, Cadia, etc., is very heavily held by majors and the recent success of Waratah down as well. So there's certainly we've picked an area on the northwest extension under shallow cover, hasn't really been drill tested before, and that's where we think, and I'll go through that in a moment, we think is a very good place to explore for the junior explorer. And so what is the size of the prize, and what is a copper porphyry deposit, and how do you find them? So I'll take a couple of minutes here to say, well, North Parkes, people say, oh yeah, world class. What does that look like? It's actually a cluster of pipe-like little bodies. And these things can go down 2 kilometres, mineralised for 2 kilometres. Bit of cover over the top, shallower cover there. It was discovered in the late 70s, first production 1983, and still in production today, and block cave. So highly profitable, a lot of copper and gold produced from that mine. But really interestingly, these things are only 170 metres by about 400 metres across. So the mineralised pipe can be very narrow, a little bit tricky to find. So, but this is a little bit what we think we're seeing on our Byruck project in the northwest extension. So how do you target porphyry deposits? You see there's on the diagram there, a very well-known diagram. On the left-hand side, you've got that potassic core, which is where the ore zone typically is, or in New South Wales, sometimes it's on the margins of that sort of intrusive complex. You get the green rock on the side, the propylitic and chloride altered rocks. And what we have in New South Wales is we actually have 430 million years of erosion. And what we think we've got up at the Byruck project is very thin saprolite or weathered rock and transported cover, which has obscured that from the older explorer, and the modern explorer can sort of see through that a little bit better with some modern geophysics and some more mineral systems approach. So what do we do in New South Wales? We look at the Pathfinder element footprint. So you see the green sort of colour on the right-hand side diagram. That's like the green on the propylitic near the model there, and the saprolite. And you can use Pathfinder elements. What you have to do is come along and drill some air core holes across through that in the saprolite or that weathered material, the volcanic rocks around the actual deposit, and use the Pathfinder model to try and focus in. So what did we do? We went out and we did some broad sort of air mag surveys, pretty cheap, pretty quick, got into that. We noticed that there was a lot of these, now 3D modelling, quite a number of these pipe-like features. We went around and prioritised those for economic scale, potential, etc. And then we went and drilled them. We drilled lots of them, and we've narrowed it down to basically 3 of them that we really, really like. And we went back and did some infill geophysics on that recently. But what we got last year was positive air core results. Now, you're not expecting from air core results an economic hit, because the air core rig gets down into the more crystalline rock, and it can't go any further. You need a bigger RC rig, hammer, or a diamond core rig. So on this diagram here, you might recall from the previous one, the intrusive on the left-hand side there, this is our hypothetical model of what we think, and we're about to go drill test this. And we've got our Pathfinder elements, our elevated arsenic and bismuth, which is typical and is of that sort of Pathfinder element geochemistry model. So that's kind of how and why we're at this point now. In the mags, you can see on the right-hand side there, the diagram, we've got a couple of these pipe-like, the red blobs, where that's that potassic, highly magnetic zone. And when you model those in 3D, and we've drill tested lots and lots of these in the area, but the Pathfinder geochemistry plus the mag modelling and also the gravity response around those, that's where we get to that prioritisation. So our next drill program in the middle of the year will be, for instance, this is one of the target we probably like the best, the P38 target. We'll be drilling an RC hole sort of straight down through the middle, looking to sort of just double check the depth to basement on that one, or depth to target. We've got a couple of air core holes you might see from last year with Pathfinder chemistry on the top of that. We've done a lot of other alteration and some pretty technical work on the alteration and white micas and so on to prioritise those. Then you come in straight down and then a couple in on the side, looking for that sort of around the margins of these as well is where the mineralisation can be. You never quite know until after you've discovered these things exactly where the mineralisation sits, but this is as good as a pick as we can do. So super excited to be out there to see the results of this out there on the rig this winter, so that'll be great. I guess the question is, is this Biorock project, this sort of porphyry cluster that we're sort of hypothesising is there, and we've got in evidence from air core, are we going to find the next set of pipe-like porphyry cluster like North Parks, etc. So time will tell. Watch this space, but we're got enough cash in the bank to get out there and get the job done, and come back and inform the market of the results. I will also go back and we'll have a quick chat about the Nevada projects. We've been doing quite a lot of work on those, and Nevada. You might ask, why Nevada? My answer would be, why not Nevada? It's certainly one of the top jurisdictions in the world, ranked #1 by the Fraser Institute. Established mines. It produces 70% of the gold in America, in the United States, and it's 5th largest gold producer globally, behind China, Russia, Australia, and Canada. So, its social licensing is simple. There's almost no trees. In terms of getting permits and social licensing to just get on with the job is an absolute dream, getting over there into Nevada. So, yeah, very, very pleased to be over there. Fantastic infrastructure, massive, 4-lane interstate highways everywhere. We've got road access to all of our properties within, 50 metres or something of most of our targets. So it makes it pretty easy. So as I said, I kind of go, well, why Nevada? It's probably, why not? So the Forens project we've discussed, we completed the acquisition of that last year. Never drilled. Some really high grade, sort of bonanza grade rock chips, historical rock chips at surface there. We've done a lot of, 1,800 grams per tonne silver, 44 grams per tonne gold, over about a 1,200 metre strike extent. And as I said, never drilled, picked that up, completed acquisition on that in November. We went out and did a lot of geophysics, surface mapping, alteration, CSAMT or controlled source audio magnetotellurics, drone mags, threw the kitchen sink at it basically, got ourselves some really compelling drill targets, and we actually have earthworks out there right now getting the drill pads in place for drilling later in the year. And we'll probably do that as a combined program with the W project we just picked up as one larger RC program. And got a great local geo who's had some fantastic exploration success in Nevada. The W project, which we picked up and announced on Monday, we will do we'll do a lot more talking about that over the coming weeks in terms of some webinars, etc. But this was a little bit too good to pass up. Good deal terms, but 40 of 43 historical holes hit mineralisation. 7 of them ended in mineralisation, but it's one of these classic sort of stories. A group came in looking for a shallow, near-surface oxide heap leach opportunity. They drilled a steeply dipping quartz vein, an epithermal quartz vein. They got mineralisation on it, and 37 metres at 1.3 grams per tonne from 31 metres. Did they bother following it up? No. These things, you've just got to drill down, dip, to step back, bring in the RC rig, drill down, dip, try and get to the boiling zone of an epithermal system where you can get that bonanza grade, sort of, gold and silver. So there's a lot to go on this one. Again, we've just about to fly a drone mag on that, more geophysics, mapping, etc., and we'll be combining that with a big drill program at the end of the year. So a lot to go. We've got three projects out there that we want to drill test this year. working on validating steps, getting others up to drill-ready status, and a huge pipeline and news flow for investors. So stay tuned, stock code ATT. Thank you.
Well done, thanks, Dan. All right, our next company up on the stage is Cashed Up Nicely. Tick 1 from Rob. They've also got a really good relationship with the local Indigenous owners of the land they're operating on. Tick 2, what happened to your beard?
I needed a refresh.
Needed a refresh. What sort of an exploration geologist are you? You're a happy exploration geologist, aren't you?
I don't get out enough, yeah.
Yeah, these guys have had some really big finds. So talking about exploration in the last 18 months, they'd be pretty happy. So we're going to talk, this is Chris Orshot, by the way, everyone. He is the CEO, he's also an exploration geologist, and he's going to walk us through Yandal Resources. Would you please make him very welcome?
Thank you. It's great to be here. Fourth year at Sydney RIU, second year presenting, and for anyone that's following us, we have made a lot of progress in the last 12 months, and that's what we're going to be talking about today. Yandal Resources, we're a gold-focused exploration company. We're based in WA, northeastern goldfields, Western Australia, within the Yandal Greenstone Belt. We've got two key project areas. Our main focused area is Ironstone Well Barwidgee. We started executing a new strategy out here in 2023, focused on identifying large-scale, significant mineralised systems that host gold. And that strategy started to mature. So we've made two discoveries within an 18-month period. Siona in late 2024, Arrakis last year in September. And that's really starting to validate our thesis in terms of the potential of this project area. As I said, these are new discoveries, so we're coming in where there's been no previous exploration, no previous prospects. We're not proximal to any historic mines or deposits. We're identifying new conceptual targets, and we're moving them through that exploration process. So it's generating a lot of value for the company and for shareholders by sort of successfully executing that process. Off the back of last year's discovery, Arrakis, we've been able to substantially increase our cash position, very well funded with 14.7 million at the end of the last quarter. We're very active at the moment. We've made an investment in increasing the infrastructure out on site with a 21-person camp and core yard. We've increased the team, and that's also all to support a very aggressive and accelerated exploration in the first half of this year. We did have 2 RC rigs on site. We've got 1 at the moment. The second one's just shot down for some repairs, and we've got a diamond rig on site. So we should have 3 rigs turning again soon in the coming week. A very tightly held register, and with all the drilling that we have underway, we've got a lot of near-term catalysts as well. And importantly, we've been investing in heritage surveys. We need to get a really strong runway of heritage clearance ahead of us, which provides a very clear pathway to continue exploring into 2026 and 2027. A quick overview of our board and capital structure. I won't dwell too long on this slide. I think the key focus areas are looking at the register, very tightly held. I know a lot of companies say that, but when the top 20 have 80% of the company, that's tight. More importantly, we have some large shareholders there. They're all long-term, they've all backed our strategy, and they've all benefited from the success that we've had, and they'll all hopefully benefit from the success we'll continue to build over the coming year. Just looking at those options, they're all allocated to the board and management, providing everyone with a strong incentive for success within the team. Zooming in on our 2 project areas. So as I said, northeastern goldfields, Yandal Greenstone Belt. We've got 2 projects, Mount McClure, a smaller asset towards the south. Our tenements are in the dark blue up on screen. And then Ironstone Well Barwidgee north of that. Yandal Greenstone Belt, it's a tier 1 jurisdiction. We know we've got some world-class deposits within the region. We've prioritised Ironstone Well for a number of reasons. I'll talk to that soon, but we've very early on saw a lot of potential for large-scale discoveries, and we've been able to make a number of discoveries in the last 18 months. We feel that we'll be able to make more discoveries in the future, and more importantly, we're beginning to see ourselves in a position to be able to progress those discoveries into resources in the near future. Out at Mount McClure, we've got some existing resources. There is potential to grow it, but I'll primarily be talking about Ironstone Wulbawidji or IWB today. Looking at the map, you can see both projects are in a very busy region. We've got Northern Star to the north and south of us, Emerald Resources out towards the southeast, Wiluna to the northwest, and Bellevue towards the southwest. So we have a lot of infrastructure. We've got a lot of processing capability within the region. And this means with our discoveries, future discoveries, and any resources that we do define, the sort of threshold for monetising those is lower and simpler for us. As I said, Ironstone Wulbawidji is our main area. I won't go into detail why we're so focused here, but it's where we're making discoveries. We're growing our position around this project area. We're trying to acquire new tenements. And we're also starting to consider the sort of scale and potential of future resources if we were to start to build them. We like the area. It's an excellent geological setting. We've got very good tenement continuity over the right geology and the right structures. It's underexplored, and I think the discoveries that we've made in the last 18 months highlight that fact quite strongly. We have some existing resources, a single resource out at Flushing Meadows. It's shallow, strike extensive, and hasn't really been tested underneath within fresh rock, and so there's opportunities to apply the learnings from our recent discoveries to that older resource and see if we can start growing that. But I think more importantly, our strategy is working out here. We're making discoveries. We can take the sort of technical insights from those discoveries. So why is mineralisation where it is? And we can start applying it to identify new conceptual targets and moving them through the pipeline, which is what we're really good at Yandal Resources. If you have a look at the plan, it's really quite good to highlight that the discoveries that we have made, so Siona down towards the south within the New England granite, Arrakis right in the middle within the Culloden target area, and our Flushing Meadows resource, they all sit quite close to each other. They're all within a roughly sort of 12-kilometre radius area. So we're making these discoveries. We're building this potential for resource growth within quite a concentrated area, and that'll be to our benefit if we can really start to consolidate a resource around these discoveries in the medium term. In terms of our strategy this year, there's sort of 4 key pillars there. In this presentation, I'm really going to be focusing on Arrakis, New England granite, and Flushing Meadows. Out at Arrakis, which is our most recent discovery, and it's where a majority of our exploration this year is going to be focused, we're still trying to understand how big that discovery was. We keep extending it towards the south. It's open, and we've got a lot of drilling just to systematically keep stepping out, and we won't stop until we've sort of delineated its full extent. At the same time, where we have done drilling on relatively broad-spaced lines, we're also seeing some high-grade mineralisation within that system. It's occurring within a relatively consistent position, and we want to understand how much high-grade is there, how continuous is it, and ultimately answer the question, do we have an underground exploration target here? And if we do, it really starts to increase the resource potential of this discovery going forward. Out at Flushing Meadows, as I said, we've got that existing resource. Hasn't been tested in fresh rock below a primarily sort of weathered oxide transitional resource. Basically, all the gold sits in the shallow weathered rock. At depth hasn't been tested. We want to understand, does it continue into fresh rock? Can we potentially double or triple that resource if we have some success? Is there some high grade? And then in addition to that, we think there's potential for some oblique or parallel positions out towards the east. So we want to do some early stage exploration out there as well. Out at New England Granite, where we made our first discovery in late 2024, we think we can make more discoveries within that large-scale intrusive host. So we're going to be very busy trying to confirm our second discovery within that host with some drilling, RC drilling, and then stepping out to the western margin of that intrusion and try and identify some new early-stage targets. Underlying all that, we'll do a little bit of our bread and butter exploration, acquire new regional data sets, geophysics, soils, broad-scale air core to help just identify new conceptual targets and make sure we've got those things moving through the pipeline. As I said, we've made an investment on site infrastructure, 21-person camp, core yards. We've got 65,000 litres of diesel storage. We're going to double that over the next month with some more storage on site, just to give us a bit more certainty in supply and help us sort of accelerate into the second half of 2026. The current program that all that infrastructure and diesel supporting is a 10,000 metre RC program, 5,000 metre diamond drilling program and 15,000 metre air core program. We're looking to complete that between March and June this year. And that's going to include RC drilling across all those prospects that I've mentioned. We've finished half of the Seleucia drilling. We're partway through the Arrakis program. We've done all the Flushing Meadows pre-collars. The diamond rig, it's done all the deep drilling out at Arrakis, and it's busy drilling below Flushing Meadows at the moment. The reason we're trying to do so much within such a short period of time is we want to hit sort of June, July this year and really understand around Arrakis, New England Granite and Flushing Meadows. If we were to start building resources there, how big would the sort of combined resource capacity be? How much would it cost to define? And then start having that discussion and strategic sort of decision around, do we start pursuing those resources? So zooming into Arrakis, which was the discovery we made in September last year, we made this discovery off the back of acquiring some regional ground gravity data sets. We did some broad-spaced air core, which defined a 2.2 kilometre regolith anomaly. We then followed it up with some fresh rock RC tests, and that confirmed a primary mineralised structure. We then tried to do as much drilling as we could before the end of last year, and that defined a 1.2 kilometre primary mineralised structure. We're seeing really good grades, particularly in the southern sort of 800 metres of that structure. It's open towards the southeast. There's a little bit of structural complexity there, but in my view, that's potentially going to enhance the mineralisation and create an opportunity, and we're drilling around that complexity at the moment. We started the program out here in early April, and we published our first results for the year Tuesday last week. That extended mineralisation at Arrakis by another 100 metres towards the southeast. And more importantly, it confirmed that, again, we're seeing, particularly in fresh rock, these sort of higher grade zones of mineralisation. When we look at all our intercepts as a whole, what we're starting to see, despite quite broad-spaced drilling, is quite good mineralisation continuity, both down dip and along strike, particularly with that first 100-metre spaced section that we sort of published last week. We're seeing two styles of mineralisation, broader mineralisation, lower grade, and then within that we're getting a subset of higher grade mineralisation that's consistently occurring on the sort of eastern margin or hanging wall of that mineralised structure. As I said, it's open towards the southeast, and our objectives for our drilling program this year are pretty simple. We just want to see how far towards the southeast it goes and understand that high grade component, how much is there, and yeah, as ultimately answer the question, is there an underground exploration target here for us? Jumping over to New England Granite, you can see Siona up on screen on the sort of right-hand side of that sort of white outline that defines the intrusive complex. That's the discovery we made in late 2024, the first time significant mineralisation was identified within that large-scale intrusive host. We're focused, and we think we can identify more positions like that, and hopefully larger in scale. The first candidate was Seleucia. We got some nice high-grade shallow air core intercepts out of the air core program there last year, and we think we'll be able to, if we can confirm those grades within fresh rock, that'll be our second new discovery within the New England Granite. And we've completed about half that program at the moment. The second half of our strategy here is doing some broad-spaced air core on that western margin to test those structural targets. Moving over to Flushing Meadows, we've been wanting to do some work here for a number of years, and we've finally been able to get access and get all the sort of clearance completed across this target area. It's a shallow resource, 268,000 ounces with about 90,000 ounces of indicated material in the southwest. As I said, predominantly oxide transitional. That just means most of the mineralisation sits within weathered rock, quite close to the surface. We don't really understand the geology particularly well because all the drilling is shallow. It strikes over 1.9 kilometres, and for me as an explorationist, I'm always concerned about what happens in fresh rock, and I view this really as a very big geochem anomaly, and we want to come underneath and test it. That test, it's 8 200-metre spaced diamond holes across 1.6 kilometres of strike. That section up on screen shows you what the sort of drilling looks like that informs that resource, and that lower dashed line shows you where the sort of fresh rock horizon is. Those diamond holes are targeting fresh rock intercepts about 100 metres below that fresh rock interface. At the same time, we want to do a broad-spaced air core program. That's the dashed blue lines up on screen. It's going to test for parallel positions to Flushing Meadows and also our large-scale Geedy Prime gravity target. So we have a very busy schedule. It's very much the sort of first half of this year. That gives us an opportunity to gather all that data in the middle of the year. Again, answer that question about what is the resource potential around these existing resources in our new discoveries. And then we can make that strategic decision, work out how much we've got, inform the market, and then and then commence the second half of this year and see what we've got. I'll leave it there, but come and see me at booth 57.
Well done. Thank you, Christopher. Thank you very much. I didn't realise you took a whole year off as well to look after your kids as a stay-at-home dad. He's a man of many talents. Look at this fellow here, Ben Orshot. You're looking very fit, sir. What have you been in the last 12 months or so? Hey, busy. These guys have actually, you have been busy though. You guys have been putting your foot to the floor. And Kalamazoo's been doing some pretty interesting things as far as really pushing along their projects. This is Ben Ackerman. And the word on the street, Benjamin, is you are undervalued compared to your peers. Absolutely. So talk to us. Make him very welcome, please.
Thank you, Chrissy. Look, it's a pleasure to be here today to present on behalf of Kalamazoo. We're rapidly advancing our flagship Ashburton Gold Project with 1.4 million ounces in resource, and it's our next development opportunity. Our 2025 scoping study has redefined the Ashburton as a credible development opportunity, with over 500,000 ounces in a high-grade concentrate as our product. So today, I'll focus on three key themes that define the Kalamazoo opportunity: a credible pathway to development, a compelling growth story, and a strong investment case. Here's our usual disclaimer. I'll leave that to you to read in your own time. So on to our corporate overview. Today, Kalamazoo's in a very strong position with around 314 million shares on issue, $53 million market cap, and $14 million in cash and investments. Importantly, this business has been built on high-quality, 100% owned projects. And our co-founder and executive chair, Luke Reiner, continues at the helm, a major shareholder representing 20% of our registry. And Luke is the driving force behind both the portfolio and the relationships that we depend on for growth. To date, Luke has been very ably supported by our fellow non-exec directors, Paul Adams and Angus Middleton, both legends of the industry, and I tip my hat to you gentlemen for assembling such a fantastic portfolio. As we transition to developer, we've strengthened the leadership team, and this week we welcome Andrew McDougall as our CEO, who brings a lot of expertise in mine development studies and execution. And I've been very fortunate to have joined the team in November last year and principally charged with our growth portfolio going forward. So the Ashburton project is located in the Pilbara. It's 100% owned, and it's close to established mining centres at Paraburdoo and Tom Price. What really stands out about the Ashburton, though, is the grade. Our global resource stands at 16.2 million tonnes at 2.8 grams per tonne, which is pretty good for an open pit. Historically, the project's been mined by SEPA in the start of 2000s, with over 350,000 ounces produced from oxide resources. And that's the key. The Ashburton's never been fully developed. Previous operators have been constrained by processing oxide. And really, we see the strategic shift for the Ashburton is getting into the sulphide development, unlocking a much larger, higher margin gold in concentrate pathway. And importantly, this is a brownfield site, which significantly de-risks our pathway to production and the timeline to get into play. So the Ashburton Gold Project now covers over 380 square kilometres and about 30 kilometres strike extent of the prospective Nanjagati and Bearing Downs fault system. The main deposit is the Mount Olympus, a beautiful sediment-controlled gold system with over 1 million ounces currently in resource. And outside of Mount Olympus, there are 3 known satellite deposits in Peak, Zeus and Wall, which account for another 370,000 ounces in resource. Now, these satellite deposits, they remain open at depth. They've previously been mined. The sulphide components of those have not been fully tested. And there's further optionality from the Xanadu oxide corridor, with already a bunch of small oxide deposits known, and gives us early optionality into the project. In 2025, Kalamazoo made the strategic decision to prepare a scoping study which shows excellent financials, and we'll run through those today. And we've hit the ground running with a full-scale PFS underway and 4 drill rigs currently operating. So the scoping study defines a simple, capital-efficient development pathway. It is based on a 1.5 million tonne per annum crush and flotation operation and provides a high-grade gold in concentrate product, initially considering 524,000 ounces in production. Importantly, this is a low-complexity flow sheet designed for optionality and offtake, and already we've had strong interest from gold traders and smelter groups who are interested in our product. At a conservative gold price of $4,500 Australian, we have a positive NPV, $423 million pre-tax, internal rate of return of 47%, and payback in under 2 years. So this is quite a compelling project. And importantly, this is all underpinned by a gold price assumption well below current spot price. So to that end, while the base case already demonstrates strong economics, the key takeaway here is leverage. The project is significantly sensitive to gold price, and there's meaningful uplift in cash flow, NPV and payback at higher gold price environment. There's also significant upside in the PFS with many levers to adding value. So as part of the pre-feasibility study, we're continuing to refine the metallurgy, mine design, process flow sheet and project economics. But the key point is the base case makes money. The rest is upside. So in parallel with the technical work, we're also advancing the financial pathway to development. Following a highly competitive process, in the last week we've appointed Bernvoir as our financial advisor on the debt side. Now, Bernvoir are specialists in the resource sector with a proven track record across more than 150 transactions and $20 billion in money raised. Importantly, we brought them in early. They'll be working with us as we progress through the PFS, and this helps us to de-risk the pathway to development and accelerate our access to capital. So this brings me to the second theme of the presentation today, and that's growth. What's critical to understand is that the scoping study considers only the gold production from the open pit, and there's much more to the story beyond that. Beneath the pit, there is significant mineralisation that is currently excluded from the scoping study outcomes. For example, underground resource has been declared previously, 175,000 at 3.8 grams per tonne, and it's also complemented by a down plunge exploration target. And our recent phase 1 drilling, and we can see some results on the screen here now, have supported both of those outcomes, with additional high-grade mineralisation being seen within the proposed pit limits and outside of the resource, and also drilling supporting that down plunge exploration target as well. So our longer term view is to see more than 1 million ounces in production profile in Mount Olympus alone. So in parallel with the pre-feasibility study, we've also launched into an expanded resource drilling program. Now, the objective of this program is to increase our geological confidence in the deposit, upgrade inferred to indicated, and then provide critical inputs into the PFS. And a significant focus for this current program is also on geotech drilling. We see the opportunity to take the pit steeper and deeper, but we need the data to support that outcome. And beyond the open pit, the program also steps naturally into the underground opportunity, with drilling designed to also test that down plunge extent. So with 4 rigs currently operating, you can expect a strong news flow from Kalamazoo at the Ashburton. Outside of Mount Olympus, there is a further 370,000 ounces that sit in resource about the satellites, and these remain open at depth. And you can see on screen behind me a 7-kilometre strike extent of the main Mount Olympus corridor, with only shallow testing identifying these previous deposits. Beyond this, we consider the broader tenure to be highly prospective for both additional discovery and resource growth in both sulphide and oxide systems. As such, we really consider that the Mount Olympus is only the starting point for the Ashburton, and we have potential to transform the Ashburton Gold Project into a long-life mining operation. Outside of the Ashburton, Kalamazoo has assembled a wonderful portfolio of exploration properties across Western Australia and Victoria, and in particular over 2,000 square kilometres in the central Victorian goldfields, which historically have been known as some of the highest grade globally. Now, these projects provide significant leverage to both high-grade gold and antimony in a Tier 1 jurisdiction. And again, common theme, all these projects are 100% owned by Kalamazoo. A key focus for us at the moment is Mountain Piper Gold Antimony Project, where recent work has identified strong geochemical response in linears away from known deposits. And this project is located close to the close proximity to the Costerfield and Sunday Creek deposits. Also in Victoria, we continue to advance our exploration across our tenure in the historic 5 million ounce Castlemaine Goldfield position and South Muckleford and Tarnagulla areas. Now, these assets provide significant upside in terms of high-grade growth, or high-grade ounces rather, and we'll be drilling those in the next quarter, so stay tuned for news on those. Now, this brings me to the third point, and that's the investment case in Kalamazoo. So this slide shows the enterprise value per ounce across a peer group of ASX-listed gold companies. In the last week, the peer group was averaging approximately $128 per ounce, while Kalamazoo is just trading at around $28 an ounce. So you can see a significant discount to comparable gold developers. Now, in our view, the discount or the disconnect is largely reflects the fact that this project has been hidden from view for some years, and we expect this valuation gap to close in the near term as we deliver on our milestones for the Ashburton and across our Kalamazoo portfolio. So, to close, there are 3 things we want you to walk away with today knowing about Kalamazoo. First, the Ashburton is a credible near-term development story. We present a robust, de-risked base case with strong cash flow, low capital intensity and a clear pathway to production. And we are actively compressing the timeframe to development with high-quality studies and early funding engagement. Secondly, this is not just a single asset story, it's a growth platform. We've got 1.4 million ounces currently in resource, with strong grade and a portfolio of opportunities to lift that resource base over time. And already we see a very clear pathway to over 1 million ounces in production profile. And third, it's the investment case. We're materially undervalued relative to our peers, and we're now entering the phase where that gap should close significantly. So quite simply, we are ready to grow, we have a clear strategy to execute, and the time for Kalamazoo is now. So that brings me to the end of the presentation. Thank you very much. If you'd like some further reading, please refer to Petra Capital's research note. You can see the QR code on the right-hand side. And please stop by booth 66 to discuss the project more. Thank you.
Benjamin, why do you have 2 QR codes?
Sorry?
Why do you have 2 QR codes?
Well, one is the presentation and the one on the right-hand side is the Petra research note.
Fantastic. Thank you for that. Thumb up the Irish in you, to be sure. You're looking great. Well done. Good presentation too. Thank you. All right. Now, this fellow coming up here today alerted me to the fact that it's Tin Can Day here at RIU today. Did you? Not Tin Can, Tin Day.
Tin
here
Day.
at RIU. So I researched that. I thought, what does he mean? It's National Tin Day. There is a National Tin Day, and that was gazetted back in 1810 to commemorate the innovation of the tin can and the recyclable nature of tin. That wasn't what you meant, though,
No,
was it?
no, it wasn't, Chrissy. But thanks anyway. Look, it was more a reference to the fact that there are 3 presenters talking about tin today, maybe even more. So
that is correct. But whatever the tin is, regardless of, they had that celebration for 1810, it is critical. It's recognised as a critical mineral going forward. It's literally, I thought, if I took it literally, you are soldering the future together, aren't you?
Yes, yes.
So
well
this
done.
is Greg Miles, everyone. He's got a great sense of humour. He's very passionate about tin, obviously, and the company that he's going to talk to us about, the first opportunity in the world of tin today of our 3 companies, is Caspen Resources. Put your hands together and make him welcome, please.
Thank you, Chrissy. Longest introduction ever. And thank you to the organisers for allowing Caspen to come along and present today. And thank you, ladies and gentlemen, for taking the time and coming to see the Caspen story. I'm going to reward you today with being the first people that I talk to about our latest drill results, which we are releasing on the ASX platform right now. So, Caspen has presented at this forum before. I first introduced the Baigu Tin project here last year. It's been a fantastic 12 months for the company. We have never been healthier. We're in a very good financial position, and we've also had the opportunity to bring some very key, strong institutional shareholders onto the register recently as well. People with an appetite for tin. I talk about Farjoy, who are a significant family office here in Sydney, but we're also delighted to have Lion Selection Group on our register as well, who I'm sure you're familiar with. They primarily have a gold focus, but we are their tin stock of choice. Hedley and his team are very astute investors, so if you don't necessarily understand what I'm talking about, Hedley would be more than happy to explain their reasons for being on our register. And of course, we've had continuing support from our existing shareholders as well, and directors and management have also put their hands in their pockets over the last 12 months. So I'm going to talk mostly about the Baigu Tin project. We've actually consolidated the portfolio just recently. Mount Squires project, which if you're familiar with, is now gone. We've divested that to Agramin, primarily our scrip and royalty deal. We still held Yarrawinda, one of our legacy assets from our float 5 years ago. And I guess we've also got what I consider to be the third asset, which is a contingent payment deed over the West Musgrave asset in Western Australia. Now, it's not something I'm going to talk a lot about today. There are a small cohort of investors out there that are very familiar with it. I've mentioned it there. I've actually put it in the appendix on the presentation which we've lodged this morning. I'd be more than happy to talk to you more about that at the booth. So tin, for those that aren't familiar, tin is primarily used in solder, which means it is intrinsically linked to electrification. It's more or less the same thematic as copper. I've put the tin price there against copper. You can see that it's tracked quite nicely and in fact outperformed copper over the last 12 months. The original critical mineral, tin, was stockpiled by the US after World War II. History doesn't repeat, but often rhymes. So the key things that I want you to remember about tin are the price, currently hovering around the $50,000 a tonne mark, roughly 3.5 times the copper price. That's important when we start talking about grades of mineralisation. Tin supply and demand. Supply comes from mostly developing countries. What I've shown on this page here can be Googled. Anybody can look this up. I would suggest that tin production is flatlining or in fact in decline. Australia, one of the few first world countries that produces tin. It's a great opportunity for this country to be a world leader in tin production, a critical metal. And the reason we should do that is because demand is only going up. Yesterday, MST Financial, they talked about the growth in the US stock market being mostly around data centres, NVIDIA and the like. The growth projections for data centres are out of control. Absolutely amazing, but it's not. And so why is that? Why is data centres a proxy for tin? Because all those little semiconductors have to be glued together by solder, of which tin is the primary component. But it's not just data centres. There's tins being used in new solar cell technology, and I can only imagine what is going to happen with EV growth during this Middle East crisis. So the demand is there and the supply is not. So Baigoo Tin Project, it's a local story right here in the backyard of New South Wales. Fantastic agricultural region, resilient people, but also with a long history of mining, primarily in tin, but also in gold, going back over 100 years. We've got a resource that we're going to talk about. We've got active drill programs, and we've also done some scoping level metallurgy, which is also very important when it comes to tin production. So this is what our resource looks like. It's a significant body of tin mineralisation, almost 20,000 tonnes of contained tin at 0.5%. Now remember, tin price about 3.5 times the value of copper. So 0.5% tin doesn't necessarily sound too much, but that would be about the equivalent of about 1.8% copper in an open pit scenario. So we shamelessly aspire to be Australia's highest grade open pit tin production mine in Australia, or on the ASX. Most of that resource is concentrated around previous drilling, the legacy drilling that we inherited when we picked up the project. We've done our own work as well, but most of it is still focused on that previous drilling, or limited by that previous drilling, which in turn was limited by where historical workings were occurred. The old timers back in the day mined 6% tin from very narrow grades, left what we consider to be high grade now behind. And that's where we see the opportunity. The mineralisation's hosted in a granite, which is modelled by that pink surface on the figure there. Lots of gaps. We're currently undertaking a drill program to expand this resource. We think there's great potential to grow it beyond that 20,000 tonnes. I think there's an opportunity here to probably grow it twice the size. And so, which leads us to today's announcement, the latest drill results out this morning. A fantastic result there in hole 33. A nice wide intercept, high grade, down about 75 metres down plunge from the existing resource envelope. So this is what we're doing at the moment. We're stepping out beyond the resource itself and trying to find extensions for mineralisation and having success with that. So a fantastic result for the team. Really pleased to see that coming, our ideas coming to fruition. The figure on the left, the background image there is an IP survey. That's been the other sort of big step forward for the company recently, is the fact that we think that we can now map these systems using IP. Now, IP is induced polarisation, for those that aren't familiar. It's not going to map mineralisation per se or directly, but we think it is mapping structure. And so think of these sort of systems as a gold system. What we're really looking for is structures intersecting or hitting lithology contrasts, in this case granite against the hanging wall volcanics. So this is a really powerful tool. IP technology has come a long way in recent decades. Certainly an advantage that we have that our peers many decades ago did not. So we think that's going to be very valuable for exploration going forward. And once you've got a deposit, it's really important to be able to extract the metal. We have done some early level, scoping level metallurgy. Now, the important things to recognise here is that we've got two options. We can do a gravity-only concentrate, which is relatively simple. It's a simple flow sheet. Means it's low capex, low opex. Basically just uses water and gravity to separate the high-density tin mineral cassiterite from the gangue. But if you're in a high tin price environment that we currently find ourselves in, where you want to maximise recovery, maximise NPV, you can also add a flotation circuit onto the back end of that and get over 80% recovery. That's a fantastic number, compares very well to any other operating mine around the world today. So very encouraged by that. And I think you'll also hear more about ore sorting today as well. Ore sorting is just a proven technology. It works very well for for tin systems because of the density contrast. We know that we've done initial sort of CITA work on this. We know that it will work. To what extent we apply ore sorting is for a later day, but we think that this will be part of our part of the picture as well. So Kelpie is great. Kelpie deposit is great. We think there's a standalone operation there. But what we really want to do is restore the Ardlethan field back to its former glory. Back in the day, this was Australia's largest tin field on mainland Australia. And there are a number of opportunities within our project area. We surround the Ardlethan tin mine, which closed in 1986 when the tin price collapsed. Almost no exploration surrounding that mine for almost 40 years. It's hard to believe. And as you can see in that photo, there's a drill rig in that picture. Our tenement boundary goes pretty much right up to the doorstep of that mine. And we've done some reconnaissance type drilling around that on the edge of the pit system there. And I guess what we're looking for is to find additional breccia pipes that haven't necessarily come to surface. We think the easy things were found back in the 60s, and that's what has been mined. We've got a slightly different model where those breccia pipes haven't necessarily come through to the surface. They've got a little bit of stratigraphic cover over the top. But we do see hints of tin mineralisation in this area that we call Ardlethan East, in rocks that shouldn't have any tin mineralisation at all. These sediments should be completely bland, but we don't. We see tin and other accessory minerals or elements in our soil geochemistry. We've done magnetics. We can see some interesting structural intersections through this area. So this is probably our second exploration front, of which there will be many more to come. We've got a vast pipeline of projects across our 1,500 square kilometres of tenure. But this is really where it gets interesting, I think, for you, ladies and gentlemen, and that's really the value proposition. There are only a handful of tin developers on the ASX, and in fact, I've listed one here that's even on the LSC. There are other smaller players in the exploration phase, but this is it. If you want to participate in tin, you have to choose one of these companies, and they're all got great projects. I think our project is as good as, if not better. I think it's got its own advantages, but we are obviously at a slightly earlier stage on the development curve, which presents a fantastic value proposition for you. You're going to hear from some of these other companies today and find out why they're so good. We aspire to be at that level in a very short period of time. We've got a market cap today of about $30 million. Some of our peers are trading well over 100, 150. So that's the value proposition for you, ladies and gentlemen. So to wrap up, it's a very easy and simple story. Baigu is a significant tin resource. We're aspiring to be the highest grade open pit tin mine in Australia. We've got very good metallurgical recovery. We know that once we've found it and mined it, we can extract it and get very good return on our investment there. We've got a drill program underway. We've done 5,000 metres so far. We've got another 3,000 metres to come. It's going to take us through to June. And then we're looking to bring all that new data into a resource update, hopefully in Q3 of this year. And that will be, I think, a great catalyst for the company when we grow that resource and can demonstrate a standalone production centre. And obviously, I think I've made the case for tin as a metal that you need to be part of. So, Chrissy, I'll leave it there. Thank you very much, ladies and gentlemen. I hope you enjoyed the story.
Well done, Mr. Miles. Thank you very much. All right, we're 6 in now. We've got 4 to go in this session. We're doing really, really well. My apologies that our blinds are down, but there's a technical issue with these brand new blinds they've got, so I can't put them up and down as we normally would, but we'll see what we can do throughout the day because it's lovely to have that sunlight. How are you, Pete? Good? Madigan, you're okay? It's good to see so many more faces in here. Now, number 7 today, sir. Welcome to the stage, David. So we're going to talk about you've got 2 projects, haven't you? One on one side of the content, one on the other. Both fantastic. One in particular has had a buy-in from Big Brother. And Big Brother would only do so if Big Brother thought this was a worthwhile investment. So let's see if we think the same. Would you please welcome David? Let's talk Magmatics Resources.
Thanks, Chrissy. Morning, everyone. Great to be back at RIU, and thanks always to the organisers. So, as per the slide, 4 advanced gold projects in Australia's 2 largest gold regions. When I was here last year, I was only talking about New South Wales, and we'll talk more about our West Australian new acquisition. Standard disclaimer. So, visual description of our West Coast, heart of the Eastern Goldfields in Western Australia. The Weibo Gold Project, we bought that in 2 stages between June and September 2025. And we've already done 2 AC and RC drill programs. So we've been very quick to advance that project. Importantly, it sits between 5 major gold mines, and we'll talk more about that on another slide. East Coast, these are our legacy projects that we bought from Goldfields, the Lachlan Fold Belt, our Mile Copper Gold Tier 1 potential project that we have a joint venture with FMG, our Wellington North Gold Copper Porphyry project, another Tier 1 potential project, and our Parkes Gold Copper project just down south of the Tomerley Gold Mine. Regionally, Alkane, we're somewhat tied to the hip with Alkane. They have their Boda Kaiser development project, 14.7 million ounces of gold equivalent. The Tomerley Gold Mine, 2.3 million ounces of gold. The giant Cowal 13 million ounce gold mine owned by Evolution. And Evolution also recently bought the North Parkes copper gold porphyry mine, 4.4 million tonnes of copper, 5.4 million ounces of gold, and the monster in the region and in Australia, the Cadia gold mine, 51 million ounces of gold, 10 million tonnes of copper. So let's look at Weibo. World-class region. We acquired this in the late half of last year, 136 kilometres of tenements. You can see we have 50 kilometres of strike running directly north from Northern Star's Thunderbox gold mine. We've added additional 14 kilometres of new tenements to our package. We are within 30 kilometres of those 5 gold mines we spoke of, and those 5 gold mines have either produced 12 million ounces of gold or maintain 12 million ounces of resource of gold. And the important thing on the slide, on the picture there, is we're on the Yandal Greenstone Belt, and in Western Australia, most of the gold that you find, you need to be on the greenstone belts. So advanced targets, we're continuing to advance our targets, our 3 advanced targets. One's called Ockerbury. We've already done 2 phases of drilling there and have got significant intercepts. Scone Stone, 800 metre long trend, similar. Phase 3 drilling is commencing next week. Otto is our 3rd advanced project. We haven't drilled there yet, but we will be soon. And we're developing up some other early stage projects, Skulls Find, Wheel of Fortune and West Gold. So looking at Ockerbury, historical drill results, phase 1 AC drilling, RC drilling, you can see some really significant gold intercepts there. Good strong intercepts, some with high grade, and significantly near surface, 8 metres to 100 metres on all those intercepts you see. So every time we've drilled, we've had great results. And we're about to drill and advance this project this month. You can see on the right-hand side, it's a 5-kilometre trend. The drilling that we've done so far has focused on what we call Ockerby 3, I'm not sure the image comes up, but you can see Ockerby 3 on the right-hand image, and we're also, in this current stage of drilling, going to be drilling Ockerby 1, 2 and 4. Scone Stone, similar story, historical phase 1, phase 2 drill results, all provided great results, some high grade, and we're drilling again in this current drill program. So this current drill program, 10 holes, 2,000 metres of RC, we're going to do 5,000 metres of air core. A lot of that's about developing additional targets inside the portfolio. Scone Stone, already we've got a 250 kilometre supergene gold zone, and we're going to be drilling underneath that. Similarly at Ockerby 3, 250 metre supergene gold zone, drilling and looking for gold shoots under that, looking for the source, and we'll apply our learnings there at Ockerby 1, 2 and 4. Skulls Find, West Gold, Wheel of Fortune, less advanced targets, air core drilling, really actually doing a reconnaissance, advancing those up for more advanced exploration as we go forward. So the East Lachlan, New South Wales, we bought these projects from Goldfields. As I mentioned, Goldfields maintain a 4.2% interest in the company. The region, 85 million ounces of gold, 14 million tonnes of copper, true tier 1 region in the world. It's the home to Australia's 2 largest gold, copper gold porphyry mines, that being Northparkes and Cadia. Our projects were bought for Goldfields. Recently we appointed at the bottom Craig Feebury. Craig Feebury was Vice President of Goldfields, Australasia, in charge of all their brownfield, greenfield, in-mine exploration, and he sold the projects to Magmatic. And the last few years he's worked for Oceana Gold and be responsible for all of their infield, or their greenfield, brownfield and in-mine mining. So he brings great technical expertise, not only in terms of our New South Wales projects, but also obviously Goldfields owns lots of gold mines in Western Australia, which he was in charge of. So he brings a lot of knowledge and expertise technically to our project and to our company. So the Mole project, we advanced this project. This is a true tier 1 project. It's copper gold porphyry, and in our region, porphyries and the porphyry mines, Cadia and Northparkes, the deposits occur in clusters. And so we're looking for multiple deposits at this mile. Our initial maiden resource estimate we announced, and upon announcing that we then negotiated a joint venture with FMG. So 110 million tonnes of copper at 0.33 copper equivalent. What does that mean? Well, it's 290,000 tonnes of copper, 237,000 ounces of gold, and 2.8 million ounces of silver. So that's just getting going. That has great capacity to grow substantially. The Corvette Kingswood, that's the resource that we've announced. You can see some of the intercepts there. Long intercepts, grades of 0.66, 0.55, 0.55%. That's the grade that the Northparkes mine mines. So we're in the right spot. We've got a great opportunity there to develop a tier 1 copper gold project in Australia. FMG at the same time of coming in as a joint venture partner did a placement and a 19.9% cornerstone investment in our company. So more detail, recently in the last 6 months we had a financial 2026 $3.5 million exploration budget in the joint venture, all paid for by FMG. Importantly, we're a 10% operator. We're an operator, so we get paid 10% as operator, which covers some of our costs, which is important for juniors who need to keep eyes on costs. But recently that 3.5 million got expanded to 3.9 million. So obviously they like what we're doing. In that program that's just been nearly completed, 16 diamond holes for 6,000 metres. We did some air core program, we did an IP program, and we did another air core program in March. So the first 3 holes assays came out recently, and the first air core holes assays came out. We had an announcement yesterday. on Monday, excuse me. The best diamond hole result was at Interceptor, and the important thing on the map, if you can see Interceptor in the middle of that screen, that's 1 kilometre below our maiden resource estimate. So we really think that that's opened up the opportunity to significantly grow our maiden resource. Assays for the other 13 diamond holes and March air core will be coming along in the next quarter. The prize, we've always looked at Mile as a North Parkes lookalike. And what we mean by that, if you look on the left-hand side of the screen, that's geochemical. So yellow's 500 ppm per copper, green's 1,000 ppm per copper. And when you're looking at the North Parkes mine, red shows some of those 22 deposits that make up North Parkes, and they're the deposits that have been mined so far. Looking on the same scale to the right is Mile, ppm, 500 ppm, green. The two reds are our two is the maiden resource, which we call two deposits, Corvette and Kingswood. So we're looking for more deposits, but certainly looking at significantly growing our maiden resource. And the support of that lookalike is the right-hand image. On the left-hand side of it is gravity. And if you look on that gravity, there's two big yellow circles, the gravity lows. One's the giant Cal mine, the other one is North Parkes, and the other one is our Mile. And that's supported by the right-hand image, which is showing gravity high and similar features over those mines and Mile. Wellington North, we think, is just as much opportunity of being a Tier 1 project. It borders and surrounds the giant Boda Kaiser 14.7 million ounce gold development project of Alkane that was discovered in 2019, and since then they've actually done a scoping study at the end of last year. The yellow outlines are our tenements, so you can see that we totally border to the south, southwest, and to the northeast are our tenements. You can see that on the aeromagnetics, basically it curves, the deposit curves around from Kaiser through to Boda, down to what they call Boda 1, 2, 3, and down into our tenements. The aeromag shows lots of other potential targets that we've identified both ourselves and Goldfields. And if you look over just on the left-hand side, Rose Hill in that box, Rose Hill is our most advanced target, 71 metres at 0.43 copper and 0.3 gold, a little bit of moly, and importantly, that's from surface. So that grade is higher than the Kaiser Boda resource. We think we need a joint venture partner to develop this. This is true Tier 1 potential, and I think in the next 6 months we'll be moving towards bringing in another partner like we did bring in FMG. But this project is very significant, it sits in the right spot, and we're very excited about it. Just drilling in, you can see onto the right-hand side, the Kaiser Boda deposit there. That arrow sort of shows as the structure has been pushed across through a fault. It goes down through our Boda Southwest. At our Boda Southwest, we've done some soils, which included a 4.7 gram per tonne gold soil anomaly. And right on our border, Alkane recently announced a rock chip of 1.2% copper and 12 grams a tonne silver. So we're in the right spot. The arrow finishes at Badangra. That's an historical gold mine on our tenement, 230,000 ounces of gold at 26 grams per tonne, mined 100 years ago. So lots of upside in Wellington North, but again, we think we can best serve this tenement by bringing in a partner. Our last project is Parkes. It sits in the Parkes fault. If you can look at the image, there's two dotted white lines. That's the outline east and west of the thrust. You've got to be inside the thrust. So we're basically 30 kilometres south of the Tomingley mine of Alkane. They've done a great job of expanding that mine recently. We've got lots of hits, McGregor's, Stockman's, that have similar early stage intercepts that represent type of intercepts that Tomerley had in their early stages of development. We've added a new tenement to the north of our projects. That comes down to 15 kilometres south of their new discoveries. Most importantly, importantly at the bottom, there's a little sign there that says Black Ridge, and the bottom bullet point means New South Wales Government has recognised the potential here. We've got a drill grant for copper, and that drill grant is for an area only 10 kilometres away from the giant North Parks mine. So lots there, and hopefully we can bring some more shareholders onto our register. Look forward to talking to you more. Thank you.
Thank you, David. All right, now we have heard our next company mentioned earlier today. I've looked through their recent news flow, up 65% since this time last year. Stellar job, sir. Well done. And if you guys are able to achieve what you're focusing on, you will have a little name that will be known all the way around the world. So let's hear what Stella is up to. We're going down to Tasmania. Please make him welcome.
Right. Thanks very much. Thanks very much. It's great to be back at RIU and to give you an update on what we've achieved over the last 12 months since we were here. As you said, yes, Stella is a tin potential developer in Tasmania. We've already heard from Caspin today, so it's been good to give you some updates on what's happening in tin, and I'll really focus today on what we're looking to do in the next 6 to 12 months. We're aiming to be a global top 10 producer out of Tasmania. We're in one of the great tin belts of the world, where we've got the Renison tin mine in close proximity to us. Just a quick shot of where the mine will be. This hill you can see here is all regrowth, with the town of Zeehan just sitting in behind us there on the hill there. And where those vehicles are is potentially where our portal will be for our underground. And all of this area was cleared back in these sort of 1890s, 1900s, when they were taking lead, zinc, silver out of the top of the tin deposits, and the tin was left behind. They never processed the tin, and that's what we're focusing on in our work down in this region. And importantly, just on the left-hand side there, you can see about 15 kilometres up the road from our project is the Bluestone Renison tin mine, which is a 50% joint venture with Metals X. And we're pleased to announce a couple of days ago that Metals X have taken a strategic placement into Stella. We've just raised $22 million to take our coffer over $30 million, and they've taken a 15%. They've already had some buying on market, which we've now discovered, and they now hold about 16.4% of the company. So a very strong endorsement of what we're doing on the project in this region. A nice blue day here. It's not always like this down in Western Tasmania. If you've been down here, it's often cold and wet, but a great place to be working. The disclaimer, cautionary statement. So Heemskirk is the name of the project. It's the highest grade underdeveloped project in Australia and third globally. And what we've been doing over the last 12 months is working towards the delivery of a PFS. And we should have that PFS out in July, August this year. A lot of work has been resolved around drilling our resources. We've increased our resources at one of the deposits at Heemskirk called Queen Hill, and we're poised to have another resource upgrade for Severn, which is our other deposit, and we'll have that out this quarter. And I'll show you some of the drilling that we've been developing at Severn. Metallurgy is very, very good here. We've had a breakthrough on the metallurgy that we put out about a week ago, where we've increased our recoveries on our Queen Hill deposit by over 10%, and that work has been looked after by our chief metallurgist, who was the ex-chief metallurgist at Renison in the late 90s. We've tweaked the flow sheet that the Renison use, and we've had a real breakthrough on the metallurgy in the last couple of weeks, which will all flow into our PFS. As I said, we've got a good cash balance, over $33 million. I remember trying to raise $1 million for Stella about 3 years ago when we stepped in as a new board. It was a difficult raising. We raised, I think, $1 million, $1.5 million, and 3 years later, we're market cap's up above 100 million. We've got now funding to finish the PFS and do our DFS, and then potentially get into permitting, which we hope could be as little as 18 months away. The PFS is really focusing on, when we look at metrics, on delivering a 3,000 to 3,500 tonne per annum producer. And to put that in perspective, the Renison tin mine does 10,000 tonnes, of which Metals X has 5,000 tonnes production from there. So we're looking at, if a like for like, we'll be looking at about 3,500 tonnes per annum. Metals X is doing 5,000 tonnes, and their market cap's about 1.4 billion. So you can see there's plenty of room for growth for us in our story, and we're looking forward to delivering that PFS in July. Just quickly on the corporate snapshot, I've mentioned the cash position and market cap. We've got some terrific shareholders on there, some institutions that have come in over the journey in the last couple of years. This is a board that came in 2.5, 3 years ago, new management team. We've all worked together previously and had successful discoveries in Africa and elsewhere, mainly in gold, and we're very, very excited about delivering the Stellar story through to the next phase and getting the pre-feasibility work and the DFS through, and have the cash to be able to do that now. Just quickly on tin, the Caspian story mentioned that the supply and demand. It really comes down to Stellar having a project that is in a Tier 1 jurisdiction, and we have an unencumbered offtake. We're already getting some very good interest from off-takers, China, Malaysia, and other parts of the world. And really the supply has been disrupted through Indonesia, Myanmar and Congo, where we've had problems over the last 12 to 24 months, and those problems continue, and there has really been a supply shortage. The actual production in 2025 dropped from 2024. The International Tin Association are predicting demand to grow to about 400,000 tonnes by 2028 and about 500,000 tonnes by 2035. So we see the outlook for tin as being very solid fundamentally. The tin price is up around $50,000 US at the moment, and our project at Heemskirk, we're looking at an all-in cost of around 18 to 20,000 tonnes US as a production scenario. These are the top 10 producers globally. You can see where we're trying to position Heemskirk there, around 9 on that slide there, which will be our 3,500 tonnes. Most of the projects around the world, as I said, are from some unreliable jurisdictions, hence the supply forecasts are looking weak at times. And if you wanted to buy a producing tin producer, you'd have to buy either Alpha Min on the TSX or Metals X on the ASX. There is very, very few around, and we're very excited about getting Heemskirk into production and moving the project forward. So if we zero in on our location in Western Tasmania, a long history of mining here dating back to 1890s, 1900s, world-class metal endowment in this region with the likes of Rosebery and the Renison mine close by. Renison actually started with a reserve of 4 million tonnes back in 1968, and it's still going 50 years later. So these are big systems. We have a very similar geology where we are at Heemskirk. We're drilling in the top 600 metres, which is where our resource is at the moment. Renison's mining down at 1.3 kilometres, so there's plenty of room for growth for us in the later stage once we've delivered our PFS, which we're looking at an initial 8 to 10 year mine life on. So green power here, it's all hydro. Tasmania produces all their power from either hydro or wind. We've got some great community support, both from the Mines Department, the West Coast Council, And having Metals X come in now as a strategic partner will help us with our permitting and help us with moving the project forward. The resource itself, as I said, it's the highest grade underdeveloped project in Australia, and the Heemskirk project is just under 1% tin. So if we look at a copper equivalent, we're talking 3 to 3.5% copper, or sort of 4 to 4.5 grams gold, to give you an idea of value here. The project's open at depth. The metallurgy is very good. 98% of the tin is in cassiterite, which is amenable to conventional processing. And we're looking at, as I said, a resource upgrade on the Heemskirk project this quarter from Severn. We've been doing a lot of drilling over the last 12 months, and we're looking forward to getting that resource update out to the market. Development options, we have several. So you can see the project there, Heemskirk there. It's on a granted mining licence. We recently picked up an area just to the south of it, us there, where you can see we've applied for a mining licence. We've identified an area for a TSF there, and we're also under a previous MOU still talking to the Avebury guys down the road, which is about 10 kilometres to the southwest of us. The Avebury nickel mine, which is in care and maintenance. There's a 900,000 tonne per annum plant sitting there idle, doing nothing, and we've had a very good look at that and doing DD on that to retrofit that plant for tin, and that again will be ongoing in our PFS work. As a new board, we came in several years ago. We re-looked at the scoping study that they'd done back in 2019. This is a base case scenario on a much smaller production profile of about 1,900 tonnes of tin per annum. We're aiming to ramp that up to 3,500 tonnes, but you can see here already the project economics look very, very solid. An all-in sustaining cost there of just over $18,000 US, and tin is currently trading at around 50,000 tonnes. So this project will make very, very good money in the current tin environment, but it'll also sustain a lower tin environment as well, and moving forward. And you can see I think the spot price, sorry, the base case we did here was at $28,000 a tonne, and obviously the tin price is almost double that now. Development option, it'll be an underground mine, long hole stoping. We'll mine the Queen Hill deposit on the left there first, before driving across to Severn on the right hand side. The red areas you can see here in the resource is all the indicated material. The blue areas is the inferred, and we're converting most of that inferred to indicated with the drilling that we're doing at the moment. And we'll be ramping up the production scenario from that scoping study, which was at 350,000 tonnes up to 750,000 tonnes, and moving on from there. The resource itself sits in two ore bodies, Queen Hill and Severn. As I said, Queen Hill, we've already upgraded the resource. Severn resource will be coming shortly. What does it look like? Dipping shallowly from the surface, steeply from the surface, and you can see the access at the top where our portal will be. Some of the drilling intersections we've had to date, 23 metres at over 2% tin, so we're talking 20 metres at over sort of 6% copper equivalent, some fantastic grades, and as I said, the deposit is open. This is the Queen Hill deposit. You can just see the Severn deposit sitting there on the right hand side on that section popping out, and there's the Severn deposit on the right hand side here again. And you can see some of the drilling that's been going in, 20 metres at over 2% tin, 64 metre intersections of tin here with high grade cores. So it's a big system. There's been a lot of fluid flow here, and that long section you're looking at here goes down about 600 metres. We know the granite's sitting about 1.3 kilometres down, so plenty of room for growth. We won't go and drill that out at this stage. It will be far better to get into development and then start drilling out the deeper stuff later on. So this is all the drilling we've been doing. Some great intersections here. This is all flowing into the resource upgrade, which will be coming shortly. And what really excites us is not only have we intersected a new lode on that section, there's 3 metres there at 3% tin below the existing ore body, which we've announced in our last drill hole, which hadn't been found before, so there's scope for develop increases there. But also you can see there's a hole right down the bottom right on that long section, which I think was drilled about 7 or 8 years ago, and there's up to 2% tin in there, and that's 220 metres below any of the previous drilling that's been completed on the project. So lots of upside for growth once we get into development. Caspin touched on the ore sorting, which we've also been doing. It works fantastically with tin. None of the ore sorting was previously used in that scoping study that I showed you, but it's a matter of upgrading your grade, getting rid of some of your waste, putting less tonnes through your process plant, and basically reducing your OPEX because you're putting less material through your plant. I'm running out a bit of time here, so just to finish off, we do have another project up near Renison called the East Renison project that we'll be drilling later on in this year. Fantastic numbers here, gold, silver, antimony, and there's lots to look forward to in the next couple of months. Resource upgrade, PFS coming out, and we have the capital and the cash to complete the work. And thanks very much for listening to us, and come and see us at the booth if you have any more questions. Thank you.
It's an impressive story. Thank you very much, Simon. All right. Oh, Serge, I've been looking for you, Serge. Well done. Come around this way, sir. This is Serge, everyone. Please make him welcome. All right. Good idea. Make him welcome. Give him a round of applause. Thank you. Sorry, team. I was looking over that way. Now, we're going to talk silver now, and this next project is actually Australia's highest grade silver project, located over Karratha Way, my way. And you've got a grade that's driving some, I will say, I'll use the technical speak, multiple value catalysts, but we like the sound of that as investors, Serge. Please make him welcome again, everyone.
Hello, everybody. Very short presentation, and can you hear me okay? Yep, great. All right. Elizabeth Hill project, arguably Australia's highest silver grade project that's not in production. The aim is to get us into production as quickly as possible. Those of you who remember, I think it's a 90s movie, Beverly Hills Chihuahua. We are mighty, hear us roar. Okay. The project is small. Don't judge us on the tonnes, it's on the contained ounce potential. So let's go with that. Normal disclaimers. Nothing I say you can believe or trust. But invest. Okay. The Elizabeth Hills project's been around for a while. It was discovered as part of oil and gas exploration in the Pilbara in the 80s and developed in the 90s, mined from 1999 through to 2000. Only 2 years. Mining stopped as a result of $5 an ounce silver prices and a dispute between the two owners, JV partners of the company. When that was resolved, project was sold off. Mining had stopped and it wasn't advanced any further. We've been doing work on this as West Coast Silver since 2025, and the results from our drilling in 2025 clearly show that the deposit was growing. So why should you be interested in us? One, it's a strategic location. Being near Karratha, we actually have access to all of Rio Tinto's I should say, it's a Rio Tinto town, and so it supports mining. We have power infrastructure, fly-in, fly-out workforce support facilities. We have a granted mining lease. That lease is still current. It was an underground mine. Underground, but it was only mining between 60 metres and 100 metres of surface. So a very shallow open pit, a very shallow underground mine. There are reasons why it was an underground mine versus an open pit, and that's to our advantage. We have a proven production pedigree. They mined 1.2 million ounces in 2 years at a grade of over 2,000 gram per tonne, which is phenomenal. And that came out from only 16,000 tonne of material from a depth of 60 to 100 metres. Okay. We have processing optionality. Originally, they just simply used gravity Whiffley tables under a corrugated iron roof to process the material, and they were literally hand sorting the material, which is why you're seeing such incredible grades being reported. Tails processing plants being recycled 2 times, and we're looking at recycling at a third. That's how much silver was actually being jettisoned out of the gravity circuit. Gravity's great, but it's not an efficient method of processing. Some of our investment highlights. We've just put out a baseline mineral resource estimate. We didn't want to put this mineral resource estimate out. I was hoping to put an estimate out at the end of the year because we've got drilling going at the moment and growing on what we've got at the moment. But because it ended up being material, we did the right thing and we put it out. And it was a healthy start number that we're growing from now. 2.8 million ounces at 617 gram per tonne silver, okay? And here's the kicker, it's only from about 140,000 tonne of material mined, okay? So the optimised open pit is essentially 200 metres by 300 metres and goes down to about 130 metres. It takes everything, including the historic mining, the pillars, the production faces, everything that was left behind goes in. The grade, that's without saying. Mining lease, it's definitely a benefit. It's not the panacea. A mining lease doesn't absolve us of other startup requirements and permits and studies, but it's a long way towards it. The ore deposit is open in all direction. It's 86% inferred at the moment. That means that we have to convert 86% to an indicated level of confidence to get a reserve. But with these types of coarse silver deposits, as with gold, as a rule of thumb, as you drill tighter, rather than the grade going down and the metal content going down as a result of the grade going down, it generally goes up because the silver is concentrated in pockets or jewellery boxes of mineralisation that you can't see on a wide drill spacing. Gympie Gold's an example of that. Drill tighter, you find these little pockets, and I'll show you. So we've got 6,000 plus metres on the go at the moment, expanding the ore deposit beyond the actual optimised pit shell and deeper. Our strategy moving forwards, and we've got about $5.4 million in the bank at the moment. That's enough to fund our drilling at the moment, is to get to a scoping study and start the scoping study at the end of the year. A second resource update with our drilling results in Q4 leading into the scoping study. So we're going to do a development and growth formula moving forward. We're going to take advantage of looking at West Australia's small mining operation facility, which helps us streamline getting into production and growing, so that essentially concept is open pit, but while we're doing the open pit, we're preparing the next open pit or the next cutback or the underground extension. So on the right hand side of the current diagram, you'll see the very large open pit. We didn't have enough geotechnical data for the consultants to do a 55-60 degree batter angle on the pit in competent granites and ultramafics, so they went with a conservative 45 degree into ramp slope. So we can tighten on that. But we can see in the green, that's the historic mining workings. There were 4 levels that were extracted, projected to surface, and around that is the remaining mineralisation projected to surface. That's what contains the 2.8 million ounces. The green dots are our drilling in 2026 that's underway at the moment. First results are due in 2 weeks, and we should have a steady stream of results coming out over 3 months. You can see the trend of mineralisation going north, but there's also a trend going beneath the actual ore body. The red dot, yellow dots in there are surface air core drilling, which show that mineralisation is trending outside of the pit, and I'm quite pleased with outcomes coming through at the moment. I can't discuss them any further. The resource increase at Elizabeth Hill, last time they did it, was in 2011. Going public. There have been a number of internal studies, but we use the 2011 for comparison. We achieved 104% growth in tonnes, 390% growth in grade, and 898% growth in silver. It's still modest by comparison with other companies on tonnes, so we don't tend to look at tonnes. We'll show you some slides why. As I said, the silver is extremely high grade, and there's a specimen that weighs over 3,000, that's over 3,000 ounces in the Perth Mint, called the Carafa Queen. It weighs 145 kilogram. You're welcome to see it. It's quite a show if you're at the Perth Mint. Free plug for them. Go see the gold pouring show. It's quite good. But we get these things. The processing optionality here, we've got a metallurgical study on the way. Conventional gravity at the front end, but we know that's not fully efficient. A Merrill-Crowe process likely after that, and a finishing flotation circuit. The project doesn't just have native silver, it also has silver sulfides, which contribute to the lower grade portion of the mineralisation. Acanthite, galena hosted mineralisation, and small amounts of sulfur salts. There aren't the penalty elements you see in other projects, and we're not a byproduct mine. Many of the silver projects that you see being advanced are being called silver projects, but they're actually polymetallic mines, which have simply rebadged themselves as silver projects. They still have the lead, the zinc, and other metals, which are the real cash makers in their profile. It's sexy to be silver at the moment. So the metallurgical study will tell us how we can achieve that 90% plus recovery on this project and gain real value from the low-grade material. In pit, when you're doing an open pit, we can take this down to 20 gram per tonne silver. We actually need to take it down, because any of you familiar with processing know that processing plants don't like high grade. They don't like spikes, they don't like lows. You need the low grade to blend it to a product that is consistent. This slide I've thrown in because, hell, I'm not going to win on tonnes, but I can win on grade. So you can see our competitors down the bottom, and they have some pretty big ounces down there, okay, and tonnages, but we are really up there on the grade. We stand alone. So a 2-3 year mine life open pit delivers 2.8 million ounces. The free cash flow. There's Breakaway Resources producing a investment report in the next couple of days. That'll become available to everybody. There's some really neat free cash flow numbers that come out of that, which put a smile on everybody's faces. So small is mighty. We are the chihuahua that roars. Cut-off grade is important. We've modelled at 20 gram per tonne to get every bit of silver out, so we have blending capacity and being realistic within an open pit. But if we were to fractionally increase the cut-off grade to 60 gram per tonne, we still have 2.7 million ounces. That shows you the sensitivity. But that 2.7 million ounces is at over 1,000 gram per tonne silver. Okay? That's incredible. It's there. In long section, This is what the ore body looks like. I didn't have time to splice in the latest resource blocks. This is the gram metre plot with the colours being hotter, meaning higher grade. You can see the mined area being the brownish material right in the centre called stope and void, with grade decreasing away from the void. The optimised pit shell is around the actual mineralisation, as you can see in the diagram, as the red line. The various dots that you can see around the actual mineralisation is the drilling that's happening right at the moment to extend mineralisation. You can see that mineralisation on the left-hand side of the diagram is trending to the north, and we also have production drilling from underground before they stopped, showing that there was another lens forming up at depth. So we're testing that at the moment. So the opportunity is visible, it's tangible, and we're now in the process of substantiating it. The model is quite simple. We're not there on the scale of tonnes with our analogues overseas. We have analogues in Morocco, the Bouazer system, which is a series of vein-style deposits. These deposits are in the tens of millions of ounces of silver per clusters. It's like a VMS. Once you find one, you find the next vein system, or the next, as we call it, West Australian style, pearl on a string. Okay, so I think Paspaley Pearls will probably love us for that. We have plenty of those. Cobalt Ontario also has similar styles of mineralisation, and they're in the hundreds of millions of ounces of silver. What links all of them is the presence of low levels of cobalt. In Canada, that cobalt is economically significant. We do also have small amounts of cobalt, but I'm not telling anybody here that it's commercial. It's just a signature, it's a footprint. It's Elizabeth Hill, we believe, is part of a much larger system. And on the right-hand side is the product of geophysics, surface geochem, air core, showing us in those red dots that there are nexus sites where all the data comes together saying, drill here, okay, X marks the spot. So exploration has a bright future moving ahead, testing these targets that are mineralised, and hopefully we'll be in a multi-pit situation over the next few years. Pretty much the same thing, but this slide's really talking about 180 square kilometre package where we have the rights to silver exploration. So she's going to kick me off again. Oh, she did this only, well, how many weeks ago? Oh, all right, not the middle finger, all right. So the story here is its growth. Here's the development timeline. You can see we've done the maiden resource. The drilling is clustering above that in the yellows and oranges and blues, with grey being the assay delivery times. ALS does very, very, very good coffee here, but grill them on their turnaround times, okay?
Serge, go now.
Updated MRE in Q4.
Go and meet him. Serge, put your hands together for Serge, everyone.
Thank you very, very much.
The problem is he's such a nice guy. Stop that. Okay. All right. Now, this next one, the last one, session 1, day 2, I've almost forgotten where we were. This is one you want to keep your eye on. I had a chat with John Pranas, who's their executive chairman, coming up on the stage now. They've had, obviously, some strong results. They've a really nice growing resource, but they've had a real step towards their commercialisation with their rare earths project in Brazil, and I think it's kind of starting to shift from what have they got to what could this become. So please listen intently and make the most of this opportunity and make him welcome. John.
Thank you very much. Thank you, Chrissy. Thank you everyone for attending. Yeah, we've already got a world-class resource, so we know we've got something that can be very significant. How are we going to monetize it? We just had breaking news today. You may have not seen the announcement. We've appointed Worley as our feasibility technical advisor. So they'll help us go through the feasibility studies to bring this into development. So we're moving towards that now. Let me tell you more details. A quick company overview. It's been a big transformational year, 2025 to 2026. We did a $20 million capital raise back in February 2025 to buy this asset. We're only about a $25 million market cap. In October, November, we were much higher. Did a $72.5 million capital raise with institutions. We have become now institutional investment grade. The icing on the cake from that raise was Hancock Prospecting coming on board as our largest shareholder. They've got a great track record in the rare earth space, biggest shareholder in MP Materials over in the US, big shareholder in Lynas, big shareholder in Arafura, some of the most successful rare earths plays. So great to see them thinking that we've got that potential as well. We've got a lot of money in the bank now to help take us forward. We've got coverage from major investment firms, research by Macquarie, Canaccord, Petra, and a few others. So really positioned to take this forward. The reason why we're so successful in taking our market cap from 25 million to the circa 500 million today is the quality of our resource. So we announced an upgrade to our JORC resource in March this year. We now have 70.91 million tonnes at 4.06% TREO, total rare earth oxide. That's at a 2% cut-off grade, so quite high. And in the niobium space, we've got 95.47 million tonnes. This is a large carbonatite-hosted deposit, hard rock deposit, so don't confuse it with the ionic clays. They may have a lot more tonnes, but they're also extremely low grade. So we're high-grade, carbonatite-hosted, exactly the same style of deposit as Lynas's Mount Weld deposit in Western Australia and MP Materials deposit, Mountain Pass in California. They're the two biggest producers of rare earths outside of China, so it's great to be in company with them. One thing we'll be doing to this resource, hopefully over the coming months, is converting a lot of that inferred portion into measured indicated. So measured indicated is still quite big, it's about 30 million tonnes, but we aim to convert a lot of that inferred into that measured indicated as well, which will further underpin the robustness of our economic studies. So where do we fit in the global scheme of things? We're already the biggest hard rock deposit and highest grade in South America. This bubble chart shows you that we're in basically rarefied air right at the top there with the two big boys, MP Materials and Lynas's Mount Weld. So we've got the volume, we've got the scale, and we've got the grade. We think our scale is getting even bigger. We've only drilled out about 30% of our tenement area. We're not going to drill forever because we've really got enough of a resource already, probably for a 40-year plus mine life. So we're really now dovetailing straight into the economic studies. Just a comparison in that table of where we potentially can sit in terms of global position, in terms of value. You can see Lynas and Mount Weld, Lynas and Mountain Pass, they're in production and they're up at about $20 billion market cap. Arafura, also a hard rock deposit here in Australia. They're in development studies and getting their funding ready. They've climbed to about a $1.7 billion market cap. We're still down at $470, $500 million. Our resource arguably is as good as theirs or even better. You can just compare those numbers there in terms of the grade, in terms of the NdPr grade, in terms of the contained NdPr. We're either bigger or very comparable to those guys. So there's no reason, I believe, as we continue to deliver development studies, all the milestones to go towards production, that we should not start catching up with these other companies' valuation. I'll let you reach your own conclusions of what that valuation could be, but I certainly think we're a 10-bagger from where we are today. And that's very reasonable, I think, given where Lynas and Mountain Pass are sitting today. If we can also get into production over the next 3 to 4 years, there's no reason why we could not get a very, very big re-rating. One of the reasons for the popularity of our stock is our favourable location. So we're in Brazil, Minas Gerais, very favourable state, and we're in the Barreira carbonatite, which has seen a lot of mining over the years. So we've got CBMM over in the eastern side. They are the world's biggest niobium producer. And we've got Mosaic with a big phosphate operation on the western side. So they've been operating there for 40 plus years. That means two important things. One, the environmental impact there is very well known, very well accepted by the community and the state. So that should help us get fairly smoothly through the environmental process. And it means the infrastructure is already there. Roads, railways, low-cost hydroelectricity power, we can all access that. We don't have to spend billions of dollars putting our own capex into place. So that gives us an opportunity to fast-track this into production. The government is very helpful. We've signed an MOU with the government, the state government, to expedite permitting approvals, and they've given us a state tax exemption for goods that we bring in to develop the project, up to 18% tax exemption. So a very favourable location. We're about 5 or 6 kilometres from Arusha city itself. They live off the mining business. They're very keen to see our project in production. They want more jobs and prosperity for the region. You can see on the eastern side there a bit of a schematic diagram. I'm too scared to press this button in case I do something wrong. But you can see on the eastern side there a bit of a schematic of our project land. So earlier this quarter, last quarter, we bought 166 hectares. That's where we're going to build the project facilities, the processing plant. One alternative is to possibly also access one of the existing plants in the region. So niobium is a simple flotation process. Any flotation plant can also process niobium. Phosphate is a simple flotation process. There are other phosphate plants in the region. So having a chat to a couple of those. One of them just happens to be right next door to us at Mosaic. Mosaic has put their operation on care and maintenance and announced that they want to divest that project. So there's no phosphate left there, so it's not interesting from a phosphate potential, but that processing plant could be very interesting to us. So watch this space there. We also have very favourable deposit characteristics. So you might see some very impressive numbers in deposits, but you have to have a look at how they can be monetised. One of our advantages is our mineralisation starts from surface. So literally from surface we have high-grade mineralisation, and it continues fairly consistently down past 150 metres. Our deepest intercept was 178 metres, which is quoted up there, 4.34% TREO and 0.75% niobium oxide. Fantastic economic grades, and the whole intercept is mineralised. The model for the mineral resource estimate at the moment is modelled down to about 100, 120 metres. So it's really quite shallow still. We know the mineralisation can continue down to 800 metres because our next door neighbours have drilled down there and are still finding that kind of grade. We don't need to drill that far. As I mentioned, we've got 40-year mine life, I think, already. So it's just out of curiosity value that we might do a couple of deeper holes. Only 30% of the prospective area, as also I mentioned, is drilled out. So lots of easy expansion potential from surface for this resource. We're drilling still today, 24/7. Most of that now is infill drilling. There are still some expansion holes, and we announced some of that yesterday. So we are still seeing that the system is open to the north, east, west, and at depth. So there certainly is more potential to increase the resource, and we'll be doing that over the years. We've also started to form some downstream initiatives, so partners can see this is a very high-grade resource that can produce very good feedstock for them, and also the fast track to production is quite interesting for them. One point that I want to emphasise is that we've already produced a rare earth product from our mineralisation. So the previous owner ran a 9-month pilot plant study. They produced a rare earth oxalate with 99% purity, 86% recoveries, 20% NdPr and some heavies in there as well. So we know we can produce a rare earth product from our mineralisation. We're extremely confident we can produce a niobium product because we have the same rocks as the next door neighbour that's been doing this for 50 years. We've got MET work currently underway. Hopefully the first lot of MET results will be announced in the next few weeks, so that will give everyone a bit more confidence that we can actually produce a commercial product. We're part of the MAGBRAS project, which is Brazil's initiative to establish magnet making facilities in Brazil. We were the first company to supply rare earths to them for that test work. So we definitely want to be delivering into the Brazilian supply chain. We have a deal with nanotechnology. They're experts in cerium products. Cerium is one of our highest components in our rare earths. So we know how to separate the cerium and the lanthanum, which are two very big components, from our rare earths. We want to give them to Nanum and they can commercialise those. And then we can produce a very high NdPr grade and high heavy rare earth MREC product. We have a strategic alliance with RIU in the US. They already are making magnet materials for US defense and other US agencies, but they've only got a deposits about 3 million tonnes. So they're very keen to partner with someone like us with a big resource that can provide them with the feedstock to scale up their business. We're also into Europe. We've done an arrangement with Técnicas Reunidas, a leading engineering firm based in Spain. They are the leader of the Permanent project, which is Europeans' initiative to make magnet making facilities in Europe. So potentially we can also join the European supply chain. And on the niobium front, we've joined up with Boston Metal, headed by the former CEO of CBMM. He was there for 30 years, including 10 years as CEO. They've got a new modern technology, zero carbon potentially, to make niobium. So we're trialling some work with them as well. And on the niobium front, we love it because it's got supply concentration. So there's only 3 producers in the whole world. There's CBMM next door to us, which does about 80% of the world's supply. China Moly, CMOC, also in Brazil, does about 10%. And then Neobec in Canada, about 9%. So it's virtually a monopoly operation, means the pricing is very stable, and there's room for us to come in and enjoy that. It's unfortunately a weapon metal, niobium, used to strengthen steel, but also used in a lot of the weapons in the Konov missiles, strengthening tanks, all that kind of stuff. So it's in great demand at the moment, unfortunately. Our project delivery team, you've probably seen this slide before, so I won't go into details, but we have several engineers that used to work at CBMM, plant engineers, mineral process engineers, and the guy that used to run the whole operation at CBMM. So we have the expertise to build this mine, build this project, and also to operate it. So just a quick summary of anticipated news flow. Our permitting process has begun. The first box that we need to tick is our environmental license. All the environmental studies have been done, no red flags, and that process has commenced. So hopefully we'll have news on that by the end of this year. We then go for our preliminary license and then our operating license. So hopefully that'll also be delivered during the course of next year. Drilling program is continuing. There'll be a little bit more drilling to be done and a further increase in the mineral resource estimate. So good news on that front. We're building a pilot plant. We used the old pilot plant from the previous owner and upgrading that. We're putting into the local university, the Cephit University, the biggest technical university in Minas Gerais. We're winning a lot of brownie points for being able to put that pilot plant into one of the educational institutions. We'll be using it, of course, for our own purposes, but also making it available for the university trials. That should be up and running by the end of the year, so that'll be very interesting as we make sample products. We're continuing discussions with additional strategic partners. I can't say any more on that front, but I am going to Washington in 10 days, so stay tuned. There might be news coming out of that. And again, our development studies have started. We've appointed today Worley as our technical advisor for those studies. So Worley is arguably the biggest and the best in the business, homegrown here in Australia, but they have been in Brazil through one form or another for the past 60 years. So very strong presence in Brazil, and they'll be helping us enormously to accelerate our development studies. That's the presentation. Thank you very much.
Thanks very much, John. Running on a nice session there. All right, you know where all these amazing human beings are. Go and find them, have more discussions with them, enjoy your morning tea. We will ring the bell about 10 minutes past 11 and usher you all back into the room. And it is a big session between morning tea and lunch, so let's make the most of it. Thanks, team. All right, I think I will get underway, team. There's a very nice quorum in this room, so you obviously know a bit about our next presentation. I was having a chat with Glenn Poole. He was up here bright and early. He's a happy fella. Do you know he's been around the world 7 times in the last 12 months? 7 times as part of the Explore project. You can have a chat with him about that a little bit later on. He's here to talk to us about Mammoth Minerals. Now, they are in the hot spot at the moment, Nevada. And what's catching, I think, people's attention from this particular project, thank you, Jackson, is a growing pipeline of high-grade gold and silver projects across multiple prospects. It is early, but there is scale potential there, is there not, Mr. Poole? Would you please make him welcome, everyone?
So as alluded to, Nevada is becoming an increasingly hot spot with lots of companies either heading over there or IPOing with assets in Nevada. And I'll sort of discuss why that is at the moment. Usual disclaimers. So I guess the team, we've proven we can find gold. We have over 10 million ounces between the 3 geos on the board. Most recent is probably, I guess, Simon with the Never Never discovery into what is Ramelius now. So covering the corporate and M&A, my background is very technical, so I used to run gold mines for Northern Star, among a few others. And then Kevin is our US-based director. He's a fund manager in that part of the world, which obviously gives us good exposure to those funds and that. As a bit of a corporate overview, we do have a few projects in the back of the portfolio, but I won't cover off on those. Those are looking to be divested to support the US gold strategy. So for us, I guess the key value drivers at the moment is building out the gold resource that we have at Buster, which is sort of, I guess, the key aspect of the Excelsior Springs project. Just finished 5,000 metres of drilling, waiting on the final results of that, and that will feed into resource and an exploration target to really underpin what we have there at Buster. Outside of that, we're advancing a lot of other prospects as well across the 135 square Ks of tenure we hold, Blue Dick, Kentucky, Imperial. We want to get them ready to drill, so there's a lot of mapping and sampling that needs to be done on surface. Tying in with that, I guess, is that critical minerals exposure. There is an underlying theme of gold across all the projects we're working on. Adding silver into the mix, antimony, lead, zinc, copper as well, adds to that basket we've got there. Still working on things in the background in South Dakota as well, advancing natural drill ready status. I'll cover off on that as well. As well as looking to divest these non-core assets, so the Peruvian copper and the VMS Skyline project in Newfoundland. So I guess for us at the moment, the value proposition lies in this high-grade gold we see in the US. So Nevada really is the heart of mining in the USA. You know, it's world-class endowment. It's produced a bulk of the gold that's come out of the US, we'll say. As a standalone state, it's probably in the top 5 globally in terms of producing gold. The area we're in, again, is increasingly popular with the Walker Lane trend underexplored largely, with everyone focusing on those northern prospects. A lot of M&A recently, big companies coming in, soaking up projects, consolidating. And as a jurisdiction, the best in the world. You know, I think that's been said ad nauseum about a few places, but this one is where everyone's heading because they know they can develop projects very quickly. As a bit of a, I guess, education piece on why it's so popular as well, the geology is amazing in the fact that it's heap leach amenable. So a lot of the open pit mines in the US actually use this heap leach, methodology because the cutoff grades can drop right down. It's lower capex, lower opex. It supports a lot of these operations in terms of their recoveries and margins as well. So globally, heap leaching covers about 30% of gold and copper production. You can get very good recoveries, and it's simple and scalable. So that's critical, that you don't need to have a minimum of 2 to 3 million ounces to start production. You can actually go into production a lot earlier, and a lot do. Get it working. So the Great Basin, again, this is the hot spot of where the work's being done, and what does host a lot of the gold is that Mount Roberts thrust, which is the right sediments, meets the right structures, feeding them with fluids that are full of silver, gold, lead, zinc, copper, which is why where we are, we've got where worlds collide. So Walker Lane, traditionally epithermal, meets Mount Roberts thrust, which is that Carlin trend. Got a commanding land position, 100 square kilometres of staking on top of the 30 we acquired with the project itself. Buster is the main focus in that one. Outside of that, Blue Dick is advancing rapidly. Kentucky and Imperial was another one we announced recently as well. So we've got a pipeline of 7 targets at the moment, 4 really in focus, one of them already drill advanced. The Buster Gold trend itself has got over 20,000 metres of drilling now. It is a historic mine from 130 years ago, some shallow mining done in the 60s as well, but it's a over 7 long kilometre corridor, 200 to 400 metres wide, of heavy alteration, hosting many mineral occurrences. So we've done the drilling. There was a lot of historic drilling to rely on as well to help guide that. That's now feeding into a mineral resource we're working on at the moment, so we're waiting on the final results of that to really underpin the resource there, and an exploration target to, I guess, guide the next steps. Outside of that, the opportunities, what we're developing at the moment. So we've got teams on the ground across Imperial. So again, another historic mine. That one shut actually pre-World War II. Sediment hosted, so again, that Carlin style, that's been mapped by others repeatedly over the years, and it's just never had the attention to develop the scale potential there. There is a lot of parallel structures that have never been followed up on. Geophysics has highlighted that. You can see there the drill results speak for themselves, that there is pretty amazing gold in the ground, and it is very shallow. You don't have to look deep, they are all from surface, and that's what the old timers were following, literally following their nose, usually into the side of a hill. We'll focus in on the Imperial mine itself. So these are workings exposed to the surface. You can still get access to them. They've done adit sampling in there. You can map them out. All the remnants of the infrastructure is still there. They were using vat leaching then, which was a bit of a precursor to heap leach methods. So instead of putting it through, I guess, a CIL plant like you would these days, they just chucked it in a big vat and covered it in cyanide. So 1.3 kilometres of adits, shafts, stopes open to surface, produced at 15 grams a tonne, which is pretty good grade. And you can still see the structure in the underground workings at the moment. They didn't go down, they just went flat into the side of the hill. So that's where the opportunity is there, that we've got targets we can just drill directly underneath in a long strike from this historic mine. Blue Dick, so this is where we add a few other metals into the mix. This is a CRD, carbonate replacement, silver, zinc, lead type deposit. Again, it's got workings exposed to surface, shallow mining's been done, so it's open a long strike. Basically cut into the side of hills, so open at depth with that zonation of minerals, which is typical of this type of deposit. We get gold-rich zones, silver-rich zones. We're getting antimony up to close to 2% there. Amazing copper grades as well to support that. Zinc and lead. So outside of the gold, 5 minerals on the critical minerals list in the US. And it's a ginormous polymetallic system, so 2 trends, over 3 kilometres on each one, so a total of 7 line kilometres and room to grow. So we've been out there, intensive mapping and sampling program. A lot of these don't have results on, we don't know why they were digging a hole there, so getting out onto the ground and actually understanding what they were targeting, where the best spots are, what we want to target in terms of whether is it the silver-rich or the antimony-rich zones. But again, the underlying gold grade supports it all anyway. Huge opportunity there to grow and develop something, so that'll be one of the priority targets moving forward. So yeah, outside of that, building out that target of pipelines. So Kentucky trend, largely untouched as well. Historic stuff, there is no open file data in the US. This is all work that has to be sort of done from the ground up. So 1,500 metre strike of amazing grades you'll see there. Silver, I still think has a long way to run and a lot more room to grow. So outside of the gold, adding silver into the mix helps, as well as any other critical minerals, can attract funding from various agencies in that part of the world. Stance, again, hundreds of grams silver, underpinned by gold, copper, lead, 1,300 metres long there. Buster East, that's extensions to our existing gold assets. So, drilling a long trend from that to really grow this out. All very shallow. These are all surface samples. You can trip over these rocks. You can see it hanging out the ground. We'll now jump up to South Dakota. So I guess the modern mining era started in South Dakota with the Homestake mine. It's where they invented cyanide leaching, not heap leaching itself, but actual cyanide leaching into the hard rock. 42 million ounces came out of that one deposit alone. There's 3 other companies working on projects in that part of the world at the moment, with the Richmond Hill mine, Maitland Gold project with Dakota Gold commissioning later this year. The Wharf mine's been running for the last 15 years, and Gilt Edge is actually sort of restarting exploration again with Agnico. We're down the road and I guess a detached portion of that same geological sequence. It's hosted in the banded irons, so typically high-grade hinges host all the gold, and some of the high-grade ledges, as they call them, up in Homestake, we're hosting between 15 and 17 million ounces. So the opportunity for us up there, we've got a decent land package with over 100 kilometres of this banded iron that's been mapped through geophysics. There's not much outcrop there, based around a centralised historic mine which pushed out close to 50,000 ounces, the standby mine. That had underground workings with 3 pits that were excavated there. That shut in about 1910, and there's been no real large-scale modern exploration done in the area since then. The total land package hosts about 5 targets, 7 including the smaller targets, with some amazing grade that can be sampled from the historic undergrounds. An example of this is the jackpot trend. So 2.5 kilometres, you can map out these banded irons in the geophysics. They stand out and they glow. Hosted in the sulfides as well, so you can target it with downhole geophysics once you get a drill hole into it. But all these samples are from historic workings, old shafts, adits that you can get into and see what they were mining. Again, a long history, a lot of gold has come out of here from over 100 years ago. And I guess the reasons to invest, which is why we're all here, looking for something to invest in. The gold seam across Buster and Imperial is, at the moment, none better, I think, in Nevada in terms of growth opportunities. We've done the drilling, waiting on resources. We're going to get drilling again on the Imperial and start growing these targets out. Blue Dick, Kentucky, those other projects as well, huge potential to grow. They've never seen a drill hole. You can trip over this ore at surface, so working those up to a point of where we want to put the drilling and get them ready so we can start cycling through all the gold and critical minerals projects on this single property and start developing them out. Bella, again, working on that in the background, advance that one. If we can hook onto one of these high-grade ledges, that's a company making discovery. So excited about the potential of what's happening up there as well. And I guess, like I said, outside of that, optimising that portfolio. We're a gold team. We're good at finding gold. It's not just luck finding over 10 million ounces. So advancing those to commercialise them to help support that critical mineral strategy that we're seeing across the Excelsior Springs project. So think big, think mammoth, and thank you all for your time.
Very, very impressive. They've trod him well at Explore. It's good. They take these young juniors and they give them so much background information, backup information, and they turn them into very polished human beings indeed. Cyprian Metals is next up. No, I'm not. Excuse me, team. I'm just going through PTR Metals. Excuse me, team. Give my AV guys a bit of a heart attack up there. So you guys are positioning yourself where global demand is obviously building at the moment, correct? Yeah, all right. So critical minerals, early stage, but you guys are in the postcode for really good long-term development. So they've just added some technical and also some commercial firepower, which I'm sure Robert Sennett is going to dive into in his presentation. Would you please make him welcome?
Thank you, Chrissy. And thank you, Vertical Events, for organising, and thank you, everybody, for coming to get an update on the Muckaneppy project. There's the disclaimer for anyone that's interested. But let's, getting straight into the project. We've ticked a lot of boxes in a very short period of time. We only found this project at the end of 24, and it's come a long way in that time. It's big. We've found widespread mineralisation, shallow, which has now got a footprint of over 40 kilometres. It's high grade. We're about to put out our maiden resource, and it's looking like it'll stack up as one of the richest mineral sands projects on the globe. It's interesting when you start looking at grade, particularly in the mineral sands industry. You know, if you've got 5% grade, you can get pretty excited about that. We've got very few intercepts that are less than 10%. You know, we did our first 2 bulk samples, and both those bulk samples, the first one was running at about 15.7% grade, and the second one's at 13%. So it's high grade, and that makes a big difference. We've got some very interesting characteristics about this deposit which go right to the heart of how we can process this and how we can process this most efficiently. A lot of the new deposits that you see in mineral sands, they're quite fine-grained, which is when you think of gravity processing across your spirals and what have you, if you've got a coarser grain, the system works a whole lot better and your recoveries are a whole lot better. So we've got a very coarse deposit, which is proving great in terms of our recoveries. And in terms of the first lot of testings we've done, we're sort of getting north of 91% recovery. So that's a really great outcome. Our initial test work, again, is going really well. What we've been able to do is we've been able to sort of produce titanium products, you know, well in excess of, you know, grades now are sort of averaging about 67% titanium. Again, with mineral sands, you can talk about big projects and you can talk about high-grade projects, and that's all fantastic. But a lot of it actually comes down to the mineral assemblage of those products. And effectively what we have in our deposit is 96% of what we call valuable heavy minerals, which is quite critical. And of our valuable heavy minerals, it's basically all titanium, which again is a really great start. It's also really low in impurities, which again is a massive advantage because you don't have to separate out any of those impurities. We've got very little chrome. Chrome's a problem because it takes pigment from a really white pigment to a bit of a yellow pigment, so you've got to get rid of that stuff. So the fact that it's all really low to start with is a huge advantage for us. There's very little alumina, there's very little uranium, thorium. So it's a great product, as I say, not only from our own processing perspective, but also from a customer perspective, because we can sell them a very clean titanium product for use in their own production processes. The fact that it's coarse as well just really works in their chlorinators and the like. So it's got all these great characteristics to start with. We're close to transport. I mean, we're 35 kilometres from an existing railway siding. At the on the Adelaide to Darwin railway line, so we can go north to Darwin, we can go south to Adelaide. In fact, we can go east-west as well across to Perth or even to the east coast. So we're extraordinarily well located. We've got a really strong balance sheet. We've got now $15 million in the tin, so we have enough money now to do all of the test work that we need to do in the short to medium term, which puts us in a really good position. And we've got a great team. You know, we've got a team that's been exploring in South Australia for probably since I was in short pants, although I am getting a bit older these days, which is a little depressing. But we've also starting to, as we start to formulate this project, we've now got the confidence to start adding more members to our team, and we've just added metallurgy and we've just added marketing, as Chrissy alluded to really start building out that team. This is the team I was talking about. You can sort of see Derek Carter and the guys there. They've been exploring in South Australia for a hell of a long time. They discovered Prominent Hill. So guys that know how to find a world-class project. And the key executive team that I was referring to there as well, Vic Bromsma, you know, he was with Iluka for over 30 years, finished up as their principal metallurgist. And Neil, who's been selling mineral sands products to the world for over 24 years. So again, a really good additions to our team. We capped it at about $40 million, and as I mentioned, plenty of cash in the tin at this point. While we'll focus on mineral sands here, it is worth noting that we've got some other pretty interesting assets in the portfolio. We've got some high-grade copper and gold located in the Olympic domain in South Australia there, which is a great address when you start looking at also Olympic Dam and Prominent Hill and Carrapateena are all located in the same areas. We've got some ready drilling ready to go, and we've also got a rare earths deposit there in Comet, where again we've had some pretty interesting intercepts. The market gives us no credit for any of that, but in due course we'll look to realise our value for what look like some pretty good projects. In terms of titanium, we all know that it's a critical metal. I mean, you probably all think about it in terms of defence and aerospace, and those of you with new knees and hips, you know, it all goes into that. But that's all. In the end, about 90% of titanium actually goes into pigment as a whitening agent for paints and paper and the like. it's an easy industry to sort of keep abreast of, actually. If you sort of think that people paint and renovate their houses when the world's going good, well, that's sort of pretty much when the industry's firing as well. When things aren't so good, everyone puts that off and it drops off a touch. But you can see from that graph of high-grade feedstocks that the industry's been suffering over the last few years with supply exceeding demand. And we've seen the industry react to that with plant closures. I mean, you've seen Iluka shut off its synthetic rutile kilns. And so that supply has started to come off about the same time where the world has started to put some pretty serious anti-dumping tariffs on Chinese pigment. And so you've now seen the demand for high-grade feedstock starting to increase as those Western producers sort of continue to recover. And this year we're looking at a pretty significant deficit in the market, and that deficit's expected to continue in at least the short term. So it's a great time for us to be coming to start talk to customers and introducing our product to people that are looking to find new avenues for their production mix. If we have a look at Makanipi itself, we're located in the northern Gawler Basin. It's a long way from anywhere, actually. It's about 4 hours from Kupapiti on dirt roads, which is a good thing. And the discovery is quite an interesting story. As I said, we've got a team of geologists that have got quite a lot of success. But as they're out there looking for that high-grade copper, they find this ancient inland sea, which is the grey area up there. And what had happened is that all of this high-grade titanium had been sort of washed as mountains and the basement decomposed. All of that material got washed into that inland sea and concentrated on the shorelines through the wave motions there. And so that was interesting. And then what we then found is this great Makanipi Suite in the blue, which has surrounded it, which is where all of that high-grade titanium sits. That Makanipi Suite is in itself quite interesting because it's a highly fertile layered intrusion with matrix and alpha matrix rocks, but this big anorthosite sequence. And that's quite interesting because that's quite rare around the world. And where you see it is with really, really rich mineral deposits. So you see it in the Bushveld in South Africa, you see it at Voisey's Bay in Canada, you see it at Telnus in the Nordics where they've been mining titanium for over 75 years. You see it in Rio's Lacteo mine where they've been mining ilmenite there for over 50 years. So it's a really interesting deposit, and when they started looking at it and we started fiddling around, there's 20-30+% titanium in that material. But for us, we're really interested in the Rosewood deposit, which is on the shorelines of that old inland sea, because that's the sedimentary stuff. That's concentrated titanium, and that's big enough by itself. So before we even start to look at what else is around it, when you start to look at those basement rocks, you start to have a look at those saprolitic deposits which are up north there. So we've got the Duke project there, or the prospect, which is 60 metres at almost 40% titanium. We've got the Claypran prospect at 45 metres at 27%. And we've got these massive areas of high-grade titanium that we're not even looking at this point in time. For us, the focus is on this Rosewood deposit, which is high-grade and much easier to process. So it's a really interesting for us, not just in terms of what we're doing, but in terms of the upside that's not even under consideration at the moment. We've done a lot of drilling around Rosewood, and there are some spectacular intercepts there. We'll announce our maiden resource in this quarter, and as I said, we're really expecting a pretty substantial resource, which will have many, many years of life, and it'll be of a grade that I think will be a little bit eye-watering. When you start to look at I can go back here a second. So when you look at they're the two strand lines there. If the one on the right there is probably about 5 or 6 kilometres by 2 or 3 kilometres across, and as I say, very high grade intercepts sort of along the line there. This is a cross section of that, and what you can see there is that high grade blanket that continues the whole way down of that 5 or 6 kilometres. So it's a huge area, and that red area there is the high grade. So that's over 12% heavy minerals all the way along, probably 5 or 6 metres from surface. And in areas where we've got the deeper channels, that high grade material goes down to about 30 metres. So it's phenomenal from potentially from an open mining perspective. And that's what it looks like, right? So in terms of doing that open pit mining, relatively straightforward. You know, as I mentioned before, we're on a pastoral lease, so you probably see more kangaroos out there than you see sheep. But we have great relationships with the landowners and the native title people there in terms of sort of progressing that open plan mining. As you can see, it's simple. It's truck and shovel, put it on a ROM pad, treat it, and then slurry it along to the processing plant. And again, because of the characteristics of the ore, it's really simple. You know, it's mineral sands mining. I joke about it at times. It's like kids in a sandpit with sort of spirals and what have you. And if you've got the right material and you can just run it across those spirals, then it's very cheap and easy to do. Because our material is so coarse, which again is a great advantage in terms of putting it through the spirals, it's in fact so coarse. So we've had a lot of success in the first part of that process by doing some scrubbing and some attritioning to sort of get the grain size down a little bit. We then sort of had some great success in terms of putting it over the spirals. We've actually sort of done it in such a way that we've sort of separated out some of the fractions, and we've got better results again. We're really early in this process, so this is a lot of experimentation as we go along. But we've had some great success with respect to the slimes. Like slimes is a major enemy of mineral sands projects. You know, a lot of projects fail because there's too much clay in the slimes. Ours tends to be a silty type material that processes quite easy, settles quite easily, doesn't need a lot of flock. And so we've got the beginnings of a really great project here because of the mineralogies and the characteristics of those mineralogies. You know, as I said, we've made some high-grade products already. We've used magnetics and some electrostatics to upgrade the HMC to do that. We're even now finding that it's working that well that maybe we don't even need to spend the capital on a mineral separations plant. Perhaps there's a WIMS or something like that where we can do it even more efficiently and save a significant amount of capital. So as I said, we've got some products already. We've got a great HMC, which is what comes straight off those spirals. It's over 90%. The recoveries are very high. And then we've been able to upgrade that HMC into five different product streams at this point in time, averaging about 67% titanium. That product, we're now starting to market that product to customers, and that's going pretty well given how clean and the grade of the titanium, the coarseness, the lack of impurities, it's being received quite well. As I said, you can see the spirals there in the top picture. All of the heavy mineral sands, the black sands, are sort of get towards the inside of the spiral. So it's all quite simple. And then we got the magnets there in the bottom picture as we sort of separate the major products there. So again, we've just started in terms of doing this. We've made some great strides, but there's a lot of work to do, and that's why we've hired these new guys. That's why we're out talking to the market about what they're looking for in their products, and we'll continue to do that work to get the products that the customers are most looking for. As I said, we're very well located. You can sort of see where we are there. We're right on the corner of that railway line, which sort of lets us go to any port we like. We'll do the HMC up by the mine site, and then to the extent we need more processing, mineral separations plants and the like, we'll build that at the port. Where you've got the workforce and more infrastructure. And there's a lot of work going on at the moment. As I mentioned, we'll put out our maiden resource this quarter. A lot of work going on in the labs in terms of how we can continue to improve what we've got. We're out there marketing to customers, understanding what they most like. That feedback then comes back to the labs and we start to continue. There's no point spending a whole lot of money trying to make this thing as good as we can. Let's just understand what the customers want and let's make the right product. We're well into all of our environmental studies. We're working with the South Australian Government in terms of what they need from a scoping perspective. And we're not doing so much drilling of a resource anymore because we've got probably what we need, but we are starting to look around for water. There's a lot of water around, and we'll do that water drilling over the next little while as well. So I see Chrissy approaching. I've just finished. So thank you very much, everybody. Thank you, Chrissy.
I thought you better behave than that. All right, next up on stage we have Cyprium Metals, and they've got a nifty little plan to restart and develop existing copper assets at a time when, as we all know, supply is tight and demand is only heading one way. This is their Executive Chairman, Matt Fifield. Please make him welcome.
Fantastic. Why don't we load up so we've got a video. It's a first today. There's quite a lot happening at Nifty. And I thought rather than trying to show it to you in a series of static slides, this is a first for us. So let's go ahead and cue up that video, please. Fantastic, thanks. So at Cyprium, we're building Australia's next great copper company. And that's the first stage, right? What I'm gonna tell you about today is not only an update on our phase 1 cathode restart, which is what you just saw, but also more about what comes next and how it fits into things. I will be making some forward-looking statements, so you should view those with caution and read the disclaimers herein. One of the things I'm not going to be talking about today is the copper market. So I'd like to, though, briefly say that in every aspect of what we're doing, it is impacting what we're doing, our choice of partners, our ability to move fast, the money that we can raise, the money that we can make, the grades that we can extract from a just tremendous set of assets and exploration that we can bring in. So copper is one of those strong thematics that is giving us backdrop. So we are Western Australia brownfield copper, and we have a rapid stage expansion that's underway. Our assets are principally outside of Port Hedland in the Patterson district, and our tenements cover 2,000 square kilometers on the basin margin on the western side of the Patterson district. So we have a lot going on there. This has been continuously explored and updated and mined for 40 years. But principally, our main asset is the Nifty Copper Complex. There, we have surface oxides that are left in the existing heaps that we're mining today, permitted, under construction, starting up production in the third quarter, initial cathode in the third quarter. We have oxides that sit around the old open pit that we haven't pulled into reserve, and we'll talk a little bit more about those today. And then we have a tremendous sulfide resource that sits below the open pit and extends down to the top of the old underground mine there. The other thing that we have is we have a lot and a lot of spent infrastructure. We have probably 75,000 tons of copper processing infrastructure on site, and we're lucky we can both process copper oxides and process copper sulfides through the mill. So part of our challenge to the management team is how do we move rapidly in this copper environment to get as much out of the ground and into the market as we can. Starting on the phase 1 cathode restart, there's 17 million tons sitting above ground, no mining, no yellow gear, no diesel fuel, sitting there waiting to be reclaimed. And basically, we're taking those 17 million tons, we're gonna hit them again with sulfuric acid and put them through a partially refurbished plant. That's the essence of the cathode, phase 1 cathode restart. We're doing this work with fantastic partners. McMahon is handling the site works, Decmil is handling the reconstruction, and then PPM Global, who's one of the hydromet experts here in Australia and used to operate Nifty's SXEW in the past, is working with us on site to commission and operate. And again, as we said, we're about halfway through, okay? We're about halfway through the hours that go into the plants, and we've made a lot of progress on site that you probably saw. And this is all leading up to that third quarter wet commissioning and initial cathode, and then ramp up in production. So what are we doing with the heaps? Okay, what you see behind me in the center, it's a visualization of the heaps. And it goes from 6 on the side closest to me all the way to the earliest pads, pad 1 on the other side. And it's a little bit, the process is a little bit like mowing a lawn. We're turning over the heaps with an excavator and then putting pipes and dripper hoses to put sulfuric acid onto freshly exposed new contact areas. That then goes into a series of pipes and valves and ends up in the cathode plant. And for us, our key target here is to keep about 1.2 million tons of material under irrigation at any one point in time. If we find that right now that matches our plant capacity, so if we find that we're making more copper out of that turned over area, then we would turn down our volume that we want to keep under leach. And if we find that we're making less, then we're going to expand. I think that as we've been in this project, one of the things that's interesting is that we're seeing more ways to get material under irrigation faster. And that means that ultimately we're starting to feel like it's possible that we'll be plant limited and be able to grow our cathode production from what we think today. So that's pretty exciting. This is behind me. You'll see closest to me, you'll see a plan view or a plan picture of the solvent extraction plant. That's basically a big chemistry set with a bunch of tanks and valves that take the pregnant liquor that comes off the heaps and then strips it down, purifies it. And then on the further away from me, you see a plan view of the electrowinning plant. And that's where if you've seen those plates of copper that come up in a big pole, they're made in the electrowinning plant. So we're refurbishing right now all of the common parts of the plant that are required to make it run, but actually we're only refurbishing a part of the actual operating plants, the mixer settlers and the cell house parts that are highlighted there in green. So what that means is as we think about expanding cathode production, it's actually about sequentially turning on more of the other operating parts because the guts are already there. So as a shareholder, and I'm a big shareholder, and I hope there's a couple here, that'll be very accretive, particularly in the copper market that we're in. So stepping back, I guess what I'm saying is we expect that over time, our cathode production will grow. One area that we're challenging ourselves is can we increase that mining rate? It's a question mark. And then what does that do around the plant capacity? There's a couple other areas though, and we'll dive into this in a second. One is that we have an already permitted ability to go ahead and mine the oxide effectively collar around the old open pit and also extend the pit. And what that is back in 1993 when they started up, the grades that they were trying to put through this plant were much, much higher. And as a result, there's a halo of oxide material and a low-grade stockpile and some plant expansion that we can do that will help drive an increase in oxides. Second, we've been talking a little bit about exploration, and we're excited, and you'll be seeing some announcements about exploration. But again, that translation from when other people were exploring these properties, they were looking for either standalone new mines or much higher grade. And what we're seeing is that the 1 million meters of drilling that we have all around Nifty presents quite a lot of opportunity for us to find new material that might go through this plant. This is a visual of the site. And so phase 1, that kind of orange area those are the existing heaps. We're going to mine that and maybe faster. And then the plant you can see is just at the end. The next thing that happens is we're around that oxide collar. And what we're looking at right now is the open pit, that sort of oxide collar would be mined and put onto pad 7. So we would build a new pad, start up the open pit, and stack and agglomerate and then leach the material on pad 7 into an expanded plant. And we're sort of finishing up our studies around what are the economics of that and how would we capitalize that. This is actually one of the things. It's not just cathode for cathode's sake. It's actually that by basically moving these oxide materials and putting and recovering the copper within, we're basically getting paid to pre-strip down to the sulfide. And if you remember on that other slide, we have 750,000 tons of copper in sulfide below this open pit, below this oxide collar. So this is a view of the plant. This plant has a 2.8 million ton a year mill, the milling and comminution side of it, and then it has a float plant that's 50,000 tons. In fact, its peak production was 61,000 tons in the third year of underground operation. So it's got this big, robust, filter press float thickener area of the plant that can handle a lot of copper because it was coming from the underground, the now abandoned underground in high grade. It only needed a little bit on the mill side to make that work and fill the back end of the plant. So when we looked at this from on a PFS basis, and we're going, oh wait a minute, there's this huge ability to make copper, and therefore, and you can mine open pit. You're not really constrained by that. Really, our constraint's the mill. So what we thought about was let's expand the mill to 4.5 million tons, and it kind of matches, the float plant capacity. That's the basis of the PFS that we did, and the work that we've been doing since then is actually really, okay, look, I mean, it's $6 copper, right? We need to get tons out as fast as we can. Let's just start this thing up, put it through, and we can expand later, from cash flow. It'll be better, again, more accretive for shareholders, and speed to market's really important. A couple other things that are worth touching on. About 100 kilometers away is Maroochydore. That same process I was talking about back in the day when people were working it. There's a lot of I can't remember the off the top of my head, but I think it's hundreds of thousands of meters of drill holes here. And when it was drilled in the past, people were really looking at it going, can I find 1%, 2%, 3% copper? That's not what this is. It's a large, low-grade deposit and very large. We're talking 360 million tons large at 0.5%. So it's big, but it's low-grade and it's remote. Thank you. And that sits in our portfolio, and we're spending more time thinking about, can we bring that to light? And then we talked about the exploration. Again, there are these hits that just sit there in this surface or areas where you see the surface geochem just popping, and you look at the drill holes and you think, wow, this is going to be an immediate add-on to our program, maybe on the oxide, maybe on the sulfide, maybe on both. So as we're pulling through and looking at this data, we can continue to see how this grows. So what does that look like in the end for us? Again, I'd go back to that beginning. We have 75,000 tons of productive capacity across those two plants. And what we're looking at, just like we did with this phase 1, is starting small and just creating more and more phase development to start to open up into that open pit, get the oxides up and going, and then get the mill back up, and have that turn on, and then ultimately expand it to see how much of it we can fill from our portfolio of resources. It's a really exciting time at Nifty. There's a lot going on. We're focused on delivering that first project, and at that halfway point, you can really see it coming together on site. Our team is growing. Our capacity is increasing. Today, we're sitting at about a $200 million market cap with $100 million of cash on hand, thanks to the shareholders in the room that have supported us on this journey, and we look to our growth in front of us. Thank you.
Thanks, Matt. Now, this next one is an interesting one. So I was just doing a little bit of Googling on the side. So I've had a chat to Oliver and the team, but I didn't realise that your share price has gone up 260% since the last RIU. And I read some comments from some analysts saying that they're emerging a strategic source of near-term tin, silver and tungsten supply in a stable jurisdiction. So this is our trifecta on the tin today. So you've done good in the last 12 months. Let's see if we jump in with you now. Is there more to be had? Would you please make Oliver very welcome, everyone?
Thank you very much. Terrific introduction there. As mentioned, and just to bring everyone up to speed, overnight tin traded around $49,000 a tonne. That's approaching 4 times the copper price. And as many of you may be aware, the tungsten price has also surged as well. We're looking at a near 10 times increase over the last year in the tungsten price, and our flagship project, the Tullabung project at Sky Metals, also has a significant amount of silver. So we're looking at a project that really has 3 great commodities in 1 great opportunity, and we're in a very prolific mining area near Cobar in New South Wales. So really a terrific project, and looking forward to spending a bit more time on it today. As mentioned, Tullabung's right in the middle of New South Wales. It's south of Cobar. There's a large historic operation there, and we're looking at the underlying hard rock resource. And we're looking at a very exciting upside of tungsten and silver in this project. We've got an excellent management team in place with Norm Seckold chairing the board, and the tin market continues to excel in terms of pricing. Near-term growth, we've actually just finished a very large drilling program. We had some results from that out today, and there'll be more coming out over the next few days. And we've got an excellent asset pipeline with our Doradilla project as well, which we have had a metallurgical breakthrough at. This is all positioning Sky incredibly strongly and positioning it to add a lot of value over the coming year or so. To touch on that board, Norm Seckold's there as chairman, a number of successors, Richard Hill as well, and Remus Karitis. Very importantly, Remus and Richard were founding directors of Aurelia Metals. Aurelia started the Hera mine. The Hera mine's about 70 kilometres from our Tullabung project. So we have people on our board who have direct experience in getting projects in this area up and running. And myself there as managing director, and more recently we have brought on Scott Todd as well as executive director. Scott's got a terrific blend of experience, including vice president of Mitsubishi, and most recently he's been involved in approving some renewable energy projects. He has taken projects very recently right the way through that New South Wales State Significant Development process, and that's exactly the process now that we have to take Tullabung through to get Tullabung into production and capitalising on these excellent prices. Currently we're capitalised around 150, 180 million mark, and we've got around $20 million in the bank. We think we're very well funded now to see Tullabung towards FID and add a lot of news flow in. Just looking at those prices, they've all been incredibly strong, but really the star performer has been that tungsten price. It's taken what was going to be a really nice sweetener for our project, maybe an extra 10 or 20% in the revenue, to something that could potentially double our revenue. So it's been a fantastic outcome for this project, but the tin price on its own has done terrifically too. So we're really the beneficiaries of these prices. We thought we had a good project when they were back around 25, 30,000 US. Now they're up at these levels. It's sensational. And really, the main thing driving the tin price has been tin's use as a solder. It holds all electronics together, absolutely fundamental in all of our everyday lives. There's about 1 gram in your phone, there's more in a computer, there's about half a kilo in an internal combustion car, there's over 1 kilo in an EV. So a lot of tin is needed for this modern economy, and something that's really been overlooked, I think. And now we're seeing that strong price increase because really the supply just doesn't exist. Here's a graph from Macquarie Strategy. They put together some of the key increases in tin demand. I think a part of what's been underdone in that graph has particularly been that semiconductor demand and the amount of increase in tin demand being driven by data centres. Obviously data centres are full of electronics, they need a lot of electronics, and tin holds all of those together as the solder. It's the glue holding data centres together. We're going to need a lot of it moving forward, and things like solar panels and things are all driving that demand, and it's really, there's no supply coming on. So most of the world's tin comes out of China. Their domestic production has been declining. China has been relying on concentrate exports from Indonesia. Indonesia's recently announced an export ban, which has tightened that tin market even further. And there's really no reliable and ethical sources coming online. There's very few investment opportunities, and that's really where we see Sky Metals and our Talabang project coming in. Talabang itself has seen almost 100 years of production. It was discovered in the 1890s, it was mined right up until the 1980s, but a lot of the mining focused on the overlying alluvial tin deposit, and we're now looking at that underlying hard rock resource, which is still intact. But the real advantage of having that historic operation there is that we've got a lot of infrastructure already in place. We've obviously got an existing disturbance, which we're utilising to try and fast-track our approvals processes now. And we have been exploring this underlying hard rock resource. We've got it for over 2 kilometres strike length, and we continue to expand it with every drill hole. This is a growing deposit, and some real key advantages for this project. We're really looking at a deposit that sticks out of the ground. We could walk out to Talabang tomorrow and walk up to tin sticking out of the ground. So we're looking at a open pit, very low strip ratio opportunity here, so a very cheap mining proposition. And as I said, we're drilling very shallow holes. We continue to expand it laterally. We know that it's continuous for 400 or 500 metres at depth, but when we can continue to expand it shallow and cheap for mining, why not? And then we also have a very unique style of mineralisation where our tin minerals, our tin is hosted in a mineral called cassiterite. The cassiterite is very, very coarse. And so that allows us to use very simple, low-cost processing techniques, foremost of which is an exceptional upgrade with ore sorting. Ore sorting is pretty well a ubiquitous technology in tin mining, in hard rock tin mining. We're just very fortunate that we have the ideal deposit for ore sorting. And it's down to that unique nature of the mineralisation, having very coarse cassiterite. We can get rid of over 90% of the mined mass before we have to do any downstream processing. Effectively, what that means for us is if we thought it was going to be $100 million to build a plant, now it's going to be $10 million. If we thought it was going to cost us $10 a tonne the process, now it's going to be $1 a tonne the process. It makes a massive impact on our project economics, and it's down to this very unique nature of the mineralisation here. That then goes into a gravity plant. Again, a very straightforward process. We don't use any reagents through this plant, and that makes up a very high grade concentrate where we see very high payabilities. All of this is really down to that quite unique nature of the mineralisation and the fact that we have these terrific advantages for the project. Looking at some of our recent drilling, we've had a number of successes, including some very high-grade tungsten hits here, significant widths with significant tungsten grades, and then looking at some very high-grade silver pieces that we're discovering as well. Some very nice high-grade silver zones to the south of this deposit. In the test work that we've completed so far, we do find that the tungsten and silver are following the tin largely through the gravity plant, so we don't have to do anything additional to recover those. We recover those with the tin. So very fortunate in that regard that all of this mineralisation can be recovered collectively. We do have an existing resource on this project. It's over 2 years old now, and we've got an exciting couple of months ahead of us where we are looking at updating that resource. That resource was done on about 115 drill holes. We now have over 500 drill holes into this deposit. We anticipate for this resource to grow significantly, to also add a lot more confidence to this resource, and obviously a maiden silver resource too in what's to come. A lot of it is very shallow. We're looking at some really nice, shallow, high-grade mineralisation. Some of these areas, as you can see in the cross-section here, some of these areas will be obviously ideal for our early mine life. mining these areas out, having a higher grade production. And then to really focus in on what the ore sorter does for us and why it works so well on our deposit, there's a photo there in the centre of the mineralisation at Taliban. We have those very coarse black grains, the cassiterite grains, and the ore sorter uses X-rays to see those. Those cassiterite grains are around 3 times denser than the surrounding host rock. And just like you can see the doctor when he X-rays your arm, he can see your bone in your arm. These X-rays can see the tin, they stop more X-rays, and then it makes an image. It knows exactly when those tin grains are going to be flying over the air jets. It ejects those rocks, and then everything else drops away as waste. So it's a very, actually, in practice, quite a straightforward process. Obviously a lot of science behind there, but that really drives that phenomenal upgrade that we see, that importantly that mass removal, which has those massive OPEX and CAPEX implications for us. And we have recently completed a 75-tonne bulk sample. Another advantage of having a deposit that sticks out of the ground is that we can just dig it up and process large tonnages of it, and that's actually produced our greatest results to date. From that bulk sample, we saw a 13 times increase in grade with an over 93% mass rejection, and we're seeing mid-90% recovery of tin. So effectively lose no tin for this upgrade, and we get rid of a massive amount of mass, and that improves these project economics phenomenally. To give you a bit of a peek behind the scenes on why it works so well with this X-ray technology, the image here is a raw X-ray image, and then the computer classifies it. You can see the darker grains where more X-rays have been stopped. That means there's tin there. The computer classifies those grains, and then it knows exactly when they're passing over a panel of air jets. The air jets then fire off those blue grains. All of those red grains don't have any tin in them. We don't need them anymore, and they get removed. And that's really quite a straightforward process, but it's all down to that unique style of this mineralisation. We're very fortunate to have that very coarse cassiterite. To touch on quickly how we're now progressing this to mining, we've done a lot of background studies over the last 3 or 4 years. We've had groundwater monitoring bores installed for well over 2 years now, a weather station on site. We're doing a lot of work in the background for this environmental permitting, and excitingly today we have announced that we have submitted our scoping report to launch our New South Wales State Significant Development approval. And so that will be unfolding over the next year or so, which is the precursor to us getting this into production. It's quite straightforward for us now. We'll continue to announce the results from our latest large drilling program, release an updated resource, and then a pre-feasibility study over the next couple of months. So some very big news flow to come, and to see that in a timeline. I've left April on this to show that in April we were going to finish our infill drilling and we were going to submit our New South Wales State Significant Development Scoping Report. We have done both of those things. We are on track, and this is now our timeline that we will continue to meet and hopefully exceed to get this project into production as quickly as possible and capitalise on these wonderful prices. To very quickly touch on another project within the Sky Metals stable, we recently had a metallurgical breakthrough at our Dorradilla project. Dorradilla's about 200 kilometres north of Taliban, and it's been known about for about the last 50 years. It is an absolute giant. They have known that this is a massive deposit for a very long time, but there's been very little success in the metallurgy on this project. They haven't been able to successfully make a tin concentrate. Last year we announced that we've changed that. We have successfully made a tin concentrate from this project, and that now opens this project up to potential development. This could well be one of the largest undeveloped tin projects in the world. It's a potentially tin production multiplier for us. It could be 2, 3, 4% of world tin for decades. This is seriously a very large opportunity. We see Taliban as a starter for Sky Metals and a project which is very simple, straightforward to get into production, will generate good free cash flow, and we can focus that into Dorradilla and make ourselves an incredibly large tin producer and very significant. So we're looking forward to doing some drilling here in the next couple of months and continuing to show what a terrific project we have at Dorradilla as well. Thank you very much for your time today, and please come by the booth and hear a bit more about Sky Metals. Thank you.
Thank you, Oliver, who paid attention 12 months ago. That would have been good. I like to look at all of our companies just as over the 3 days. One of them this morning is up 56% today. 56% today. So if you look, they're not actually presenting until tomorrow. So if you look on your programs, 10 o'clock tomorrow morning, it's Caprice. So they've gone up 56% today. So if only they'd presented yesterday, but there might be more upside. You never know. So we'll listen to the introduction. Now, this gentleman here is going to add to our bingo card of geological terms today, geology terms, heap leaching. What is it? I can tell you that TG Metals have had some excellent results with it, and they're looking to in their push to on-site gold processing, which should be in the later part of this year. This is David Self, and he is going to give us a new appreciation of the magic of heap leaching, what it could do for their project and what it could do for our investment portfolio. Please make him welcome.
Thank you, Chrissy, and thanks again for RIU for putting on such a great conference again this year. This picture here is just a picture of our Demon Pit, which is in the northern end of our Van Uden gold resource. I can just tell you that surrounding that pit in the abandonment bund is mineralised laterite, which they used back in the day to basically close off the pit when they finished mining it. That was last mined in around 1990. We've done a lot more work since then. Usual disclaimer, read it at your leisure. So, TG Metals, where are you? Well, we're a dual commodity company with gold and lithium assets. They are both quite close together, which is great for us for logistics in getting things done. It's also in a great area of the world as well, down there in the Forrestania belt. A lot of things happening around there at the moment. We've had Mika Metals buying into the area just recently with their acquisition of the Mount Holland South project. And there's a number of developments going on as well. So down at Cosmic Boy, a Medallion is converting that old nickel sulphide plant there, last run by IGO for nickel into a gold CIL plant. There's also Forrestania Resources is converting the Maggie Hayes nickel processing plant there to a gold CIL plant as well. And of course there's Edna May, which everyone in the belt would love to come back into production. It's currently on care and maintenance. I think something will happen with that within the next 12 months to get back into production. And of course Marble Lock mill is currently operating. That's the only one that is in the belt at the moment, but there's plenty of developments that need a home for their gold resources, and we're one of them. Van Uden Gold Project has had historical production in the past. We also have a clear pathway now to recommence mining. We updated our mineral resource just recently, and now we've got 270,000 ounces with ongoing drilling targeting further growth there as well. We've identified over 7 kilometres of strike length now. 2.5 kilometres of that is defined in resource, so we've still got plenty of exploration upside. And we've also got the satellite project of Gold City as well, which is also shaping up to be a nice little satellite project which we can push into a resource later on into next year as well. Lake Johnson Lithium Project is an advanced development opportunity. We've had that now since 2023 when we discovered it, the Burmeister deposit, and we're advancing towards resource definition as well. So all in all, that's shaping up to be a standalone project. The actual locations there, we're close to power, water, sealed roads, and also, as I mentioned before, nearby processing facilities. We're also handy for potential DSO from the lithium project at Lake Johnson, quite close to Esperance Port as well. So just corporate overview, quite a modest market cap. We've had a bit of a boost in our share price just recently. I think the reasons for that will come out in the next few days. We have strong directors and management there, unchanged since we listed in 2022, and they're all great supporters of the projects, and we all have the same direction. The shareholder composition, still got most of our seed shareholders in, 65.5% of those shareholders are in the top 50, and the remainder, 34% in the remainder of those shareholders. So we've got a strong shareholding base as well. So just zooming in on the Van Uden Gold Project. So as I mentioned before, Tier 1 location, the Forestania Greenstone Belt, and a lot happening in that area. There's 2 previous mines have been, open pits have been mined on there, the Demon Pit and the Tasman Pit, both at opposite ends of the 1990s. Existing stockpiles from those operations in the past as well. The gold mineralisation is at surface, and that's something we're going to be looking at taking advantage of in the very near term. We can expand the resource base simply by drilling. There's plenty of drilling upside there on the resource. Currently it's 270,000 ounces, but we can increase that quite easily with more drilling. Within 100 kilometres via sealed roads to existing operating plants and also the ones that are in development that I mentioned before. So just zooming in there on the resource, you can see there it's basically one whole resource there and can be surrounded by one ultimate pit shell. This has a number of advantages in development. You don't have to keep doing different pits all over the place. You can just stage the one pit, and that means that you can optimise the ore coming out in terms of grade and tonnes. We have a large laterite component there as well. So in this image here, the laterite component is just shown there as the purple outlines because some of that sits on top of the primary mineralisation. And in the blue there, that is unclassified but modelled tonnes as well. That just needs more drilling. It's at a currently that blue part there is at a spacing which doesn't allow it to be classified into inferred. We just have to close that up and we can get more tonnes. 56% is, at the moment, is in the indicated category, and that means that then we can start pushing this towards a reserve, converting it to reserve as well, through doing a PFS study. Mineralisation remains open along strike, both north and south, and at down dip. We've already proven that it exists further to the south, 550 metres, with some excellent hits to the south of the existing MRE. There's high-grade zones, as can be seen there in the magenta, so everything that's in magenta there is above 2 grams. And they're quite thick as well, 10 metres, 15 metres above 4, and 30 metres at 1.6 as well. The mineralisation tends to be shallower in the northern end and then dips down and becomes deeper and steeper in the southern end. And that'll be apparent too when I show the cross-sections. And just on the additional upside, so we put out a release today showing where our additional laterite upside is. We did some soil sampling last year, or reanalysing soil samples from last year for gold, and then interrogated each one of those that has some previous RAB drilling, and found that a lot of the RAB drilling picked up laterite, which under the 1990s was never really looked at because it was around 0.5 grams per tonne and just under 1, which was too low for them. But these days, with the gold price well above $6,000 Australian, that is definitely mineable and treatable. So those new targets that you see there, most of those are all laterite, just waiting to be drilled. So we're looking to get stuck into that. We've got programs of work that are under application at the moment. We're hoping to get those granted soon so that then we can get in and start drilling some more of those laterite resources. That becomes important for us because that's where we're going to have our first gold production. So just on the updated resource, and then showing you how the ore body behaves. So in the northern end there, as I said, it's shallow. It's basically the optimised pit goes to the limit of the ore body of the modelling down to the inferred resource. So to increase that and push that shell out, all we have to do is do some more drilling out there to the east. And then in the southern end, it also goes into the limit of drilling. So we haven't got to the bottom of what we can pull out with an open pit. That shell there is at $6,000 Australian. Current gold price is above that, so it's economic right at this point in time. So we plan to do some more infill and step-out drilling on the deposit, potentially concentrating on the northern ends first because that's where we get shallow, easy wins, but also, as I mentioned before, on the potential increases to the laterite resources. All of this is supporting new mine designs and development studies, which are currently underway, and then that will feed into mining proposals which will be submitted to the Mines Department. So on the development pathways, so we have a metallurgical test work. It's currently underway, but we've got initial great results from that. 88% recovery after 35 days for the laterite heap leach. With those sort of recoveries, you just wouldn't take the laterite off to a CIL plant, trucking it down the road 100 kilometres because you lose too much value. So the laterite resource currently sitting at 1 million tonnes at 0.52 for 17,700 ounces. I'll let you do your own calculations for what that is in revenue, but it's well above our current market cap, I can tell you that now. The laterite mineralisation, why we selected that, it's low capital cost to get into for heap leach. The operating costs are low as well. Industry average around $11 per tonne for processing, and because we have no pre-strip for the laterite, our mining costs should be as low as less than $5 per tonne as well. It's obviously showing rapid leach kinetics as well, so that lends into early cash flow from gold production. First 50% after 15 days means that 2 weeks after you start leaching, you should be producing gold. There's also the toll treatment options for the remainder of the resources. As I mentioned, the third-party processing plants are springing up all over the place in the Forrestania belt, and all of those will need some feed, and we hope we can provide some of that feed to them in the near future. Our applications for laterite mining proposals are underway, and we already have our mining proposals in place for the stockpiles approved. On the Gold City prospects, 20 kilometres to the south of us, there's some good hits there in historical and recent drilling as well, and that's shaping up as a good satellite project. It's also closer to the Cosmic Boy plant as well. And this is just a zoom in on the Gold City, showing the extension potential there and the hits that we've got so far in cross-section. We've still got a ways to go to work out the structural controls on the Gold City, but it's we're getting hits in most of the holes that we drill down there. Just on our lithium, so Lake Johnson Lithium Project, we had a defined exploration target in there. That was a modelled target. The drill spacing there is too wide space for a resource at the moment, but we have POWs in place to drill that on up to first resource. We've done a lot, almost, if not all, of the metallurgical test work. We've got a flow sheet set there of a hybrid flow sheet of DMS and flotation. And there's also DSO opportunity there if the lithium price stays up where it is now. Jägermeister is the extension for that. As I said before, it's possibly about the same size as Burmeister, and we're getting good hits there, all shallow, all less than 100 metres of depth as well. So just a development strategy going ahead. So the gold development streams, updated the resource, metallurgical test work underway and looking really good. Stockpiles are ready to go whenever we get an agreement for processing. Resources is open in all directions and we can keep expanding on those with drilling. continuing the advancements on the satellite projects at Gold City and at Jägermeister, and pushing all of those towards production and development. So with our near-term pathways to gold production, we're going to start with a low capex restart strategy, then our multiple processing options, which should come in next year as well, and getting early cash flow from our laterite and stockpiles to be able to feed into our other projects. It's an increasing scale opportunity, and we have long-term optionality with either gold or lithium as the prices on those improve. And if we can get two of the operations together, then that de-risks the whole company. Thank you for your attention.
Thank you, David. So 17,700 laterite times 6,400. Where's your booth?
Yes, and then come and see us in the booth.
Yeah. Where is it?
I'm not sure what the number is.
What do you mean?
We're on the left-hand side.
Genuinely.
Halfway down.
You're up the back. Okay, they can go. You've got a calculator there?
33, I think it is.
Go off the stage. Go. You've got 5 seconds. Go. Just do that calculation in your head, though. 17,700 times 6,400. That's a nice little bit of money there. Now, hot chili. Hot Chile. Come and join me on the stage, please. This is Kirsty, Sharon, everyone. Now, they're obviously doing very well because they are sponsoring our cold bar here. Big round of applause, please, to start with. Right on, team. Thank you very much.
You're welcome.
Now, this is their Vice President of Corporate Development, Kirsty. Now, they are looking at, or they're advancing a very large-scale copper development in Chile. They're increasingly being talked of in context of many different things. One of the things I find really interesting about your project is this rather long pipeline of water that you're doing. It's fascinating. Please make a welcome and let's dive into this story and think very positively about them because they are making us all these lovely cold drinks that we are enjoying. Thanks, Hot Chile.
Thanks, Chrissy. And thanks for having me and Hot Chili back to RIU Sydney. So the Hot Chili story has been a long one, 15 years developing the Costa Fuego project. And our project may not be the biggest out there yet, but what we have is a culture of discovery and determination, which has seen a major discovery made every 4 years on average for the company. So this culture has developed a billion-tonne resource and a PFS with several unique advantages. For these reasons, Hot Chili is on track to build the next Chilean copper mine. So the reason I believe this is I was previously the resource development manager for Hot Chili for 5 years. So I was involved with mineral resource estimates for Productora, Cortadera, the Costa Fuego PEA, PFS, and now the La Verde discovery and resource drill out. Hot Chili's recently made strategic changes to our management and company structure, bringing on expertise to streamline delivery of our EIA and feasibility studies of Costa Fuego and our Huasco Water asset. And despite the turbulent market conditions this year, we were able to secure a $40 million institutional funding arrangement in February. And this was following a share price re-rate of the company, which was largely driven off results from La Verde. So this increase in copper price has seen the share price re-rate of many copper developers, as you can see here, including Hot Chili. So over the last 12 months, as you can see on the graph, there's been a doubling of the mean enterprise value of copper developers since mid-2025. This increase in valuation has also seen the average price of project transactions, as well as the number of transactions increase as well. The PNAV ratios have been rising since mid-last year, both for developers like ourselves and also for copper producers. With this in the background, Hot Chili is continuing to complete its asset-level partnering process. We're focused on delivering shareholder value and also funding the project through to feasibility and beyond. So as part of my new role with Hot Chili, I have a big emphasis on growth. So I just wanted to give you an update on the 3 strategic fronts the company is advancing. The La Verde rapid drill out, the optimisation of the Costa Fuego PFS, and also our strategic water asset. So for those not familiar, Hot Chili's assets are located at low elevation on the Chilean coastline, about 600 kilometres north of Santiago. The project was recently given priority status by the new pro-mining Chilean government, and we have the only maritime concession in the Huasco region. This includes the major mining projects located high up in the Andes, 4,000 metres above us. So Hot Chili began in Chile with the Productora discovery in 2010 and followed up with the Cortadera discovery in 2019, which together make the bulk of our billion-tonne resource. This resource underpins our 2025 PFS, 80% of which is indicated classification. The project has huge natural advantages located close to a port, major highway, and the mining town of Vallenar. The central processing plant will be located at Productora, you can see in the centre, and the La Verde discovery I mentioned is located only 35 kilometres south of this. So the La Verde story is one of consolidation, discovery, and growth. Following years of efforts to joint venture this area, the tenement package surrounding a small existing oxide mine, open pit, was consolidated for the first time in 2024 by Hot Chili, and it really puts the geological puzzle together for us. The initial phase 1 resource program of 10,000 metres was started shortly after, and our discovery hole, DKP2, recorded 308 metres at 0.65 copper equivalent. At the end of this RC drilling program, we had a 0.2% copper mineralisation footprint, about 1 kilometre by 750 metres wide, and it was only limited at depth by the extent of the resource, as the RC drilling capacity, about 400 metres depth. Phase 2 diamond program started in September last year, and we quickly doubled the depth of that mineralisation. So the drilling confirmed not only the continuity of the high-grade shallow depths, but also the extension of the high-grade core at depth and a convergence as well. And we recently released our widest and highest grade intercept to date, DKD 39, with a huge 725 metres at 0.42% copper equivalent, only from 18 metres depth. So the diamond drilling program has now doubled the amount of metres we have, over 20,000 now, and it's really highlighted what a huge growth lever La Verde is for Costa Fuego, as well as for the company. And we've identified 3 areas of growth that we're focusing on. So the first, as I mentioned, is that shallow, high-grade material, often with mineralisation beginning just underneath the shallow gravel cover. We have, as you can see on the screen, we have multiple up-dip drill holes have targeted this zone, and yesterday we released one of those, DKD 40, you can see on the figure at the top left, which has confirmed continuity through a previously perceived lower grade zone, and we've actually increased that continuity through there as well, which is really encouraging. The second area of focus is the extent of that high grade core that I mentioned, both laterally and also at depth. Recent drilling that we've had has suggested that the eastern flank of this core is pushing further out quite significantly. And the final area is the extent of the maiden resource. So you can see the southern extent is quite under-drilled, underexplored, and this will be a focus area for us coming up, potentially doubling the 0.3 or 0.4% copper mineralisation footprint. So for all of these reasons, we are bringing another rig onto site, which will be starting next week, another RC rig to accelerate this growth. So since we intersected 148 metres at 0.82% copper equivalent from 70 metres in our first diamond hole, DKD 32, the focus has been on this shallow mineralisation, this high grade, and the potential for another high grade starter pit for Costa Fuego. As you can see, a few of our significant intercepts on the screen that we have within the top 200 metres of surface. So all of these, as I mentioned, are under shallow gravel cover, some starting from 4 metres, and it means it's really cost-effective open pit mining. The continuity of this mineralisation is strong, And we also have a high-grade gold zone forming on the eastern side of this high-grade core as well. It's actually the highest grade gold that we have across Costa Fuego. So this is what La Verde looked like after 10,000 metres of RC drilling. And this is what it looked like after just over 20,000 of RC and diamond. So we've doubled the depth and it's still open in many areas. And our announcement yesterday also highlighted strong copper porphyry style mineralisation across 4 drill holes, 3 shallow and the 4th at depth. And so all of these are pushing out that eastern flank and improving the continuity of the high grade as well. So we're using the same targeting approach that we developed at Cortadera, and this is what has enabled us to rapidly develop La Verde from a discovery hole to what will be a maiden resource in about 2 years. La Verde also sits within a large cluster of 3 lookalike targets, 2 of which are also undercover. The exploration team has done initial recon on these, and we're hoping to do some more detailed exploration drilling on these shortly. So the resource base of Costa Fuego is already within the top 10 of undeveloped projects outside the majors. The copper projects in this pipeline have an average grade of around 0.41, 0.42 copper equivalent. This is what is going to fuel the next copper supply. It's going to be big tons and low grade. And these projects take a long time to discover, to drill out and to develop. Hot Chili's indicated resource base has an average grade of 0.45 copper equivalent, and the addition of a higher grade open pit resource at La Verde will very likely push us towards that tier 1 status of 5 million tonnes of contained copper equivalent metal. So the Costa Fuego PFS was released last year, and it really showed the low risk and clear path to production for Costa Fuego, with these inherent advantages like the low elevation, proximity to the ports, a clean concentrate with no arsenic, and also the initial high-grade starter pit production from Productora, reducing the payback to only 4.5 years. So these features are highlighted in the PFS metrics on the screen, and with a bottom quartile capital intensity and a top quartile production capacity. This isn't a small project, and it's only going to get bigger with the addition of La Verde, but it's not going to have the startup capital of most other copper development projects out there. So commodity prices used in the PFS last year were conservative, $4.30, and we still saw a 19% IRR and a post-tax NPV of $1.2 billion. The new long-term consensus in April for copper was about $4.80, and we know with our project that for every 10-cent increase in copper price above $4.30, we add an additional $100 million US to the NPV. And the preliminary impact studies we've done on La Verde suggest there will be a significant increase to the IRR and NPV, as well as a reduction in the payback period with the addition of La Verde. So for these reasons, as well as the scale of Costa Fuego at almost 100,000 tonnes of copper metal per annum, the project's very leveraged to copper price, as you can see here. Our capital intensity is strongly linked to our low elevation. At 740 metres above sea level, we're very unique, particularly when compared to our South American peers. This is a huge natural advantage, obviously, and it impacts costs across the board, from exploration to development and onto operations. So Costa Fuego currently sits also within the top 5 of independent copper developments in terms of scale, and has a below average C1 cash cost as well. So while we aren't the biggest PFS project on this graph, we aren't looking at a $2.5 or a $3 billion startup capex. We're close to 1.3. And we have a streamlined path to production, and we're able to take advantage of this high copper price environment. So the layout for Costa Fuego is very compact, and it takes advantage of the existing infrastructure, as you can see here, and the proximity of the resources to each other. We plan to have a 20 million tonne per annum concentrator at Productora, and that will use the raw seawater supplied by stage 1 of the Huasco water project. The team is currently considering all options on how to integrate La Verde as rapidly as we can into the existing project, with metallurgical, geotech and mining engineering work streams underway at La Verde. And the team's also busy finalising our stage 1 of our EIA, which will also integrate La Verde to ensure we have both higher grade starter pit options, so Productora and La Verde, are streamlined towards permitting and production. And finally, Wasco Water is the company's strategic water asset, which it's been developing for over a decade. The Atacama is one of the water scarcest regions in the world, and you cannot take continental water out of the ground. Desalination is the only option for a lot of the copper projects in the region, and for this you need a maritime concession. Hot Chili is one of only 2 companies to be granted one in the region in the last 22 years. So we completed a PFS for Wasco Water as well in 2025, looking at a staged approach, with the stage 1 being on seawater for Costa Fuego. Test work at Productora over 10 years ago indicated we would have the same, if not better, recoveries using seawater. And obviously when we did the PFS for Cortadera, we did the same test work and found the same to be true. Initial test work from La Verde indicates that it will also be able to use raw seawater rather than desalinated, so it's obviously great for our ESG credentials. Stage 2 and 3 will follow, and that will be an expansion and development of the desalination network. So this second maritime concession is expected to be approved in Q2 this year and will unlock significant strategic asset for Hot Chili. We'll be able to supply 2,300 litres per second to the largest cluster of undeveloped copper projects in the world. And as you can see, there's some big names and some big projects on there. So this regional funding opportunity from possible water off-takers, as well as the growth opportunity with La Verde and the leverage that we'll have for Costa Fuego and Hot Chili in a time of rising copper prices, means it's a very exciting time for Hot Chili. Thank you for your time.
Thanks, Christy. Well done. Where's your accent from?
Sorry?
Where's your accent?
Melbourne.
Melbourne? Just sound like I had a little bit of something, and I thought, oh, maybe. Okay, go away.
Thank you.
Strange Melburnians. They do set oil refineries on fire down there, don't they? All right. Okay. Now, this fellow I haven't seen for a while, Will Dix. He's always good to have a yarn to, though. Bellararox is the company that we're looking into now. They've got 2 extensive projects in 2 of the world's most sought-after copper belts, surrounded by great big supergiants. I wonder what the game plan is there, Sarah. So the big question is, which one of their projects is going to become the value driver, or will they turn both of them into major assets? Will, thanks for coming up on the stage.
Thanks, Chrissy.
Give you your full 15. Please make him welcome.
Thanks, everyone. Tough act to follow, Hot Chili, but one of the good things is that we're not that far from them at one of our projects, albeit on the other side of the Chilean-Argentinian border. This is all a bit new for me. I've only been in the hot seat for about 4 or 5 weeks, so I apologise in advance if I get anything wrong, including the name of the company, which is actually Bellararox, not Bellarox. Standard disclaimer. You guys see a lot of these things, and there's been a lot. We're halfway through the conference. There's a lot more to come. You don't remember all of it, but what I'd like you to remember from this presentation is 3 things. First thing is the location of our projects. So we are in Tier 1 jurisdictions, and a lot of people use the terminology, but the key for us is who we're surrounded by. So in Argentina, we've got the Filo de Sol project to the north, which is BHP in London. We've got Barrick all around the southwest of us, and we have Atex Resources, who are a $1.2 billion company listed on the TSXV immediately to the west of us. So location, location, location. In Botswana, we're immediately along strike geologically from MMG's Khoemacau hub, which in turn is a long strike from Sandfire's Mathayo. So we've got all the big guys quite close to us. Wrong way, there we go. One of the other things is news flow. Given our Argentinian field season is restricted due to weather, because we are at altitude from about mid-September to around now, we can flip across the Atlantic into Botswana, continue working full steam ahead. So we have a cycle of 12-month news flow right the way through the year, and that's a real benefit for us. And we're a copper company. Copper's a great space to be in at the moment. Yes, we've got an epithermal silver discovery on our hands as well at the TMT project in Argentina, but fundamentally we want to find a big copper discovery. Okay, a little bit about both projects. So TMT on the left in Argentina, about 350 square kilometres. We've recently been drilling at Toro Central. We just wrapped that up a week or so ago. 47 metres at 172 grams a tonne silver with a bit of gold, bit of copper, bit of zinc in there. That's around about a 3% copper equivalent intersection. Within that, there's a high-grade zone that runs 27 metres at about 300 grams a tonne silver. Bit of copper, bit of gold. It's around a 7% copper equivalent. So a really good start at Toro Central for us. We'll talk about it in a slide shortly, but we do have a lot of assays still to come in. We are frustrated by the labs and the time it's taking us to get those, and we know shareholders are expecting them to come in. The geology is complex, and once we get all those assays, we'll be able to put together the story and tell everyone about it in more detail. Jumping across the Atlantic into Botswana, as I said, we're at the northern end of the Kalahari Copper Belt. We've got about 4,000 square kilometres there. A lot of it is unexplored, our ground, and we're pretty excited to go in there. We've recently finished a big airborne EM survey, over 1,000 square kilometres on that. We've rebuilt the team from scratch, and we're about to drill. We'll probably start drilling, I'd say, the last week of June, maybe the first week of July, but it's imminent. Bit on the corporate, so the board's well set up, lots of experience there with Neil Warburton, Chris Gale, and myself running things, but really one of the jewels for us is Chris Blazer, 10 years BHP, really clever guy, adds us a lot of value. Come and talk to him at the booth, 97, if you want to know a bit more about our projects. Recently, yesterday, in fact, we announced that we just raised another $4 million, and I mean, it's great for a junior to raise money, but for us in this case, it's where it came from. It came from 3 strategics. Jose Luis Manzano, who's a big resource investor in Argentina, he's been engaged with Chris Gale over a period of time about what we're doing, and he's decided to come in. He's brought his family office in as well, separately, and also another guy, Magnus Capital, who are out of Switzerland, often co-invests with Jose Luis, and it's a real sign of, I guess, confidence that we're going about things the right way in Argentina and also in Botswana. So TMT project in Argentina, this is sort of, I guess it's slightly to the northeast of Hot Chili, but over the peak of the Andes. We're at 3,300 metres. Not impossible, but yes, it's a challenge with some of the weather, especially as you move into winter. Our camp is well set up. We can host about 55 to 60 people there. We can run multiple rigs at the same time when we're drilling, so we are in a good spot. Speaking of being surrounded by majors, this sort of tells you all you need to know here. We're in the blue. I don't have a pointer, sorry, but you can see to the north of us is the Vicuña district where BHP and Lundin have an enormous project, 38 million tonnes of copper metal, 81 million ounces of gold. It's probably the best discovery globally in the last 30 years. We're south we still consider that we're in the Vicuña district to the south of those guys. Magotes Metals, 250 million market cap between BHP and us. To the west of us, we have Atex Resources, as I mentioned. They've got 8 million tonnes of copper and 10 million ounces of gold. And then around to the southwest of us is Barrick. Pascua-Lama, 20 million ounces, and Veladero is 11 million ounces. We actually use the Barrick access road as part of our way into TMT. So there's lots of big guys happening. They're all looking over the fence. They like what we're doing. Zooming into the southern part of our project at Toro Central, and on the right-hand side of the screen, you can see that red oval-shaped outline. That's a surface geochem anomaly that goes up to about 1,500 ppm silver. As we go to the northern end of the day site, the grades get higher. Our hole 2 that we've released is in about the midpoint of that oval shape, and as I said, 47 metres, 172 grams a tonne silver, and bits and pieces of others. On the left, you can see the section. It is on the side of the hill. We've drilled another hole from that same drill pad back the other way to test the continuity. It's geologically challenging for the guys in the field. It's not an obvious, this is where your high grade is, this is where your low grade is. There's dense areas of epithermal veining full of sulfides, galena sphalerite, the silver's in that system. And then as we go out of this sort of structural complexity, you see some zones that are less deformed, less veining. So, we will wait to get the assays back from holes 3, 4, 5 and 6. As I said, we know that they're imminent, and once we get them, we'll be able to talk about that a bit more. But it's a big system, it's a complex system. Where we sit in terms of that epithermal porphyry vertical system, we're still unravelling that, and getting all of these assays and the whole rock geochem and all of the rest of the geophysics and putting that together will help unlock value for the next field season. So that's Toro. Jumping about 20 k's to the north, we have our Tambo South prospect, where Last year, 15 months ago, we drilled a couple of holes. Both of those intersected over 400 metres at 0.1% copper. So it's not an economic discovery, but it suggests that there's metal in the system. And these porphyries and these intrusions can be quite asymmetric. So where we were on the western side of that intrusive, you can see the chargeability anomaly. We extended the geophysics to the east this season. Those results are in, and we've got a blown out chargeability anomaly out to the east. It's 3 kilometres across that coloured image. So we've got a lot of room to drill this intrusion target, this porphyry target. We have a conductive tongue coming in on the eastern side, potentially some kind of fluid pathway over there. So first thing we're going to do when we go back into TMT in September, October, is we're going to put a hole in from the eastern flank of Tambo South and see whether we've got a bit higher grade porphyry copper zone there. But 400 metres at 0.1, absolutely not economic, but a very good indicator that there's metal in the system. So that's it for TMT. I'm going to jump across the Atlantic into the Kalahari, and there's only a couple of slides on this. Full reset at the Kalahari. Where we sit, we're everything in yellow on that geology tenement plan. So we're at the northern end, the northeastern extension of the Matheo hub, the Comacao hub, where MMG are currently producing about 65,000 tonnes of copper a year. They have just agreed to develop that or increase the development there. They're investing $1 billion, and they're going to grow that to 130,000 tonnes of copper metal a year. We have a 50 kilometre by 30 kilometre tenement immediately north of those guys. This is it zoomed in, and the important thing I want you to notice from this is on the right-hand side of the screen, there's the dashed blue tram lines that run through that tenement. That is the interpreted position of the Nwakapan Dakar contact, which is the key contact stratigraphically that you need to have in order to have copper mineralisation. Everywhere in the belt, the copper mineralisation sits on that contact. It's folded and deformed, and then there's an erosional surface. The interpretation of those tram lines gives us around 180 line kilometres of prospective contact in that tenement, 50 kilometres wide, 30 kilometres of strike. And we've just finished our airborne EM survey there. We're going to go in, look at that data, identify our drilling targets, and we'll go in and we'll start drilling in late June, early July. So that's that timeline. The good thing about this is it's 12 months of work. We finished drilling in Argentina around the start of May. We hit the ground running in Botswana. Once we get to the end of our Botswana drilling program in September, unless we find something, we keep going, obviously, but in September, then we pivot back across the Atlantic into Argentina, and our team there will have everything lined up on the ground for us, ready to go. 3 take-home messages is all you need to remember. Location, where we are, who we're surrounded by. Number 2, 12 months of news flow. Argentina, pivot into Botswana, back to Argentina. We'll have a cycle right through the year. And lastly, we're a copper company. Yes, we have a silver sugar hit, but we fundamentally are looking for a large-scale copper deposit. Thank you very much for listening.
Thank you, Mr. Dix. I'm sorry for butchering the name of your company to start with, and I should know better because I interviewed Avron, who was one of the founders of the company originally. Ballara was the name of the original one in New South Wales.
Correct.
And then they added rock, because I said to him at the time, rocks, that's very funny, geology, but he said, no, it's after a rock band called Rocks, which is where it came from. So.
People call it Bella Rocks, and one of the things with working in South America is Bella is beautiful, so they think our company's called Beautiful Rocks. Yeah.
That's what I thought too, so my apologies, I should have known better. Go and have a chat with him afterwards. Thanks, Will. All right, now our next CEO, look at the smile on his face as he just launches himself up onto the stage. The rest of us were sitting there looking at what Mr. Trump was doing in the Strait of Hormuz yesterday, thinking, oh my God, this guy thing here is just thinking, yep, justifies what we've been telling them all along. We need gas here. So Carnarvon Energy is definitely bringing us back to oil and gas. This is a sector sitting right in the centre of geopolitics. Carnarvon Energy may have a little sweetener for our investment portfolio if the government gets their act together. Please make Philip Huzanga very welcome.
Thank you very much for the introduction. Those of you who were in the room first thing this morning when Rob from Austex was talking, he mentioned, who's going to be out there to drill a $50 million well offshore Australia in these days? Well, the answer is Carnarvon. We've got a well due about this time next year, and I'll get to that eventually. But Carnarvon Energy, indeed, we are an oil and gas company, and I'm aware I'm in a room full of miners, rocks, hard rocks, and obviously they're investors. But as Chrissy mentioned, given the recent noise around fuel and oil security for Australia and the implications that has for all of us, I thought it's worthwhile to present here today and give you at least a partial solution for that oil security problem in Australia. Before I get into the how, as in how to solve that, let me tell you the who, as in who we are. So Carnarvon Energy, proudly an oil and gas company, and I can say that now because it was probably just 6 or 8 weeks ago that oil wasn't particularly a loved sector. In actual fact, oil was a bit of a dirty word in round town. But given what we've seen in Hermosa Strait, that's changed. We are a relatively simple company to work out. We've got just shy of $100 million cash in the bank. We've got a liquid investment in Strike Energy of about $86 million. Now, Strike Energy, they are a West Australian-based onshore gas company. We're offshore oil, so very complementary. So together, we got liquid investments about $186 million, and we've got a market cap about $196 million. So, we've got that's really what our company is valued at, and we've got on top of that this fantastic oil discovery and oil development in Dorado. And I think what we have is a share of Australia's largest undeveloped offshore oil project, and it's an oil field that's already been found, it's been measured, it's been confirmed, it's fully drilled, fully understood, and that's really where we are. So, as I said, relatively simple to work out. Carnarvon, we're valued on our cash, valued on our investment in Strike, and that fantastic oil field is overlooked. Australia's oil supply crisis. I'm sure in a room full of miners, I'm not telling you anything new. This is just a couple of headlines that have hit the news in recent weeks, but I'm sure you've all seen very, very similar news over the past couple of weeks. The challenge is, I think, that we may not have seen the worst of it yet. There's still more to play out over the next few weeks and months. Suffice to say that Australia now recognises that we need a domestic oil supply. So while there is an oil supply crisis, Carnarvon has, at least in part, an oil supply solution. Firstly, we have 200 million barrels of discovered, appraised, tested oil at Dorado and nearby Pavo, ready for development, sitting in the ground in relatively shallow water, about 150 kilometres north of Port Hedland in West Australia. When we drilled into Dorado field back in 2018, the results were immediate. Thick oil columns, high quality reservoir rock, strong flow potential. We followed up that discovery with appraisal drilling and well testing the year after. This isn't really a marginal discovery. Everything stacks up. And this is not just us saying it. Dorado was recognised as International Exploration Well of the Year back in 2018, and the field has often been lauded as Australia's biggest oil discovery this century. This all adds up to place Dorado firmly as the largest undeveloped oil discovery in Australia. Carnarvon, we are 10% of this field, non-operated 10%. So we're 10% of Dorado and we're 20% of Pavo, the sister field. As I mentioned, Dorado has been found, tested and appraised, and it's ready for development. What we know from the noises around the oil shipping disruptions, and I personally think there's more to come, is that there's room for a large-scale domestic project like Dorado. Dorado's gone a long way towards development, with significant in-depth studies undertaken, determined how it should be developed and what the development looks like, with pre-feed work taken in 23 and 24. In 2025, when we had all that work done, we were looking at a very different environment with regards to fossil fuels, and so there's a decision to pause the project in early 25. Just to drill down a bit, Dorado not only contains 160 million barrels of oil, but significant gas quantities, and the plan is to develop that together. First of all, we'll develop the oil using standard facilities such as a floating production vessel and a wellhead platform, and we'll use the gas to enhance the oil recovery, and that gas will be re-injected down hole to be used for future gas export. We estimate that the capital necessary to get that oil out of the ground is about $2 billion, of which our share is about 10%, 200 million. We've already got 90 million of that as a contingent payment from a deal we did a couple of years ago. The rest of it we can fund, and we've got $100 million in the bank. We know this project can carry debt. And that'll get us to a development that looks about like 60,000 barrels of oil per day. Again, our share of that will be 10%, so 6,000 barrels a day. And to think about what that looks like, 6,000 barrels a day, producing at, not today's oil prices, which is, north of 100, but the long-term price of, $70 a barrel. That'd be $200 million a year revenue for Carnarvon for a company that's now valued at about a market cap of around $200 million. And it's not just Carnarvon that's talking about this project now, with recent press articles quoting the CEO of Santos, and Santos is the operator and major shareholder in this project. They're talking about how they're ready to accelerate the project if there's government and regulatory support. I think a third leg to Dorado, the first one being it's found, and the second that's ready for development, is that it's advantaged domestic barrels, right? Once Dorado's developed and producing at that rate of 60,000 barrels a day, it's going to be producing the equivalent of 850 million litres of diesel a year. That's like 10% of West Australia's diesel needs. It's going to be producing 450 million litres a year of jet fuel and 1,200 litres a year of petrol and naphtha. Naphtha is critical for things, everything from your phone to your electric cars. We know this is all necessary. Of course, Carnarvon, our specialty is in finding and developing it, not in the refineries. So we're not, this is the refined products need to be there. And again, news we're seeing more recently is a recognition that we need to get these refineries happening. And while we're proud of our discoveries in Dorado and Pavo, there's significantly more oil and gas, more Dorados to be found. With our joint venture partners, we're on track for that 2027 drilling campaign I mentioned earlier in about 12 months' time. Previously, we found oil, and behind me is a map of our permits. Previously, we found oil in the sort of bottom southern half of the permits. That's where that 200 million barrels is. And what we'll be looking to drill next year is in the northern half. And to really find out the scale of this, I've got to jump from millions of barrels to billions of barrels. We've found 0.2 billions of barrels in Dorado and Pavo, another 0.3 billion barrels in surrounding fields. But what we're looking, what the potential here is massive. It's up to 3.8, nearly 4 billion barrels of potential in the region. Now, of course, we know we've got to drill that, and we're progressing nicely to get to drilling about this time next year. So we've got we've just got to get JV approvals happening, but we've got the long lead items in place. We should be looking at contracting rig very soon. So really from a resource potential, we've just scratched the surface here. Since we've secured, the key to unlocking it here, and this has been an area that's been overlooked for a while, the key to unlocking this exploration was, high quality, modern 3D seismic data. And since we've acquired that probably in the last 10 years, we've drilled 6 wells using that with 4 successes. So a very high 67% success rate. And that really brings us back to the beginning. Carnarvon Energy, we are ready to go. We have several near-term catalysts that will drive our company and drive our share price from where we are today. And where we are today really is just our cash and our liquid investment in Strike Energy. We've got a high-impact exploration program with at least 1 well to be drilled in our permits around this time next year. A well that's drilled on the latest high-spec subsurface data that has in the past brought us very high success rates. We have Dorado, and Dorado's unusual because, like in most resource stories, the uncertainty is underground. You don't know what it is, how big it is, etc., right? But with Dorado, all that uncertainty is gone. The geology's understood. The resource defined, the subsurface works, and the oil has been known to flow at commercial rates. And we have an investment in Strike, who then has had some good news lately. So, company, we're valued on cash, we're valued on our investment in Strike, and we're ready to move. And time's up. But if you want to know more, we're right at the back. I can't remember the number, but just before you hit that very, very good barista coffee. Thanks, ALS, thanks for Sloan Coffee. So come see us, and we'll tell you more. Thank you.
Well done, Philip Buzanga. Right at the back, hey? Yep. We'll do a couple of laps, we can get our steps in as well. That'd be good. Good on you. Team, that is our morning program. We're at the halfway line now for the conference. Congratulations to those of you, people like Kay down the front there who've been here all the way through. I missed you when you came in. Have you just come here today? You weren't here yesterday, were you? You were? You were in a quieter shirt then, if you were here yesterday. Nice to see our regulars around the place. Team, we'll take about half an hour for lunch. If you've got any questions and I can help you in any way, please come and have a chin wag to me. I'm pretty easy to find. Otherwise, you hear the bell and we'll be back in with bells on. We've got 3 companies starting with K. Useless bits of information you didn't need to know for the next quarter. Hello. Just looking over the rest of the team who are in hysterics. It is session number 3, day number 2, and we've had some absolute crackers. And there's some more. I was talking to some of the guys from tomorrow morning, and there's some really, really good presentations coming up. That one at 10 o'clock tomorrow morning will be particularly good. Now, thankfully, Andrew Corbett et al., CEO of Kingston, came up and had a chat with me beforehand, and I have now discovered that I didn't do enough good due diligence. Usually the team come and talk to me before they come up on stage, but with 98 plus companies, sometimes a couple manage to slip through the cracks, but not this guy. He was very happy to run up to me and say, Chrissy, A, you haven't talked to me, and B, we are now Australia's newest copper producer. I said, why did that happen? Weren't you exploring for XYZ? He said, we may have been, but this was our intention. We've done it. So obviously there's upside for us. Let's drill into it. Make him very welcome. Give him a big round of applause because he certainly deserves it.
Working? Yep. Thank you, and appreciate everyone's support at RIU. And yes, we did produce copper 2 weeks ago, so that's the first copper production at Mineral Hill in over a decade. So we're pretty excited about where we're going, and I'm very happy to talk you through what we've achieved and what's next. There's a nice pile of copper product there. So we've had a fantastic year. Last year when I was here, we talked about where we were going, what we were doing, and we were running a process to sell a little project in PNG called Missima. So we've done that, and I'll talk to you a bit about what that's delivering for us and where we're going. We're currently producing gold and copper and silver. At the moment, gold and silver is predominantly the production for the next 2 quarters, and then the copper kicks back in. So we've done a short trial on the copper production just to confirm everything works in the plant before we start full-time copper. So we're currently drilling. We've done a resource upgrade in November last year. There's another one coming very soon, and there's a reserve update coming. So we generated $11 million of operating cash flow in the last quarter. Plus, we have the underground ramping up, and plus we have $45 million of deferred revenue still coming from the Missima divestment in PNG. Our resource base continues to grow. As I said, we've got an update coming. It's 60% measured and indicated. That is our priority number 1, to continue to grow that resource base at the moment. We've got a strong balance sheet, I've already mentioned that, and we are looking to grow. We want to grow this project, we want to double the size of it, and obviously double the cash flow as a result of that. So What do you get for $76 million? Well, you get our current cash of $25 million, plus another $7.5 million of cash in a deferred bank account, plus another $45 million of MISMA deferred, plus we sold $25 million worth of gold last quarter. So we are very cheap, very happy about what we've delivered from the project, but not happy about the share price. We have three very large shareholders, Farjoy, Quintana and Winchester, very supportive, fantastic shareholders. We did have a large shareholder sell out last quarter, which is one of the reasons our share price is down, but that's been cleared, that position's now been cleared, and Farjoy is actually now our largest shareholder. So where are we? We sit in the Cobar Basin. This is a project that historically ran for 20 years. We picked it up at the end of 21, 22. We had 18 months of tailings processing, so that was 4 years ago. We've now had over 2 years of open pit production. There's a little bit more to go there. And then we've got 6 years ahead in the underground. I think we're going to get to 10 years. We will be a polymetallic mine, so we'll be producing gold, silver, copper, lead and zinc. We are fully permanent operating. We have about 200 employees. We're located in what we think is one of the most exciting jurisdictions in New South Wales and potentially Australia for base metals and precious metals. The plant is one of our largest assets, and I say second to our people, but I'll talk more about what we're doing with our people. So the plant has been unloved over the years, and we have changed that in the last 4 years and invested now nearly $20 million in that plant, and we're now in the optimisation stage and then starting to look at the expansion stage of that. Resources are about 800,000 ounces of gold equivalent. And you can see where we sit. We sit down here in the Cobar Basin, the southern end. We're about 200 k's away from Cobar, but the Cobar Basin is large. There are 7 plants in the Cobar Basin, and we're one of the only 2 that has polymetallic, so sequential float, copper, lead, zinc and silver, and we have a CIL for gold doré as well. Same map with a few different colours. So why we've included this is because we want to point out there is a fair bit of activity. We all know that CSA transacted about a year ago for a lot of money when Harmony purchased CSA. We all know that Peel Resources has just been taken over for $214 million in the Cobar Basin. So there's plenty of activity, and what we think and where we're placed is a very strong comparison to where Peel was with their asset and recent transaction, except we've got an operating plant. We are one of the only 2 fully approved polymetallic plants in the basin, which we really want to leverage. We are very keen to look at third-party ore and start to process that, whether it's toll treating JVs or whatever arrangements we can come up with, and we think we can expand this plant to double the throughput for a very modest capital. So, a bit more history. We paid $23 million for the asset. It's delivered over $200 million of revenue to date and delivered $58 million of operating cash flow. It will pay itself off by Christmas when you include the investments we've made in the asset, and we still have a good 6 or 7 year mine life. So we're growing the production. It is modest. We did just under 4,000 ounces of gold equivalent in the quarter, so it was about 3,800. We want to get that towards that between 4,000 and 5,000 ounces of gold equivalent production next year, so that's the aim. We will ramp up the underground, deliver the copper. We've proven that recently with the 6,000 tonne trial, so we'll have multiple revenue streams. Gold is our predominantly largest commodity in terms of our revenue pie. We are drilling. I'm going to speed up because I'm going to run out of time here. So we've got 2 pits. One's already finished. The second one's got about 5 months to go, but it is quite high grade at about 2.5 grams gold and about 80 to 90 grams silver. So silver's important for us. We did a lot of silver ounces in the last quarter, about 75,000 ounces of silver, plus about 2,000 ounces of gold. So that's what drove the $11 million of operating cash flow. We are starting the underground. We've gone from 4 operators to over 40 in about 4 months. We now have 12 pieces of equipment operating. We're working double shifts now, so there's 4 panel rosters. We've got 12 pieces of equipment operating, so 2 jumbos, 2 boggers, trucks, and all the ancillary equipment. And we own all of that gear. We're paying it off through Cat Finance, and everyone works for us. So we're an owner-operator, and this is where I talk about our people. They're our number 1 asset. We continue to invest in our organisation and grow our talent. Copper production just started, so we had an opportunity to fit 6,000 tonnes of copper ore in our processing plant during the quarter, and it went very well for us. So good recoveries, 88% on the copper and 70-odd% on the gold, which is fantastic. So we're really happy with that as a first step and a first trial. We'll sell that copper concentrate this quarter, and there's a lot more of that to come. As I said, we'll start to feed the underground full-time from about October. The plant, I've mentioned this already, our first strategy with the plant was to get this up and running. We've now done that. We're now starting to optimise it. We're adding additional engineering solutions to be able to give us more throughput, give us more options around recoveries, and obviously deliver more cash flow. So we've installed a new filter press and additional float cells and additional thickeners. All of these additional assets weren't in place previously, and one of the issues with the project previously was it was constrained in the processing plant, so we're removing that bottleneck. Next financial year, we're going to start a feasibility on expanding the plant and work out how we can double the throughput. We actually have approvals to get to 700,000 tonnes per annum already. So, spoken a bit about underground. We've got 2 declines, 2 undergrounds, 2 vent systems. We've already pumped out 1, we've rehabilitated it, we're now mining in it. We've just completed a 240-metre raise bore from surface. That is that shouldn't be underestimated, pulling that off in the last quarter. We've ordered new ventilation, that gets installed this quarter, and we are ramping up. We expect to be at full production run rate during the December quarter on the underground. So our aim is to be between 25,000 and 30,000 tonnes per month from the underground by Christmas. Our second underground, I haven't even spoken about this until today before. We think we've already got our second underground. It's already got most of the infrastructure in place. This was historically mined for copper and gold. We think we can get back in there and continue to mine around the old workings and get more copper and gold out of it. But you will see there's a target there, a circle drawn. That's where that area is all unmined. And that wasn't mined back in the 90s because it was full of lead and zinc, but we're very keen to get back in there and mine that because it's a polymetallic ore body, and we're going to be very good at processing polymetallic ore bodies in the very near term. So watch this space for more to come on Jack's Hut. That's going to be our second underground. Drilling, and drilling. We're doing over 1,000 metres a month underground drilling at the moment. I just want to point out those 3 squares there. That's where we've been focused on G&H lode, high-grade copper and gold, extensions in the northern area. We've already pushed the ore bodies over 100 metres to the north, and we've also pushed in the southern square there the ore bodies into the footwall. So we're expanding this ore body. This is only one ore body. Mineral Hill has had 7 ore bodies mined over the 20 years, and not one of them is closed off or drilled out. Another view of the underground, I'm going to have to speed up here, I'm out of time, but this sort of demonstrates the polymetallic nature. So A lode is copper, lead, zinc, silver, and G&H lode is copper, gold dominant. That's our resource base. We continue to grow that. Exploration upside. So we have 1 EL to the north, which we've drilled now 3 targets on, and we're going to update the market on that shortly. But Bogon is a very interesting area for us, and so is that Yellow Mountain. And we've only just started on Yellow Mountain, so that's really soil and geochem. So just summarising, we are growing, we continue to grow. Like I said, we were 3 people when we started Kingston, we're over 200 now. We're going to have a 10-year mine life because that's what we're pushing for. We will expand this project over the future. We will grow organically, but we're definitely much looking at whether toll treating, JVs, etc. are part of our strategy as well. Thank you.
Well done, Andrew. Okay. All right, our next company up on the stage. So we've got 10 minutes, we're on to 15 minutes now. This is Copper Resources, strategically proven themselves or positioned themselves in proven mining jurisdictions. And your recent news flow, Mr. Benjamin, has proven your instincts correct, especially in South Australia with your uranium aspirations. Would you please put your hands together for Ben? And we're talking Copper Resources.
Thanks very much, Chrissy. Yeah, so at Cobra, we're exploring both tin tungsten projects and uranium projects. The tin tungsten project's in a great jurisdiction of Queensland, whilst our South Australia uranium projects are in South Australia, where there's operating uranium mines. We've got a great experienced team at Cobra. We're well financed at $3.75 million at bank, and we're going to have a significant near-term news flow as we get drilling operations underway at multiple projects. So just a quick recap on our corporate structure. So 280 million shares on issue. Share price has been around 3.5, 3.6 lately, so that gives us a market cap of 10. Strong board. Mike Haynes has been MD of many companies over the last 10, 20, 30 years. Myself, I'm a geologist, 20 years experience, so I love the exploration side. I love my projects. That's where I get stuck in. And Scott Funston, our non-executive director, is also a managing director of Expedra Resources here at the conference. So I want to talk about our Stanley Hills and Mount Garnet projects first. They're located in Queensland. They're the new shiny toy that we've just picked up in October. So that's pretty exciting. It's the new stuff. It's within the Herberton Tin District, which is about 100 k's out of Cairns. It's a past producing tin district. It's the second biggest tin producing district in Australia outside of what's going on in Tassie. It's grossly underexplored. It's had very little drilling since 1985, so it's 40 years since it's had a lot of work done on it. Extensive mineralisation across the project. Recent rock chip samplings, we hit up to 26% in rock chip sampling on the surface. So there's numerous high-grade dual targets across this prospect. Maiden drilling is getting ready to commence this current quarter. We've got a very good exposure to strong tin and tungsten prices. And as I said, we're going to have some pretty continuous news flow over the coming months. So here's our location. It's at 100 k's south of Cairns, southwest of Cairns. 432 kilometres of prospective property. As I said, there's a lot of historic mining in the district. The Kitchener Trend itself produced about 120,000 tonnes at 2.37% from 7 mines, so high-grade tin. And also the Gilmore mine produced 26,000 tonnes at 7.3% tin to 193 metres of depth. So these are some of the things we're going to follow up. They haven't had modern exploration. Neither of those two mines have been drilled since 1985. So it's something that we can really get in there with a fresh set of eyes, basically, and go after it. Significant tin mining and multiple multi-element resources remain in the district. There's tin, there's tungsten, there's silver indium, Yultania, one of our neighbours, Dover Castle, and also EQ Resources, Wolfram Camp. So it's a very polymetallic district with really strong potential. There's even a tin processing facility adjacent to our tenements, just outside our tenements. It's licensed to produce about 70,000 tonnes per annum, has 2 ore sorters on the front end of that. It's owned by a private group at the moment who are looking to upgrade that. So there's even if we can make a discovery and get some studies done, there's a future pathway to development for anything we can find. So over the last few months, we've been progressing all of our permits to get out there and drill. We're planning about a 6,000 metre program across 4 prospects: the Kitchener Trend, the Stanex prospect, the Jiminy prospect, and the Gilmore mine. And I'll talk a bit more about them as we go through. First is the Stanley Hills project, tin tungsten again. There's over 100 historical mines within the project area, only 85 holes drilled for 3,185 metres, and all that was done prior to 1985. There was a campaign in the 1970s, and then 16 holes drilled in 1985, and that's the only drilling that's been done on the whole project. As I said, we assays on this one up to 26% from our recent rock chip sampling, and about 3,000 metres of our drilling program will be targeted at these 2 projects, the Kitchener and Jiminy. So this is a long section through the Kitchener Trend. So this is where the 7 high-grade mines produced about 120,000 tonnes of ore at 2.3%. That production was basically all pre-1930, so it was mined from 1880 to 1930. A lot different to today, the way they did things, a lot smaller scale, targeting the high grade. But significant mineralisation still remains open. There's drill holes there, 10 metres at 1.3%, 54 metres at 0.45%. So there's potential for thinner high grade lodes, but also thick bulk mineable mineralisation as well. So this is the section and kind of what we're looking to drill. Initially we'll step in there and we'll target the old high grade mines. You can see these 4 blue boxes. That's kind of where we'll target initially. And we get a bit of success, proof of concept there, then we'll step out between these deposits. Mapping at the surface has shown that there's mineralisation at surface in between these mines. So we'll start targeting some of that mineralisation. If we can identify that there's continuous mineralisation over the 1.3 kilometres of trend, then we might have a system on our hands that can really get after and start drilling and building resources around. So the drilling will confirm this high-grade mineralisation, test lateral extents, test depth extents, and see if it's worth chasing to resource statuses. Now, approximately 1.3 k's to the southeast of this is the Jiminy Trend. The Jiminy Trend's about a 1.5 kilometre long soil sampling anomaly, really high tenor soil anomaly. 0.25% is the peak soil anomaly through here. It's centred across a line of load of historical mines again. And when we did our recent rock chip sampling program across this in December last year, a lot of high grade results, 26%, 12%, 9%, just all through this area. So these coincident soil, rocks and historical mines makes this a very compelling target for us to target. And to date, there's never been a single drill hole into this trend. So it's something that we're really excited to get in and get after, and hopefully to find mineralisation over the length of this soil anomaly. So I want to move down now to the Mount Garnet project. That's just the secondary tenement package to the southwest. So here we've got the old Gilmore mine, and that produced 26,000 tonnes at 7.6%. Mining ceased in 1980, and that was mined to 193 metres. It's had no exploration since 1980, and the 1980s drill holes hit things like 1 metre at 5% tin, 3 metres at 1% tin. It was predominantly a tin mine, but it also had some significant hits of tungsten. It wasn't really drilled specifically for tungsten, but they still hit 3 metres at 1.2% tungsten and 3 metres at 0.95% tungsten. So there's a significant opportunity here to discover both additional tin and also high-grade tungsten as well. We'll be drilling this in the next quarter once all approvals are received. Now, I don't know if I've got a pointer here. The Gilmore mine is in the bottom left corner of this picture. You can see it's defined by a 500 by 500 metre long soil anomaly. But to about a kilometre to the northeast of that's what we call the Stanex prospect, and that one's got a 2 kilometre by half a kilometre long soil anomaly. Again, there's widespread outcropping mineralisation, up to 21% tin along this. Historical lines of load, there's been trenching along here, and this one had 6 holes completed in the 1980s. Returning pretty significant results, 11.6 at 0.3%, but also 0.8 metres at 1.5% within that, and 1 metre at 1% tin. So from 6 holes across a 2 kilometres of strike, there's been some pretty significant results that we're looking to get in and follow up as part of our upcoming program that's looking to start in the next month or so. So in addition to that, there's some really significant tungsten anomalies across our tenement, particularly the Mount Garnet tenement. Now, we're 125 k's south of Mount Carbine, which is 41 million tonnes at 0.25% tungsten, and they're getting up and going and mining. The district originally produced historically 12,000 tonnes of tungsten, so we know it's there, but there's never really been a targeted focus on tungsten. The focus has always been on tin. We're looking to change that. We've got a crew out there at the moment doing some tungsten rock chip sampling. As you'll see from some of the historic rock chip sampling, there's some incredible numbers. There's 15% tungsten, 10% tungsten, and multiple plus 1% tungsten samples spread across the project. So we're looking to get after that and see if we can develop some targets for drilling that are tungsten based as well. It'll be the first ever tungsten targeted drilling program in this region. So it's a pretty exciting time to be in tin. I think there's a few other tin talks this week. The tin reached its all-time high during January, still sitting at 49,000 tonnes. It's 4 times the price of copper. There's some really strong market fundamentals with supply-side disruption in countries like Indonesia and Myanmar and DRC and China controlling a lot of the tin. But also the demands for tin are increasing with AI, electrification, solar energy, all these things is what tin is used for. Tin's the solder that holds electrics together. So it's a really, really important commodity for all these new technologies that are coming around. So we foresee this shortage in tin supply to continue as demand rises and production remains difficult. So here's a bit of a timeline. As I say, tungsten sampling is ongoing. There'll be follow-up tungsten sampling later. We'll be drilling within a month. And the results will be coming from that. We'll be drilling about 6,000 metres. We've got soil sampling programs ready to get underway. We're going to trial some IP, and then we'll be following up some of those tin results, hopefully before the end of the year also, with a second program. So we're pretty excited. We're going to have some pretty continuous news flow around our tin. But I don't want to forget about our uranium project. We're in a world-class district, so I want to quickly talk about our uranium project. We're in South Australia. There's 2 producing ISR mines in the immediate vicinity. Beverley's been producing uranium for 25 years. They've produced over 40 million pounds. And then Boss Energy, ASX listed, who are approximately 4 kilometres south of us is the Jason's deposit, and 17 kilometres south is the Honeymoon mine. So we're right on that same paleo channel. Just to give a bit of a zoom in, there's 50 million pounds of uranium in JORC compliant resources within that red paleo channel, which is only 35 kilometres long. And that's the Honeymoon operation and some satellite deposits. Now, when we go to what we've got all of that blue tenement to the north and the blue tenement to the south. So there's 150 kilometres of that same paleo channel that hosts 50 million pounds continuing on our property to the north and the south. There is no shortage of targets along that trend. Overall, we've got 5,000 square kilometres of this trend immediately north and south of Boss. We've got a non-compliant resource at the Oban deposit, which is our most advanced deposit. There's about 4.6 million pounds there. And we've basically been active out there drilling. We were drilling out there last month and we released some results only yesterday, which I'll jump to now. Well, firstly, during our drilling over the last 2 years, we've made 4 discoveries. The first one was, the first we'll talk about is Everest. That's where we're drilling. I'll talk about that next. But we also made discoveries at Berber. There's a 700 metres of strike at Berber, intersecting 1.6 million pounds at 1.6 metres at 1,000 ppm. So this is, sub-economic kind of grades. If we can find that over that 700 metres of strike left, then we're off to the races. Similarly at Delord, half a metre at 1,000, Shivers, half a metre at 1,000 as well. So we're really excited about the discoveries we've been able to pull together during our drilling programs there. So this is our Everest trend. So you see on the bottom of this one, you can see the tenement boundary with Boss. So this prospect is just 4 kilometres north of the 12 million pound Jason deposit and 17 kilometres north of the Honeymoon operating mine. And we were out there drilling this last month, and we announced that we've extended the mineralised trend that we discovered at Everest in 2025 by 2K, so by 50%. So we've now got 6 kilometres of mineralised strike in the same paleo channel as Boss's deposit. We hit our biggest, thickest and highest grade results at Everest to date last month, with a result of 1.5 metres, 790 ppm. And that had a high grade intercept of 0.6 at 1,600. So we're really excited about some of the grades we've been able to pull out of Everest and its proximity to producing mines and within a world-class district. One of the things we particularly like about this is where the highest grade mineralisation was, the channel starts to bend. So we did another line off to the west, and we started to hit some significant mineralisation over there, more in the 0.6, 0.8 metres at about 500 ppm. But this was drilled as a 1 kilometre step out from those other holes. And we're really excited by this prospect because paleo channels, when they start to bend, is often when you start to get your precipitation of uranium. Boss itself sits, their Honeymoon mine sits on a bend in the paleo channel. So we're really excited about following this up. And this here shows the Oban. This is where our resource is located, where all that the more advanced drilling's been. There's about 4.6 million pounds there, and some of our discoveries to the northeast at Shivers, and then to the southwest is where we've made discoveries at Delord and Berber. So it's all in a pretty similar area, and we're looking to really progress that. So just as a quick summary, we're a diversified critical minerals explorer. We're going to be exploring aggressively in Queensland. We've got a very continuous news flow coming out of Queensland with our tin and tungsten at a time when those commodities are extremely high. And we're also exploring successfully at a world-class uranium district immediately north of an operating uranium mine in Boss, all with a market cap of 10 million, a lot of upside for you investors out there. Thank you.
Well done. Put your hands together for him. Well done, Benjamin. All right, next up, Corazon Mining, who could, by some of us, be described as an attractive entry point to WA Gold compared to its peers. Do you like that screen? Does that look all right?
I didn't know if I'd use my glasses or not, so I had to quickly check. That was all.
Pain, isn't it? I know. All right, so these guys have got a really interesting current valuation. They've got a very strategic share consolidation to boot as well. So let us see if he can turn us as a could be to a yes, we're in on the story. This is Simon, everyone, Simon Coyle, and he is the MD at Corazon.
Thank you very much, and good afternoon, everybody. Corazon Mining, thanks again for that great intro. I joined Corazon in August last year. We've turned the company now into very much a WA-focused gold-centric company. As you can see there, we've got a couple of really good projects within Western Australia, up between Meekatharra and Newman, both the Two Pools and the Feathercap projects, which I'll delve into a bit further in detail. But historically drilled, haven't been unloved in companies or sitting around for quite a long time. We've just recently done a diamond program at Two Pools, which is giving us some really good structural understanding. Look at that. The bottom one there, I think, is the biggest one. 72 million, 74 million shares in issue currently. We're currently sitting at 12 million market cap. I say, and it's something you hear me say here a few times, undervalued for where we are now and where we're going in the future as well. Recently, Warwick Clantby announced this week has joined the board. Very experienced geologist, so formally like to welcome him on board now. He has been sitting in the background assisting us in a technical advisory position. He's now come in as a full-time non-exec independent director, which is fantastic. It really complements our current board. The rest of us are all mining engineers, so it's good to have the geology and technical point of view coming in and really probably put the mining engineers in their place some days. As I said, 10 mil market cap. We're really trading in a really undervalued position as we speak. This one here is really just to show what we've done in the last 9 months since I came on board and we've entered the Two Pools project in. We're not going to sit around and wait. We're going to make things happen. We've expanded our land package up there in the north a couple of times with some M&A as well as our own pegging of some ground. We've done 2 cap raises. We've got funding in the bank at the moment, good to go for the next drill program as well. So, like I said, 9 months, we've turned the company around. We've done what we've done. We've put ourselves in a good position. Delving into our projects, Two Pools, Feathercap, great projects in great regions. If you have a look at what we're doing here, we're picking up projects within WA that are near operating mills. I'm a mining engineer, not a processing point of view. In mining, it's easy to some degree getting out of the ground when you're putting it into a plant where it starts getting difficult. So there's a lot of bigger companies around at the moment who are doing that, so in my mind, let them do that. And we're looking at trying to do a toll treat option in one of these mills here. Fortnum's just down the road from our Feathercap project, and then Plutonic's Catalyst is just down the road from our Two Pools project. As you can see, some of the grades there, some outstanding historical grades, which we're following up at the moment. Feathercap, that 20 metres at 3, and then the 35 at 1.5 is on the tenement boundary of the Peak Hill asset, which Great Boulder just picked up off Westgold recently. And I'll go into that a bit further as well. But just a good overview. We're in a really good jurisdiction of WA gold, and to me, really underexplored area as well. Two Pools. We've broken it down now into 2 areas. So originally we started just with Two Pools. We've now got Two Pools North and Two Pools South due to the size of the package we picked up. In August, we started with 192 square k's we brought in when we've entered the project in. That area now is about 530 square k's. As I said, that's through some acquisitions. So we did a recently announced a deal with RIU, which we picked up some of that ground in the Two Pools South area. And a lot of that was coming from the De Beers data that they had in-house and looking at some sedimentary data and showed there is gold prospectivity there. The ground was open. IGO then put an application over it, and we end up picking that up off them. There's also 5 kilometres there of a mapped greenstone that needs to follow up. And then to the Two Pools North area, which we started originally. So we had the two tenements which were granted back in October last year. One of the tenements, another one just got granted yesterday, so which is fantastic. We open up ourselves some more ground and start exploring. And that one's one of the due west there. That hasn't had any modern exploration on it, right? But we have seen through geophysical data and a reinterpretation that there is definitely greenstone under this granite overthrust. The Two Pools Gold Project, and this just sort of shows the quantum and the size of the package we've got and where we're actually concentrating ourselves at the moment. If you look at the insert, that is in that little square you can see in the middle of the total package, which is, it's probably like a 10 by 10 sort of area over that whole 530 square k's. We're really delving into that because that has been where a lot of the historical work has been done, and we're picking that old data up and running forward with it. And what we've seen there is a 4 kilometre surface anomaly really, really prospective for gold. There's been some drilling, but a lot of it has been sort of sub 75 metres, so really just in the weathered zone. Hasn't really touched the fresh yet, and that's what we're looking at doing and bringing that open. So our mating drilling program, which I touched on, we have just completed that. We're still waiting for the assays to come back, and I'll jump into that in the next slide. But again, highlighting some of these high-grade historical results. There is an open pit there for sure. We've had a look at that. We've got to get that into a resource, which is not done yet, but there's definitely ounces in the ground there, and we'll wrap that up in the coming months. Just jumping into the diamond program. A lot of people have asked the question, why did you go straight out with the diamond drilling? Why did you not go do RC drilling? Quick response to that is there's been a lot of RC drilling, a lot of RAB drilling done previously. We didn't want to go and repeat what's been done. To do the diamond, there has been none in that area. So for us, it was to get an understanding of the structural side of what's going on with the mineralisation, and we definitely got that, to the point now that what we originally thought was happening was a northwest striking quartz veins. They are definitely there, but there's also an east-west cutting structure coming through, and that's what we're seeing the mineralisation is in that east-west structure. So it's giving us a really good understanding to move forward. We're now putting the plans in place and the wheels are in motion now to get that RC program, follow-up RC program occurring early June, which will then go probably do 2,000 to 2,500 metres initially, and then we'll start building on that. But this project is going to be amazing. Another thing which we picked up in the core, which we hadn't realised previously, and this Jamie, our exploration manager, will be able to explain it to you better from a technical point of view, but there was a large pegmatite at about 150 metres deep in that hole 4, you can see on the right, which was over a 40 to 50 metre intercept. We're still waiting to see if that comes back with any spodumene in it. Not holding my breath by any means, but what it has told us is that in terms of structurally wise, that's what's going on, and that was what is that northwest trend, which thought was actually where the gold veins were heading. So really exciting times ahead for Tupools, and as I said, it's a small area of our larger package in that northern part of our program. Feathercap. Now, Feathercap's interesting on its own. I touched on the Great Boulder deal that they did, got announced this week on Peak Hill. Peak Hill's a cracking asset. Well done, Pato, you did well there, mate, to get that. I think it's going to really go well, 480,000 ounces there. The biggest thing for us about that is the Durack deposit, which was in that Peak Hill package, is contiguous to our Durack East. You also see that there's a Murphy's Creek there, which is a soil anomaly we've picked up. That is along that whole strike. There's about a 15k strike there, and we've got, say, 7 of it on both sides as well. So it really shows that in Feathercap there's going to be some upside. In the middle of Feathercap, there's Wembley, that area there. There's a mining lease granted in that. It's all oxide. Some of the intercepts, which I'll now go to on this page here. Wembley there, you've got 7 metres at 6 grams from 6 metres. That has never been followed up. Right, so again, there's historical drilling that sat there back sort of in the mid-2000s, where obviously the gold price was a different situation than it is now. Everyone was chasing the million ounces back then. You don't need a million ounces now to make money in these sort of projects, and that's what we're looking at. How do we actually add value and get the economic upside out of these? There's quite a lot of walk-up dual targets at Feathercap. We've got 5 of those sitting there. We're working through currently in the moment with Heritage to get the Heritage surveys complete, and as soon as that's done, we'll be on ground there with an RC rig and going pretty hard in this area. But yeah, so anyway, and then Westgold coming in there with Great Boulder as well, shows that there's room to move, and what they're doing with a lot of juniors around I think is fantastic. That potentially opens up Fortnum and then Bluebird for us as well if that was the case. I said that there's these 2 soil anomalies. Again, we've taken apart all the historical data and tried to understand it in more detail while we're waiting to get on ground. We've found these 2 standout surface anomalies which will follow up. There is one of these holes here finished in mineralisation again, and there's isolated, so there's nothing being followed up there either, and it's all in oxide material too, right? Oxide material, 1.5 grams per tonne, Fortnum's 40 k's away. It makes sense, that makes money. Just a quick timeline of what we're doing coming up over the coming 12 months. Tupools is our main focus, as I said, for now. That diamond drilling, we'll follow that up with an RC program, which we should get on ground in June. Just getting that all organised, as I say. That will then generate more news flow on the back of that. We'll then continue that drilling and expand the understanding in that area on itself. Feathercap, yes, again, there's another area we need to get into. There is 5 walk-up dual targets there, as I touched on. We'll be going into the Durack Jigsaw area first, and then follow that with Wembley, and just really get an understanding again of that mineralisation. And then from there, we'll move forward with that. You know, we've got 2 projects which we can push forward with operating mills, as I say, within those areas. And then the bottom one there, so you know, we've been fairly active in the last 9 months. We're not going to sit around and wait. I think ounces in a company at the moment, which are economical, sitting on a mining lease makes sense. You don't need 500,000, you don't need 1 million ounces to make money, especially to a junior at our stage. My background is strong operational. I quite like digging holes and getting it out of the ground. I can see the value in that, not only for the company, but obviously for the shareholders in the background. So we're continually looking at different assets across WA within the gold sector, looking at assets that have ounces on a mining lease near operating mills. That is the strategy. That's what we'll continue to do. So yeah, touching on that again, look, undervalued. I've said it 3-4 times. Please have a look at what we're doing. 10, 12 mil market cap sitting around there at the moment. We won't be sitting there for very long, I'll tell you that right now. We've got 2 great projects up north there, near operating mills that have definitely got ounces in them now. We just need to pull it all together, get a resource out on both of those. We are continually looking at other assets around WA. Gold is the focus, and gold at the moment makes more sense being out of the ground than in the ground. That's it for me. I'm going to be well under the 15 minutes, but thank you very much, everybody, and enjoy the rest of the day.
Well, you have lots more to get through there, Simon. Okay, we will move down now to, here's a question for you. Could the Canadians build the most competitive steel business in the world? Could they do that? No, it may not have been the first thing that you asked yourself when you got up this morning, admittedly, but now there's a second question for you. How? And that is where our next company, and it's DR Pellets, think they have the answer. I've been looking at this small container, and that's probably the hint, isn't it? That's what we're going to talk about. This is the MD of Iron Bear Resources, Paul Barron. Would you please make him welcome? And we'll find out what's in the little glass container.
Thank you very much for your attention. So I'm going to take you to a journey to the great north of Canada, so moving away from the desertic areas of Australia. So our flagship project is a magnetite iron ore project in the Labrador Trough. And I would like you to take away 3 main highlights from this project. The first one is that iron ore is an infrastructure game. We are located in a place called Shefferville, which is in the Labrador Trough. Sorry, is the sound not working? Is this better? Yep, all good.
I'm just going to give you this. I'm just making executive. You can hold that. One hand up.
Thank you very much. My apologies. I'm going to replay all of this. So our flagship project is a magnetite project, an iron ore project in the Labrador Trough in Canada. We're located 35 km from a town called Shefferville, which is a historical mining town. So there are 3 key things that I would like you to take away about our flagship project, Iron Bear. The first one is its location. It's located near to heavy haul rail. So there's a heavy haul railway which runs all the way down from Shefferville down to Sept-Îles on Pointe Noire. And at these locations, there are 2 iron ore deep sea export ports, which are all open access. And iron ore is, if you're familiar with iron ore, is an infrastructure game. We're also next to Churchill Falls, which is one of the world's largest hydro plants. There's 5 gigawatts of power available there. We do have access to very cheap, very plentiful hydropower at a price of 4 cents per kilowatt hour, which is 10 times cheaper, for example, than what FMG has for a similar project called Iron Bridge in the Pilbara. And that actually gives us a big sort of economic boost in terms of our cost base. The second thing I would like you to take away is the size and quality of the resource. So we've got a JORC-compliant resource of 16 billion tonnes, just below 30% Fe, with a very substantial indicated portion of that. If you ranked that resource compared to the largest iron ore producing companies in the world, we would be somewhere around number 5. So this is a world-class resource in terms of size, but its most exciting dimension is actually the quality. This is a resource which can produce some of the finest and most value-add iron ore products in the world. And in particular, we're able to produce direct reduction pellets. So I'm going to actually show you what these are. This, for us, is the sound of success. These direct reduction pellets basically sell for $200 to $250 a ton, whereby conventional iron ore, the benchmark iron ore that you always hear about, sells for about $100 a ton. So you've got a premium of $100 to $150 a ton, and your additional conversion costs to go from a concentrate to a pellet are about $15 a ton. So the fact that we've been able to produce these direct reduction pellets, we built a pilot plant in Quebec City, which is about 500 k's away, essentially to the west, if you look at the map. And we produced a ton of these pellets. And these pellets are the reason, and that brings me to the final thing I'd like you to take away, is the fact that this project is supported by a major company, Vale, which is the world's largest producer of iron ore. And so Vale is essentially funding this project until decision to mine. I'll give you a little bit more flavor of why that is, but essentially we have backing and we can develop this project with actually no dilution. And the reason is because of these iron ore pellets. So one thing I will flag rapidly is we did a scoping study which was issued in February last year. You can see the numbers up on screen. NPV 10 billion, massive IRR, production of about 25 million tons, leveraging existing infrastructure and new infrastructure. The challenge for all these projects is the very high capex and the high development costs. And the way that we have addressed this is with our deal with Vale. So I'll say a few words about that. So Vale has a market cap today of roughly $80 billion US. They're a Brazilian company. In 2025, they're the world's largest producer of iron ore. And they are essentially supporting this project through what is a farm-in agreement in 2 phases. So essentially in phase 1, they're providing us with $18 million US. It's essentially focused on de-risking. Most of that de-risking has been completed to date. And that flows into a pre-feasibility study, which is the key deliverable to confirm the economics, which takes us into phase 2. When Vale elects to go to phase 2, they own 30% of the company. When they get to decision to mine, they will end up with 75% of the company. At that point in time, and let's say that's 3 to 5 years away, then Vale has the choice of buying out the minority shareholder, which is IBR. And if you consider the NPV I've just mentioned, that's a transaction of $2.5 to $3 billion US, which would flow back to the shareholders of IBR, or alternatively, they can take us into production with no dilution. Right, so that is the key deal which underpins the project. The other dimension that I would like to focus on, and I'm going to skip the bit about the resources, is the quality of the product. So I mentioned that we built a pilot plant, we produced concentrate, and we produced these wonderful pellets that I so much love, even if they look like kangaroo droppings to some people, but to me they look like gold pellets. So we did produce a direct reduction concentrate and a blast furnace concentrate. If you look at these specifications, 71% Fe, very low silica and alumina, no deleterious elements, you've got one of the best iron ores concentrates available in the world. And these products carry very high premiums, which are increasing because high-grade iron ore is actually depleting. And we were able to produce direct reduction pellets. We're one of the very few companies in the world. I'll skip the specs, but I'll say a few words about the market. And these direct reduction pellets are incredibly strategic, and I'm going to take a few moments to explain why. If you look at the steel making market, so that's the pie chart which is on the left-hand side. There's 3 ways that you can make steel. You can make steel via the blast furnace route, which is roughly 71% of steel making today, and that uses coal, metallurgical coal, so most of the production in China is through this route. You can produce steel through scrap steel is infinitely recyclable, and that's 21% of world steel production, and in a developed country, that's about 50%, so it depends where you're on that curve and how much scrap you have available. And then that 8%, which is what we're interested in, is what's called the direct reduction route, and that's basically making steel via natural gas. If you make steel via natural gas, you can save money because natural gas is cheap, but you also have half the carbon footprint of making steel via the blast furnace route. The catch, though, is that if you want to make steel via the natural gas route, you need direct reduction pellets. You basically need these things. And the world is moving rapidly towards green steel, cleaner steel production. And on the right-hand side, you can actually see the market predictions for the market for direct reduction pellets. So that market today is about 180 million tons, about 8% of the market. That's anticipated to grow in less than a decade to 266 million tons, and double over the next 12 years or so. So it's a niche within the iron ore market. It's a very high value niche, and it's a very high growth niche. And if you look at people who produce direct reduction pellets today, you've got only three companies. You've got IOC, which is next to us, which is Rio Tinto. You've got Samarco, which is a JV between BHP and Vale. And you've got Vale. And Vale actually has 60% of the direct reduction market. And the reason that they transacted with us is because they want to continue controlling this market, which is the most profitable and the highest growth niche in the iron ore market. So that's essentially why we exist, and that's our noble purpose. What I'll do now is just show you a bit what we have ahead of us. I'll just quickly show you our strategic development plan. Voila, so this is our strategic plan on a page. The orange chevrons describes phase 1, and the blue chevron describes phase 2. These are the deliverables which are contractual with Vale, and you can see the things that we've completed to date. So we've completed all of the de-risking studies, tailings, rail, power, etc. And we're completing our pre-feasibility study, which is being completed by Hatch, which should be available and made public essentially around the end of June, right? And that's the key deliverable that will enable this project to then flow into phase 2, which is the bankable feasibility study and all the approvals process. One thing I will flag is that the timelines for phase 2 are a function of the approvals and the environmental approvals in particular, and putting in place agreements with First Nations. And we have a timeline which varies between 3 to 5 years, depending on the approvals process. There's been legislation passed in Canada which shortens the approvals process from 5 to 3 years in theory, but we have planned for 5 because those new pieces of legislation haven't been tested. But in any case, from the perspective of potential investors, there's a news flow ahead of us. There's a transitions to phase 2. There's a pre-feasibility study, which is the key deliverable in terms of economics to go to phase 2, and that is looking very exciting. So I'll finish off maybe with a few words on the corporate side of our business. So Iron Bear Resources is a listed ASX company. We have a market cap of about 55 to 60 million. Our current share price is 5.7 cents. If you consider the upside potential, well, we're trending towards a cash transaction with the world's largest iron ore company, which, if everything goes to plan, would bring the share price between $2 and $3, right? And it's not really dependent on anything else but delivering what is a fairly straightforward operational plan and delivering a project which is large, which requires huge amounts of capex, but which is supported by one of the largest mining companies in the world today. And so we do have the balance sheet to deliver the project. So that's pretty much what I wanted to convey to everyone. Iron ore is a much more exciting commodity than what people imagine. It's an industry which has extremely high EBITDA margins. If you look at all the iron ore players today, they all have EBITDA margins well in excess of 100%. And it's an industry which has high barriers to entry precisely because of the infrastructure and the capital requirements. But when you're in this industry, the margins are actually higher than any other commodity out there. So it is exciting, and there's not that many opportunities to invest in this space. Thank you very much.
Thank you very much, Paul. All right, stay with us for this next one, because this is how the old micro-cap gold story can get a little bit interesting. Is it Tarana Resources? Tarana Resources. So these guys have just drilled through an old New South Wales gold mine, and instead of empty ground, they've hit gold everywhere. Gold, 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 and more gold. This looks like a horrible issue that you've got with you over there. And both sides of where it was already mined, and includes high-grade hits over some pretty meaningful widths. So I suppose the question is, sir, doctor, did the old-timers leave behind more than what we thought? And if so, that could be quite a bonus. Would you please welcome Dr. Greg Partington to tell us about the Tarana story?
Okay. Well, thanks for that introduction. There's more to the story. As always. So what I want to do today, we're a fairly new company, so there's a lot of people still don't know us, is introduce Tarana to everybody, and also give an update on the exploration we've been doing over the last 3 or 4 months. The usual disclaimer, the important thing in there is the ASX announcements, which are referenced for this, so you can chase up further information about what I'm going to say. So we successfully relisted on the ASX on the 25th of November last year, raised $5 million, 2 cents a share, and we've used that money to do the exploration I'm going to talk about in a minute. We've got a tight shareholder register, and we've got 3 Australian projects. The one that was just mentioned, Christmas Gift. We're focusing on copper and gold. Christmas Gift is being called our flagship project, but I believe, and I'll show you that in a minute, that one of our South Australian projects could overtake that fairly quickly. The South Australian projects are prospective for copper, gold, silver, and rare earths. Because of this exploration, we've got exploration momentum now, so we've got news flow coming out, and we'll have news flow coming out for the rest of the year, basically. So, Christmas Gift, and I probably don't need to say too much more about that because it's already been said in the introduction, but it's actually located close to Cootamundra in the Lachlan Fold Belt. We're surrounded by lots of big mines, a few gold mines, producing gold mines. So we've got the infrastructure and the potential to actually get any gold that we find mined and processed. So it was an underground project mined by the old timers. They mined 30,000 ounces at 18 grams. So the actual strike extent of the historic workings is about 200 meters, depth 100 meters. There's been some historic exploration done, and all that drilling has been focused on that 200 meters effectively. Importantly, only 2 holes have been drilled deeper than 150 meters. So obviously within that 200 meters, there's the potential for depth extensions. But there's also potential for long strike extensions, which I'll show in a second. The other important thing to remember is the last time this was explored, the gold price was $815 an ounce. So quite clearly, times have changed. So we've done some diamond drilling there, basically to do some QA/QC for JORC, where we've drilled back into the old workings. We want to be able to use the historic drilling in any future resource estimation, so that's why that was done. We also drilled 2 holes to the south and to the north to see if there are any extensions. Did the old timers leave mineralization behind? So we finished that drilling in February. The 2 holes that we're supposed to drill into the old workings, get through the old workings. There's been delays at the labs, and I think everybody's been suffering from that. So what we found there was basically that hole also intersected another stope, and there was historic ore that was left behind as grading 23 grams per ton on the edge of that stope. When you combine the 2 intersections together on either side of that stope, it's about 31 meters of gold mineralization. So to answer the question, did they leave any behind? They left lots behind. And it's among these intersections are among the best gram meter intersections recorded at the project to date. So we're going to be getting those gold assays all back by the end of May. The lab has promised me. And we'll also be getting zinc and copper assays, because this is another interesting thing about the project, which I'll show you now. Oh, go back. So the photo up there is basically the reef. That's what the old timers called the reef. It's quartz carbonate alteration, and that's where the high-grade gold is. But that's surrounded by this sphalerite and chalcopyrite mineralization. And as you can see in that photo, the zinc mineralization is very high grade there. So we're not sure what that means from an economic perspective, but we need to get the assays back before we know. But one of the important things about being able to see zinc and copper is that it tells us where gold is going to be. So for that northern hole, we intersected the reef, which is what that photograph is there, but we also intersected sphalerite. So we're expecting to get similar gold grades to what we hit in the old mine area. So again, yes, the old timers have left more behind for us. So we also wanted to see if there were extensions to the mineralization. And so we've done a big soil sampling program. We analyzed the soil samples by PXRF, so a handheld PXRF machine. This means we've got the zinc and copper assays. And because the drilling has told us that zinc and copper tells you where gold is, we can actually make some inferences on where new mineralization might be found for gold. And on the right here, this is the map showing the gold from historic sampling. The next map along is zinc, and the shape of the zinc anomaly is exactly the same as the gold anomaly. The new intersection, there's a zinc anomaly there. And then to the north, there's another 3 major zinc anomalies. What's more exciting, really, is all these anomalies to the west, and those were completely unexpected. So Christmas gift is ticking the box. It's answered the question, have the old timers left mineralization behind? There's a lot of gold left behind for us to find. And that's what we're going to be doing. We've got land access agreement signed, and we'll be continuing drilling and news flow coming out over the rest of the year. So we're excited about Christmas gift, but I'm actually even more excited about Walperuta. I believe that Walperuta has the potential to be a company maker for Torina, that we're going to find something new here. This will be a new discovery. It's in the Curnamona province, where Havilah Resources have got 2 of the best undeveloped gold and copper projects in Australia, I believe. So does Samphire Resources, because they've just done a deal with them. So our Walperuta project is just to the south and west of those 2 projects. It looks like it's an IOCG copper gold cobalt system, and it's been previously overlooked by explorers in that area, particularly in the older days, because people were looking for Olympic dams. This isn't Olympic Dam, but it looks very much like the Mount Isa style IOCG mineralization, which is obviously a good thing to find. So the important thing from this slide is that the host rocks to the mineralization where the old timers have mined aren't magnetic. Where you get the copper mineralization, you also get magnetite, so it's magnetic. So we can actually use geophysics. This is the first time in my career where I've been able to use geophysics to actually find mineralization, to actually say where the mineralization is. So what we've done is we've got some detailed magnetics, done 3D targeting on it, and basically we can map the known mineralization, but we found a larger, much larger anomaly down dip to the southeast, which overlaps with the gravity anomaly, which is exactly what you want to find when you're looking for IOCGs. So what it actually looks like in section is the green is the known breccia, so that's from the drilling, and the red is the copper. It's dipping back to this large anomaly sitting at depth. That's only 70 meters down. So it doesn't prohibit you developing it, but it certainly hides it from any of the modern geochemical type techniques. Gravity is telling the same story. So this, for me, is almost a perfect IOCG style target. So when we actually look at it on surface, the scale of that target is around about 2 kilometers long, 500 meters wide, and 700 meters from top to bottom. It's magnetic. It can only be magnetite. That's about 1 billion tons of magnetite. If you've got the same amount of copper associated with the magnetics there, the magnetite, that's an awful lot of copper too. That's why we believe this could be a company maker for Terina. Interestingly, just like other all IOCG systems, there's other targets immediately around Walperuta. So if this actually proves to be true, we've got a lot of work ahead of us. So Walperuta, for me, has ticked the box. Walperuta has got scale. It could be very, very big. We just now need to do the drilling to see if it's got the grade that we need in terms of copper. And again, like Christmas Gift, the copper price when it was last looked at was around about $8,000 a ton. It's more than double that now, and same with gold. So the economics of the whole project have changed dramatically. And we've got another project which is even more grassroots, but probably just as compelling, just south of where Walperuta is. So it's still in South Australia, same place, same area, but it's for sedimentary copper mineralization, which has a silver component to it. We did desktop modeling out in the field, and we found copper sticking out of the ground in one of our targets that's 1 kilometer long. It hasn't got a rock chip sample on it, apart from the samples we've just taken, which show high copper, but also high silver. So it's showing that sedimentary signature. This is a very compelling target, but unfortunately, Walperuta is taking all the thunder out of its sails at the moment. So, given our share price and our market capitalization, at the moment, with the sort of news flow that's likely to come out, so our market cap's around about $9 million, with a new discovery like Walperuta, that will change the way the market looks at Terina Resources quite significantly. So what we're going to be doing is looking at reporting on the soil and soil sampling and drilling from Christmas Gift in the next 3-4 weeks. We're doing work out at Walperuta at the moment to try and optimize the drill targeting so that we make sure that the first hole we drill will hit mineralization. So we'll be reporting on that, probably in the same time frame. Then we'll be starting to report on what we're going to do, how we're going to do the drilling to test what the old timers left behind at Christmas Gift, and then hopefully start drilling resource type drilling at Christmas Gift to actually proving up a resource there, which obviously will add value to the company just based on that. But then the diamond drilling that we need to do at Walperuta, which should then end up in a discovery hole, is really the main game in terms of what we're doing. So that should all happen in the next 4 months with luck. So if you're interested in Terina, please come and see me at the booth, and I can certainly show you some of the things that we're doing in terms of the 3D work at Walperuta, and also give you an idea of what has been left behind the old timers at Christmas Gift. Hope that answered your question.
Well done, thank you, yes. The second one does look very interesting indeed. All right, $1 billion. and free cash flow over 6 years. We'd like that, wouldn't we? Hello, Kerry. That'd be nice, wouldn't it? That's why you're here. It's gold. All right. And I'd like to be invested in a company that could achieve that. Brightstar apparently is headed that way. Come on, Alex Rivera, smile a bit more than that, mate. It's a big job, but you can do it. Ambitious, they said, ambitious, but you've had a very successful equitable capital raising recently, which, given the current climate, as we all know, is no small feat. So let's Alex tell us the story and see if we want to hop on board. If you're already invested, see why you're smiling in the audience. Welcome, Alex.
Thank you, Chrissy. Thank you, everybody, for listening to the Brightstar story and the RIU team for the opportunity to present. So Brightstar, we are a West Australian-focused gold miner and developer. We have 2 key project areas located in the goldfields of WA. Tier 1 destination and jurisdiction for mining. Our 2 key projects, our Goldfields project, we've got a little over 1.6 million ounces in resources, and our flagship asset, Sandstone, with about 2.4 million ounces. So as a group, as a business, we've got over 4 million ounces of resources. Goldfields is our most developed, our most advanced project. That is the project that is fully funded for development, which is commencing now, and would see us producing first gold next year. Sandstone, whilst it's a little bit further back in the development queue, is certainly shaping up as a very material, potentially tier 1, West Australian gold development story, and is kind of the flagship project for Brightstar. Our objective over the next few years is to build the Goldfields hub and then build Sandstone, and targeting to be a top 10 Australian gold producer with a production profile north of 200,000 ounces per annum. We are fully funded for the development of the Goldfields project. That would see us commencing construction now with first gold in June of next year. We will be producing about 75,000 ounces per annum for a minimum mine life of 6 years to start with. We see real potential for that to continue, and looking for mine life extensions in the short term. We are fully funded for that. We did a successful equity capital raising earlier in the year and also completed our debt financing package as well. So really well financed and funded for this project. The capital costs for the business are around about $200 million, and we've got about $330 million of liquidity. So we have a fantastic balance sheet to execute on this project and also continue to move Sandstone forward towards production. From a cash flow perspective, it's about $1 billion of free cash flow over those 6 years at $6,000 Aussie, so below the current spot price. Fantastic return on investment, IRR of 74%. This project is very fun. It's funded, but very fundable, and we're about to commence construction. The objective for us is to use the cash flow generated from Goldfields to help unlock and build Sandstone. And that is a really nuanced point here that Brightstar is kind of in rarefied air, that there's not any other development stories that I can see out there that have a fully financed gold project that's going into construction now, and then in the fullness of time have the more material, more valuable asset coming into production thereafter and can be funded from the first project. So very nuanced here that Brightstar's got 2 near-term development stories within the same business. This is the strategy on a page. Essentially, it's our target 200 strategy of being a plus 200,000 ounce producer. Really looking to use the Goldfields development as the first cab off the rank. As I mentioned, about 75,000 ounces per annum of production for 6 years. We are constructing our own processing plant out in Laverton. That's an important point in that we have previously been mining and toll milling, and this is now, I suppose, an advancement of our business model where we're migrating from being a miner and toll treating through other people's processing infrastructure towards building our own. Really what that delivers us is being masters of our own destiny. In the fullness of time, looking to bring Sandstone online over the coming years, and that's certainly shaping up as could be quite a material asset. 2.4 million ounces in Sandstone, fantastic kind of mining history, last mined in 2010, and has really lacked systematic exploration since then. So the opportunity for us is to continue to grow that, improve the quality of that project, and take that towards production. Of the 2.4 million ounces, we have 1.6 million located in the top 150 metres from surface. So this is a very shallow, very under-drilled project, and certainly presents as a material upside. Quickly looking at the corporate snapshot, we're about a $440 million market cap. We ended the quarter with $160 million cash. We've got no debt drawn, and we've got the undrawn bond there for $120 million US. So a fantastic liquidity position to go on through this development and exploration phase. As a business, we're about 50% institutionally held with some really credible tier 1 natural resource specialist domestic and offshore institutions who are very supportive of the journey that we're on, and ultimately it's seeking to build a mid-tier scale miner. Just looking into the Goldfields project, a little bit more detail. This map here on the right-hand side just shows you where the projects are located in and around the key mining towns of Menzies and Laverton. Really what we've been doing over the last year with this project areas is de-risking going into this development phase. That means everything from the geology, doing that well, metallurgy, geotech, taking this project forward towards a de-risk production sense. We've simplified our business model. As I said, we've changed from essentially what was a toll treatment processing miner with 2 small undergrounds now going to a much larger production scale. We're looking to put it through our own mill. Just takes risk out of that value chain. Of the production that we're looking to do, 70% comes from 3 large open pits. So we've got 1 million ounces in 3 pits, and that essentially is the engine room for this production. So that's the key point, is that this is actually arguably a simpler business model moving forward than what we've currently been doing, in that we're seeking only to have 1 open pit and 1 underground in operation. Brightstar is an owner-operator. The 2 undergrounds we've been mining ourselves. We don't use a mining contractor. That means everything from the mechanics and the fitters through to the technical services team like the geos and the engineers, all the way through to health and safety, IT, all the rest. That's all done by Brightstar. So that's kind of nuance for a business of our size, in that we've got all that intellectual property, all the systems and processes are already embedded. So I would think that we are not a developer, we're actually a producer that's now just building our own processing infrastructure. The first main ore body that we're mining is Lord Byron. It's actually co-located with our existing fish mine. What that means is that site's already completely established. There's a 170-man camp that we're currently using. Haul roads are in place, site establishment, comms, everything. So that project is development ready to go, and we'll be commencing mining there at the back end of this year. And then development, all of these projects have been mined before. That's a really important point to note. This doesn't carry your typical greenfields project risk. All of these projects in some part of history in the last 10 or 20 years have been mined and processed. What that means is there is a body of knowledge there in terms of the geology, the metallurgy, how they performed, which gives us a really good basis and knowledge base to actually put these projects into production. The economics are here. I will kind of slip through this slide pretty quickly, but the economics are compelling. Fantastic return on invested capital here. You can see the leverage it does have to the gold price. At $6,000, this project makes about $1 billion of free cash flows. At $7,000, where the gold price was only a few weeks ago, it makes $1.4 billion. So really leveraged to the gold price, which obviously we're very supportive of the current environment. All-in sustaining costs are about $3,000 an ounce, so well below half the current gold price. So fantastic margins for us from these projects. This is a rendered image of the processing plant. This is what it will look like. That's on the exact same site of where it is. We've engaged geoengineering to build this processing plant with us. They are the best in the business in terms of delivering conventional soil processing plants in Western Australia. Their pedigree is second to none in delivering projects on time and on budget. We do have a fixed price EPC contract, so it really kind of de-risks a lot of the schedule and the cost implications with building a new project. So we've been very focused on working with geoengineering to deliver this on time. We are looking to have gas in terms of the power source for the processing plant. We have engineered this to ensure kind of a seamless upgrade to 2.5 million tonnes per annum during operation, really giving us, I suppose, upside optionality. If we have further exploration success, if there's any other M&A that we look to do in the district, or if we just want to bring some mines forward in the mine plan and the schedule, we can look to accommodate that by increasing the size of this plant during operation. And that's a really important point to know. There's a lot of embedded upside here that we can try and capture once we're into operations. Just zooming over to Sandstone now, as I mentioned, this is our flagship project. It's 2.4 million ounces. We've acquired 3 companies and a project to deliver this asset over the last kind of 18 months. So it's taken a lot of time and effort to consolidate this region, something that we were really excited about, the opportunity from a consolidation perspective, but also geologically and from an upside point of view. This project was last mined in the early 2000s. Gold price was less than $1,000 per ounce. So we're in a completely different world. The previous owners of this project, due to milling constraints, could only process oxide material, and they only really mined the really shallow oxide pits. So all of the gold really was left behind, which is why there's 1.6 million ounces in the top 150 metres. So this is the platform for a fantastic, significant standalone project. We could see this having a 10, 15-year mine life quite comfortably. We've got 4 rigs out here at the moment. We'll have 4 drilling rigs essentially for the rest of the year out in sandstone. So quite a robust exploration program. This project and the business is fully funded to take this project to FID by the end of next year, which would see us go through a pre-feasibility study and a definitive feasibility study. We are looking at having a couple of resource upgrades out here this year as well, one mid-year and one at the end of the year, looking to both increase the quality of the resource, so looking to take more of the classification into measured and indicated, but also seeking to grow the size of this. We are very comfortable that this is critical mass for development. This is a project that will get built as it currently stands. We do not need any more exploration success, no more M&A is required. This is a fantastic project that, as far as I can see, doesn't really have any peers in the development space in Western Australia. And this is a project that's ready to go. So the work that we've been doing is getting it ready for that development. So really de-risking it everywhere we can. Material infill drilling programs, a lot of diamond, really seeking to increase our level of knowledge about all aspects of this project. We're really excited by the upside potential. The work to date has largely been, I suppose, increasing the quality of the database. Where we are as a business is now trending towards kind of looking at the growth opportunities here. So the exploration results that we'll start to look towards and report over the coming months, we'll start to have more of a growth lens over the top of it, which is really exciting. Last 12 to 18 months here has essentially been, let's take this project towards development. Now that we know this is going to be a mine or a series of mines, now we want to know how big is this? Could it double in size? Could it triple in size? It'd be very rare to have this level of endowment in a greenstone belt where we've got 1,800 square kilometres of greenstone terrain that's had millions of ounces mined, million ounces still in resources, and has really been under-drilled below 150 metres. There's an ultra-compelling geological thesis here to see how big can this project actually be. Just looking at the execution roadmap here in the Gantt chart at the bottom, you can see the key catalysts coming up, resource upgrades, studies to come out by back end of the year, and the DFS by next year. Running the permitting approval strategy in parallel with that, so that by the end of next year, we've got a project that we're fully funded to get there. It's then approved, permitted, DFS completed and ready to put into production. And when we put it into production, being able to use the cash flows from the goldfields. So where do we sit as a business? Look, this is something that we spend a lot of time thinking about. How do we actually position Brightstar as a business? The way that I look at the gold sector is there's really kind of a couple key subgroups within the Australian gold sector. Where we're trying to really emerge ourselves and position ourselves is a multi-project, so 2-project business, trying to produce 200 to 250,000 ounces per annum. That firmly puts us in that mid-tier category, would be a top 10 miner in Australia, gold miner. And the key takeaway here is that we're funded to build goldfields, we're funded to put sandstone all the way to FID. These projects are all on granted mining leases. They're ready, Goldfields is development ready now and commencing. And when we execute on this, there's a very substantial production profile here. And when you look at the sector, you look at either juniors looking for becoming developers, or even existing producers seeking to grow, there's a real lack of growth profiles here. We saw Vault and Regis merge earlier this week. That's merging for the purpose of getting larger scale. Spartan Resources, De Grey Mining, all these large, very successful takeovers, were the mid-tiers and the majors consolidating near-term growth potential. That is Brightstar. We've got these projects that are going into production, and upon success over the next couple of years, when we execute on our strategy, this is where we'll emerge. And we've got a $250 million enterprise value now. If you look at that peer group that we would sit in, there's substantially potential for a pretty material re-rating. Specifically, we're trading at about $70 per ounce EV in the ground. You look at some of our production peers trading at $300, $400, $500 an ounce, so quite substantial uplifts. You look at some of our developer peers like a Minerals 260 and Ausgold, similar positions, similar scale assets, and trading at kind of much healthier implied valuations. What that means, from my perspective, is we do our jobs well, we execute on this. There is real potential for a pretty violent re-rating in the share price over the coming years. And that's our business. We are really prepared here and have a great platform for sustained growth. And I think that's the nuance here, and we've got a project that's ready to go. Construction's commenced. We've got guys out on site today. Site establishment's all there, ready to go. We're fully funded for it. And when that project gets built, we take the same operations team, the projects team, the construction teams, and go do it again just on a bigger scale. And the ability for us to execute on that would be a rare accomplishment in the Australian mining industry. And that's something that our team gets up every day, seeking to achieve. We've got fantastic mining professionals in this organisation. We've been successful in attracting a lot of really high calibre professionals from the mid-tier mining sector, purely for the challenge of getting to build 2 projects back to back. And for us, that's really exciting, and that's the opportunity. We've got 5 rigs in the field at the moment. We'll be drilling all year. We're fully funded for it. So you're going to see lots of resource upgrades, lots of de-risking, production starting in June of next year, and ultimately bringing on sandstone later in the decade. Thank you very much, Chrissy, and thank you, everybody.
Well done, Alex. And you're sleeping when?
Never.
You're not sleeping, are you? No, never. Anyone's going to do it, it's going to be you. All right, next one. Our next company here has size. It has cutting-edge tech. It has Neuracity. And if you look at the recent announcements, our next company for your consideration here at RIU has demonstrated consistent execution in securing major mining company partnerships, big ones, 100 plus million in potential partner funding. That's impressive, across 7 projects and 7 million in partner-funded extension. You're on fire. You're happy, aren't you? This big fella here is Sam Spring, and he's going to walk us through the Kincora Copper story. Please make him welcome.
Thank you very much. I might not have to do the presentation after that intro. That was fantastic. The business model is a pretty different one. We're an explorer. We're looking for large copper gold systems, and as the title here sort of suggests, multiple shots on goal. And I'll run through that. We've got a portfolio, which again is a little bit different to your typical explorer, all of which are 100% owned, large-scale copper gold systems, and predominantly focused central west New South Wales. The important thing about this portfolio is that it's been assembled by a team that's found big copper gold systems before, and the exploration strategy is being driven by that team with that track record. 8 times the opportunity really is the approach that we're looking to play with here, and again, that portfolio approach. The company's DNA historically has been in the Southern Gobi, looking at a big copper porphyry system or series of systems up at the Bronze Fox project. That's Mongolia's world-class copper porphyry belt. We're at the process of seeking third-party investors and looking to recycle capital out of Mongolia into New South Wales, which is our focus. And since our pivot into New South Wales in 2020, we've drilled over 30,000 metres with our own shareholder capital. And as touched on, more recently have done 5 asset-level deals that have unlocked potentially over 100 million of partner funding. And that pivot and funding model supports more projects being advanced and less dilution. Within the portfolio in New South Wales, we've got 1 asset in the Southern Cobar, our Condobolin project. We've just announced last week that we're drilling a discovery that was made there 10 years ago. I'll walk through this presentation in a little bit more detail of what we're looking to achieve there and what success looks like. And the 6 other porphyry projects in New South Wales, we've got 1 asset level partner that probably is well known, Anglo Gold Ashanti, the world's 4th biggest gold miner. They're earning in, they've spent about $6 million with us to date. Within that part of the district, they've spent 20 million so far. It's a 100k north-south strike. That's a big project and potentially a new province that we're looking for. And again, getting this business model aligned with what the nature of the targets are so that we can give our shareholders the best chance of, 1, making a big discovery, but actually having a good return on capital and alignment. I'll walk through a few of the other projects within the portfolio as well, but really with drilling taking place in the northern part of the Junee Narromine belt with Anglo Gold Ashanti and Condobolin, they're the 2 that I wanted to flag straight up. What are we applying? We're applying a hybrid prospect generator model, and what that basically means is we're looking to take third-party capital, people that have done technical due diligence, and putting their money where their mouth is, with that dilution being at the project level. Rick Rule, well-known North American investor, he came on our register in September last year, recognising what we were looking to do and giving us capital with a 12-month lock-up to really look to execute on the business model. And we're relatively early in terms of still looking at further partnerships and making this business model more scalable. As Rick says here in this quote, prospect generators end up in a scenario where you generally do quite well exploration and success rates in terms of discoveries, where a partner brings technical capacity as well as capital, and you end up in a scenario where 1 + 1 = 3. And on the flip side, you're also able to have more projects that are being advanced. So again, more shots on goal. Again, putting the odds in your favour. So the prospect generator model, it's more of a common model in the North American market, not so common on the ASX. A key reason why I put this slide in the deck is one of the really common questions I have is, if you've got this dilution at the project level, what sort of return profile can you get at the listed company level? And historically, this model works quite well when you're looking for large-scale copper-gold systems. One great example is Greatland Gold. Back in the original discovery phases, the AIM-listed company, Greatland Gold, was a £50 million market cap. Newcrest, from funding that exploration at the project level, with that dilution being at the project level, supported Greatland's share price re-rating 20x to a 1.5 billion market cap. In terms of modern day porphyry examples, there's a very good one for us in terms of Inflection Resources. It's exploring with AngloGold Ashanti as its partner, in some instances adjacent to us, in the northern part of the Juni Narromine Belt. AMARC Resources is a very good porphyry discovery, pre-resource in the Golden Triangle there with Freeport earning in. So again, the purpose of this slide is really to show, while you're reducing, we feel, the risk of making a discovery, don't give that upside away. So a snapshot, 48 million shares outstanding. I'll touch on the register a little bit more in a following slide. That prospector generator model, 5 partnerships to date, 100 million of potential asset level partner funding. So far we've seen 9 million of that go into the ground, supporting over 18,000 metres of drilling across 7 different licences. And again, that gives you multiple shots on goal in terms of making that big discovery and being funded by partners who are putting their money where their mouth is. Also uniquely is that we receive a management fee from operating the earnings. There's 2 earnings with AngloGold Ashanti. To date, we've received $500,000 worth of discretionary income and effectively revenue. I should say that our flagship porphyry projects, where historically Kincora has spent the majority of our time and capital, are still 100% owned, and there's various strategies that we've got at the moment looking to bring in third-party assets and again make this business model further scalable. Through the course of a raising on the TSXV in September last year, which Rick Rule and Jeff Phillips came in and backed, and a more recent raising on the ASX, we're in a good cash position, $7 million on the balance sheet, and that's supporting us doing some very focused, capital efficient drilling on a 100% owned basis, where we feel that we can have some relatively easy wins, add value to the assets in question, and really drive shareholder value. And that's where our Condobolin project is front and centre with that. Shareholder alignment's probably best spoken to on this slide here. 55% of the register is held by reporting insiders, i.e. board and management, that have to declare on the ASX TSXV what our shareholdings are, or held by 12-month restricted stock until September this year from that financing last year in North America. Market cap today about $48 million with $7 million of cash in the bank. So strong alignment from the board and the technical team on the board driving the exploration strategy, and some pretty sophisticated North American investors. In terms of board and management, a very strong technical team. We're an explorer, it's risk capital still, looking to make big discoveries. John Holliday, one of the foremost experts in New South Wales porphyries, responsible for the origination and discovery phases of Cadia. Peter Lehman, serial successes with BHP, best known there at Reko Diq in Pakistan. Panost, that was acquired by Grams. Backed up by a very strong board, Cameron McRae, who's here at the conference, 28 years RIU, through exploration, predominantly mine development. James Durant represents one of our largest shareholders, MD of Rarex. Luke Murray, Chief Operating Officer of our largest shareholder, the Bloomfield Group, who have 2 operating mines in New South Wales. An advisory board that was formed after the Canadian raising last year. Kerry Stevenson's in the room. Really here to bolster the team as we ramped up a more expansive exploration strategy and really engage with the North American market. I'll skip through now onto the Condobolin project, where last week we announced we started drilling. You've seen a fair bit of consolidation, and a number of, I'm sure, other peers in this conference has talked to the M&A that's been going on in the Cobar district. Our Condobolin project was a historical mining field down at the southern end of the Cobar region, and that M&A really has been driven by high-grade mineral systems and underutilised infrastructure. We are comfortable drilling this project because we think it's one that a junior can really add value to quickly and capital efficiently. We've consolidated the historical Condobolin mining field. We're looking in and following up a good discovery that was made last commodity cycle, where you've got intervals there of 4 metres at 20 grams, 10 metres at almost 6 grams at shallow depths. As mentioned, drilling started last week. We're initially focused on an 8-hole program and looking to sort of with in mind what the predominant mineral systems in the Cobar district look like, which can be repeat systems, vertically extensive, looking to follow a template that's been successful at a number of good discoveries in the Cobar over the recent period. Again, Condobolin, you can see here, same scale to the CSA mine that Harmony bought for 1.6 billion last year. The Achilles discovery, which is a very good one by Australian Gold and Copper. What we're looking to do is test that down dip and repeat mineral system potential. The initial program is 8 holes. The first hole commenced last week, is looking really good. Looking to step down at 50, 60 metres down dip, test a number of virgin targets with strong geochemical and geophysical anomalies that have been never tested here. And we think, again, this is low-hanging fruit for a junior like us. Focused on the porphyry belt in New South Wales. Again, drilling at the moment, hole 36 with Anglo Gold Ashanti in partnership. Hole number 17 within the northern part of the Junee Narromine Belt at the Nevertire project. Nevertire, we think, is the most prospective porphyry opportunity in the northern extension of the belt. As you go further north, you go under post-mineral cover, and that's part of the opportunity really here. As mentioned, Inflection Resources has a partnership with Anglo Gold Ashanti. They've spent $16 million to date. What you're looking for here is really a new province, and the 5 licences that we've got in this agreement with Anglo Gold cover 100k north-south strike. To put that into perspective, that's twice the scale of Vicuña up in the central Andes, where the Lundins and BHP have effectively consolidated. So what you're looking for is not just one discovery, but really a new province. And the key there for this style of exploration is having the right partner to provide the capital and the technical support to really unlock that really large-scale potential. In terms of other projects within the portfolio, some of the ones that I'll draw your attention to are our brownfield projects. It's quite unusual for a junior in any jurisdiction to have assets that are part of an existing mineral system where you've got world-class mines, and within Kincora's portfolio you've got a couple. Our Fairholme project's immediately adjacent to and on trend from the Gold Corridor at Cowal, which is Evolution Mining's flagship project. To the north of that you've got Coonaberry's Fairholme project, where Newmont's currently earning in. To the immediate east of Lake Cowal, we've got our Cowal East projects. These assets have got proven existing mineral systems, a lot of strong geological and geophysical vectors to follow up exploration, and you can see there that they've got quite extensive mineral footprints that have attracted the attention of majors in the past. Moving over to the Trundle project, we think it's a rifted off part of the North Parkes complex, North Parkes being Australia's second biggest porphyry mine there. You've got FMG earning in up to the north with Mile. One of the common themes you can see from both these inserts is these are districts that are primarily held by majors, and these are the sort of projects that really belong in major portfolios. We've had significant investment ourselves. At Trundle, we've put $12 million of Kincora shareholders' capital to work, and what we're looking in conversations we're having with asset level partners is that sort of arrangement, similar to what we've got with Anglo Gold Ashanti in the northern part of the Junee Narromine Belt, is that next leg up where we retain material upside to not just a small program, but giving these sort of large-scale programs the meters that they really need to take them to that next stage. And I guess you have a look in the porphyry space in central west New South Wales. You've had some very good discoveries with Waratah, for example, Link Minerals. They're very good examples of the style of prizes that we feel that Trundle and particularly Fairholme have within them. So catalysts. I know this is a busy slide, and I guess with eight projects, it always is hard to concisely tell the story. We're drilling at the northern part of the Junior Narrabeen with Anglo Gold Ashanti. Obviously, that will continue to have news flow. That program's expected to continue through the course of the year. We're drilling with our own shareholder capital at Condobolin. That program should be a 6-week program initially for 8 holes. We're already getting permitting going for a second follow-up program with funding already in place to follow that up. So again, keep an eye out there. Late last year, just before Christmas, we completed a hole at Wongarbin, the first ever hole completed at that project, co-funded with a New South Wales government grant. We've got a partnership there with Fleet Space where they have the ability to earn in by drilling targets themselves. At our Cowal East project, we've got a partnership with Atom Ionics, a new generation gravity provider. They will, at their cost, do some field work there. We're in conversations with potential asset level partners at Cowal East, Trundle, Fairholme, Cundumble. And I think upon the next major asset level deal, which I'm very confident that we'll see relatively soon, I think you'll start to see more value being ascribed to that wider portfolio. And again, this business model that is relatively complex, getting fairer value in the marketplace from where we are today. So catalysts uniquely from drilling, but also further deals. So thank you for the opportunity. We've got a booth number 10. Please pop by if you've got any questions, but thank you for the opportunity.
Thank you, Sam. Great preso. Thanks, mate. All right, I'm going to use a word to sum up our next company, Dominant. Dominant. Let him strut his way up here. This is the founder. Doesn't look very dominant. He's not really. He's actually really absolutely great human being, Alexander. Seen you over the last few years. You come across very nicely, but I was reading all the information. I thought I'd dive into you a bit deeper this year. You're dominant, dominant, dominant. You've got most of the gold ounces. You're in a fantastic location and you have the mill. So you are very dominant. Let's see if we should have him in our portfolio. Please make him welcome, everyone. We're talking Barton Gold.
Thank you very much for joining us today. I am Alex Scanlon, the founder and CEO of Barton Gold. And per the very generous introduction, what we have done is established a dominant position in an historical gold field. About 10 years ago, we formed the view that gold was going to return to the center of the monetary universe. And I think we're all watching in real time how that's happening pretty openly. So we went looking around Australia for really interesting geology that was underexplored, preferably with access to infrastructure, and we settled on South Australia. We are a pure play precious metals developer. Started with gold, silver has grown into that portfolio, and we're focused in the central part of South Australia. So this is the Gawler Creighton of South Australia, very well known as the home of Olympic Dam. We have an IOCG belt there, or a copper belt, that has been consolidated by BHP Billiton with their acquisition of Oz Minerals. Across the highway to the west, that same mineralized basin goes from being sort of deep and copper and uranium-rich to shallow and golden-rich as it comes near surface. And that's a 130-year-old high-grade gold-producing district that was essentially dormant. So we spent a few years putting together deals to acquire pretty much the whole thing. We acquired every single major historical exploration and production asset in the region. We also acquired the only gold mill in the region. That's our Central Gawler Mill that sits at the Challenger project. And the idea here was not to take this back into operations too quickly, but rather to step back and build up something much bigger. So we've now spent the last 5 years essentially scaling this into a 2.25 million ounce gold platform that's capable of supporting 150,000 ounces per annum, utilizing a dual hub and spoke model. First, leveraging the existing mill that we have to operations, and second, building a high efficiency, large scale mill at our Tunkillia project. So we've done studies during 2025 that demonstrate that these two things are economically quite viable. We've brought these resources up. And now that we've moved into the year 2026, we're essentially moving from the first 5-year act of our business, which is essentially proof of concept, into the commercialization phase. We have a definitive feasibility study underway at our Challenger asset and drilling, looking at upgrading those resources and essentially creating the plan for turning that mill on in any number of different scenarios. We have another 25,000 meters of upgrade drilling underway at our Tunkillia project. That will take that all up to measured and indicated inside of our optimized open pits, and we'll publish a pre-feasibility study for that by the end of the year. The idea is by the end of 2026, we want to have a very clear plan and pathway for both of these assets to go into operations so that we can make that transition, become a producer, re-rate the company's equity and credit profile, start generating cash, and then grow. The idea here is that we have laid out the growth pathway before we start operating. If you start operating first, everybody has the question, where's the growth? Well, we've laid that growth pathway out in front. In parallel with all of this, while looking for another feeder gold system, we found a really, really high-grade silver asset. So this has become essentially an interesting third focus for us for the year. That's our Tolmer silver discovery. We discovered that in the highest grade silver intersection in the world last year. So a lot going on. I'll take you through in greater detail. From a very high level, we're a pretty simple story. We have about 240 million shares on issue. Today, we're about a $200 million enterprise value business, and we're 75% owned by board, management, family offices, and then institutional gold investors like Merck, Ixios, and Franklin Templeton. So we've seen our register consolidate around really cost-efficient progress, really low dilution, and of course, strong board and management alignment. Last year, we were added into the All Ordinaries Index in September. So we're really starting to sort of form a corporate or capital profile that's quite appropriate to our transition towards commercialization. In terms of our capital structure, our human capital is very important. We've developed a team that has collectively a very great deal of experience finding, permitting, financing, building, and operating major mining assets. About half of our team are formerly of Normandy Mining, obviously a very well-known name in the gold space. It's also a very well-known name in South Australia. So all of our team, myself accepted, are native South Australians or sort of adopted South Australians. We've got very strong relationships in the community with government. We are setting about building a South Australian champion, which is something that is a little bit unique now that Oz Minerals has been absorbed into BHP Billiton. When we look at this on a map, the three assets you can see in the top left of that map are the assets we originally acquired. Our Central Gawler Mill is at our Challenger asset in the very top left corner. What we did was focus on the middle of that map in the first place. Again, we wanted to create a pathway to scale. So we went to our Tunkillia asset. We grew that from about 0.6 to about 1.6 million ounces of gold. We did that very cost efficiently. The all-in cost of discovery there on a true all-in basis was less than 20 Australian dollars per ounce. So we have been very, very capital efficient. We then published a study demonstrating that that will be a very cost-efficient gold producer, and then went back up to Challenger, did 2 resource upgrades, and put out a study showing that we can refurbish and restart that mill quite cheaply. So that's brought us into the year here. Since November to now, we've done about 35,000 meters of drilling. We've got another 25,000 meters of drilling underway across Challenger and Tunkillia. And again, to look at Tunkillia, that will be advanced to measured and indicated and a pre-feasibility study to support our mining lease application. This is kind of our middle distance, medium term asset. And Challenger, we're looking at what are the near term startup configurations and options that we would look at. That is having resource upgrades, a definitive feasibility study as well. The Wudinna project at the bottom of the map is something that we bought that can be a very interesting supplemental asset to either our existing or planned future mill. I'll explain that a bit more. And the Tarcoola project, which we'll come back to, sits right between Challenger and Tunkillia. Now, this was the original high-grade gold field in South Australia. That's where we've made a surprise high-grade silver discovery right between the current and planned future asset. Existing mill, Central Gawler Mill, or what we call our Stage 1 asset. This is a 600,000 ton per annum facility. It was last operating in 2018. We published a study last year indicating that you could refurbish the mill itself for around 30 million Australian dollars. So we've now expanded this into a full-scale definitive feasibility study looking at the mill, options to potentially expand that, make it more efficient, look at the rest of the site, and then also upgrade all of the mineralization to indicated status that will feed the mill. And what we're looking to do here is to establish a low-risk, low-cost transition from pre-operations to operations, right? So we have an existing piece of infrastructure. The win is becoming a producer, right? We do not need to do anything crazy. We don't need to spend $400 million. The win is safely transitioning from pre-operations to operations and then unlocking the development optionality of everything else around us, including our historical high-grade underground. So this is something that we're working on. We'll be completing this DFS by the end of this year. The idea is, get that into operation, start generating cash, and then go and develop Tunkillia. Now, Tunkillia is the asset that takes us to scale, and this asset is the one we grew up to 1.6 million ounces. We published a study in May of last year that demonstrated this will be a very efficient producer. We modeled this as a 5 million ton per annum plant. And Tunkillia is really a study in the economies of scale, both in capital and operating costs. It's an asset that sort of behaves the way that you would expect to see for a bulk 5 million ton per annum operation. We optimized the pits to produce about 940,000 ounces of gold and about 2 million ounces of silver. We optimized the pits at 3,500 Australian dollar gold, and then we modeled the revenue at 5,000 Australian dollars. So if you think about that sort of pit constraint and those prices, $5,000 gold, $50 silver, this produces the type of revenue and operating profit and NPV that you would expect to see from an asset of this scale. But it has unusually high returns in terms of the internal rate of return and a very fast payback period. And that's because hiding in the middle of the main deposit here is a higher grade zone of mineralization. So in that main open pit area, we suspected that there was something hiding there. That was one of the first things we drilled. We validated this. Essentially, in a 3 kilometer long deposit, there is a 300 meter long zone right in the middle where if you take a cross section, which is what you can see on the right-hand side of the slide here, you're looking at the broadest mineralization in the whole deposit. So this is 80 to 100 meters wide, so very big, very bulk efficient. You're going to have large equipment, low unit costs, and high profitability. But inside this, you actually have 10 to 30 meters of mineralization that grades between 2 and 10 grams per ton. The effect of this is you're naturally going to want to start your mining there. And when we flip that cross-section back into a long section and see what that looks like, we get to these sort of staged development model or pit stages here. Now, you can compare the life of mine metrics of this operation. So 5 million ton per annum, 0.8 gram, 120,000 ounces per annum, and you get about a 2,200 Australian dollar cash cost, about 2,220 all-in sustaining cost. If you look at that starter pit, what you get in that starter pit is a slightly higher grade, where instead of getting 120,000 ounces per annum, you get 180,000 ounces, and then you get 150,000 the next year. The effect is we actually bring forward and accelerate a huge amount of economics. At the current gold price, when you push $400 million into building this asset and doing the pre-strip, you get $2 billion back in profit in the first 2 years. So the payback profile to this asset is extraordinary, and that allows us to pay back the development capital, start returning capital to shareholders, and invest in growth. 3 things you don't normally get to do at the same time in mining. We also then think about what are other sources of high-grade mineralization that we could blend into that plant to continue those very high return metrics. This is where we look at the Wudinna asset. This is the asset that was on the south of our map. Wudinna's got 3 interesting characteristics. One, well, it's got 280,000 ounces, but it's near a highway. And this is a highway that runs and connects to our existing mill and our planned future mill. It also has back roads that go up to the side of our Tunkillia project. Second interesting characteristic is that it has very interesting metallurgical features. So it has very high gold recoveries to traditional gravity and leaching. But the test work indicates that we can actually very efficiently produce a high-grade concentrate here. So instead of building an entirely new third mill and spending $300 million doing that, we can just produce a crush, grind, and flotation circuit and concentrate 90% of the gold into 6% of the mass, which means instead of a comparable 600,000 ton per annum plant like Challenger, which is producing gold bars, we crush, grind, and concentrate 600,000 tons into 36,000 tons of high-grade concentrate, and that's just 100 tons per day of high-grade concentrate going in 1 or 2 trucks up the highway and into our mill and supercharging those economics exactly like we see during the first year of Tunkillia, when our cash cost of production is less than 1,000 Australian dollars per ounce. So the lesson in Tunkillia is that you get efficiencies of scale. You think of like horsepower, but you get marginal efficiencies or economic torque to marginal grade. That's what we're targeting with a Wudinna asset. Third interesting characteristic here is some of these deposits are actually on freehold land. So this is something that we can look at accelerating to blend into our Tunkillia development project in the medium term. That takes us to Tarcoola. Again, I told you this was between our existing mill and our planned future mill. This was the original high-grade gold field of South Australia, and then we found a silver discovery. So we did work to predict new gold structures. We made a new gold discovery, and then we realized it's actually a silver discovery with high-grade gold in it. We drilled Tolmer first as a gold discovery, and then we realized that there was an unusually high silver ratio. Typically in the Tarkwilla gold field, for every 5 parts of gold, you'll have 1 part silver. And you can see this fairly consistently through its history of production. The first target we drilled here, we realized there were 30 parts silver for every 5-part gold. And then we drilled 500 meters to the west on the left-hand side of that screen. And our first drill hole in what we call the Western Silver Zone was 6 meters at 4,750 gram per ton silver, plus 13 grams gold, less than 50 meters from surface. So we've now drilled that a couple of ways. There's some very interesting things coming out of this. It looks like we've got a lower grade shallow horizon from surface, about 100 gram material. And then you've got that lower horizon there, about 50 meters deep, where you have silver between 100 and 17,600 gram per ton silver. We've done some test work recently, some very basic pan concentration of these materials, and came up with a very high-grade test concentrate that's now going off for metallurgical analysis, but that was a 100,000 gram per ton silver concentrate. And we've now expedited drilling to drill this on a different orientation. We're going to drill through this again and see if we can test some of the extensions that are indicated in soil assays, so I should say soil samples, that we've taken around a number of holes that grade over 2,000 gram meters of silver. So Tolmer is a very interesting exploration prospect for us, adjacent to our dual hub and spoke gold development model. And really for us, 2026 is about commercializing gold and figuring out if we can maybe commercialize some silver as well. We have got an incredible amount of work going on. We've created a very unique platform where we have most of the gold, we have all of the infrastructure. We will have more of all of the infrastructure when we build our second plant. And really, we think Barton Gold is a story for everyone, whether your preferences are relative valuation, discovery, near-term catalysts, near-term production, long-term scale. We have something for everyone. We'll be putting about 30 to 40,000 meters of assays out, multiple resource upgrades, multiple feasibility studies, and a pathway to operations during this year. So please check us out. Thank you very much.
Well done. How many of you are Canadian in your office, did you say?
Canadian?
Yeah.
I think none of us.
None of us?
We do have a Canadian director, but he's in Perth, Graham Arvidsson. I'm from the northwest of the US, so we try to.
Oh, God bless you, not quite there. You'd like to be though, wouldn't you? Canadians.
Right about now. Yeah.
Maybe.
Thank you.
It's a great project. Well done. Good initiative too. Takes a lot to be founder of your own company and back yourself that way. It is really nice to see it paying off. All right. Let's talk about Unity, shall we? These guys, once again, chasing gold. They have got a topping of copper to flesh out this story, and the story is taking place in a couple of countries that we haven't really touched on here at RIU so far, Cambodia and Thailand. And Unity Metals, I'm guessing you're going to have a lot to talk about today, Craig McKay, because you've got that little thing happening between the 13th and the 16th. So I'll hand it over to you. Would you please make Craig very welcome, everyone?
Thanks, Chrissy, and thanks to the organisers for giving us the chance. Ours was a bit of a late-minute application because we only listed in January. Yeah, so Unity Metals, first IPO on the ASX this year, listed on the 12th of January. We raised $8.6 million. We're exploring in Cambodia and Thailand for both gold and copper. The styles of mineralisation that we're chasing are intrusion-related gold, and that's very much our focus, but also porphyry copper gold. We're looking for discoveries of scale, so we're wanting something that is really worth our while, and I think we're heading in that direction with the results that we're starting to see. I suppose one thing that we've looked at, particularly when we put the package together, is the sort of strategic setting, and we've been fortunate to get a package where we're next door to major deposits. So in Cambodia, we're directly next door to the Okvau gold mine, and by directly next door means we're on the other side of the mine fence. So you've got Emerald Resources at Okvau. They sort of entered the country similar sort of size as we are now, and they've built a company that's now $4 billion around this Okvau asset. 1.3 million ounce resource, one of the lowest cost producers on ASX. And then in Thailand, we have ground around the Put 1 copper gold deposit. Now, Put 1 is the largest copper deposit in Thailand, 900,000 tonnes of contained copper, 800,000 ounces of contained gold, and we totally surround that asset, and we have lookalike targets in our ground. In terms of the team, we've put together a really good, particularly good technical team. We have a track record of discovery and resource delineation, collectively more than 18 million ounces of gold. We also have extensive operating experience in Southeast Asia, which is quite critical to be operating in that part of the world. So listed in January, hit the ground running. We've got an 8,000 metre drilling program underway. We're now 90% complete, so we've just done 3 months of drilling, round the clock, 2 rigs. We'll finish that program in the next 2 or 3 weeks. So most of the drilling is now complete, but we still have a lot of assays to come. So we put about 40% of our assays out in the announcements to date, but we have a lot more to come over the coming weeks. We're drilling five prospect areas on our flagship project called Nort. We've got assays back for 2, and we've got gold discoveries on 2. So in terms of the team, my background is in gold. I'm an exploration geologist, 38 years, worked in 40 countries, but in particular I've been involved in this intrusion-related gold, so gold related to a certain type of granite. I was first introduced to this style of mineralisation when I was with Anglo Gold, when I had a bit more hair. And then I've continued to work on this style of mineralisation throughout my career. So I spent 15 years in West Africa managing gold and rim resources. We found an intrusion-related gold system called Balago in Burkina Faso. The discovery intercept on that was 57 metres at 40 grams. And then it just gives you a feel for what these things can be. They can be incredibly high grade, associated with diorite intrusions, and we're on a similar sort of system in Cambodia. And I think that's the exciting thing about Cambodia, is it's completely unexplored, and we don't know what we're going to see at this stage. So supporting me, I have a team of 6 geologists. In terms of the head of the geological group, we have Shane Hibbert, exploration manager. Now, he was involved on the Okvau gold mine. He was the one that got the resource there up over 1 million ounces. He heads our team. And then we have another guy called Graham Moore, who was the country manager for Oxiana and Oz Minerals on Okvau. So we have a long background in Cambodia, and also particularly on the asset that sits directly to the north of us. So in terms of the company, we're just under 30 million market cap at present. We've done a lot of work since we listed in January. Current cash 4.5, 169 million shares on issue. In terms of the major shareholders, directors and management, just under 17%, and the single largest shareholder, Lao Resources Fund, just under 9%. In terms of the asset base, 3 projects in Cambodia, 2 granted gold licences and a copper gold application. And in Thailand we have 14 copper gold applications. They're contiguous, one project called the Loy Copper Gold Project. So we'll start off in Cambodia. This is a satellite image of the eastern part of the country. You've got our licences there in white. You've got the Nort project, and then you've got the Overflow project out to the east. If we focus on the Nort project, you can see that Emerald Resources have the licences in yellow. They completely surround us. So here's a $4 billion company, completely surround us. And then we have their mine right on our northern boundary. So the Okvau gold mine is only 2 k's from our boundary. It's the largest gold mine in Cambodia. And then we have another large gold mine in Cambodia called Masam, Chinese operation, which is 1.5 k's from our boundary. So in terms of a strategic setting, you can't get better than that. So if we have a look at the Nort Gold Project, so it's 112 square k's. As I mentioned, it sits right beside 2 operating gold mines. It's intrusion-related gold mineralisation. So we have a series of diorite intrusions that are mineralised with gold. And then we have that particular intrusion-related geochemistry, so arsenic, bismuth, tellurium with the gold. So we've done a fair bit of work before we did the IPO. So we basically had the projects ready for drilling after we listed. And so we've started doing that work. So 5 prospects that we're drilling, 8,000 metres, 50 holes. We're about 90% complete. We should be completed now in the next few weeks. And then we have a heap of assays to come over the coming weeks. So probably the most important slide in the deck. So the red outline is our licence area. You can see the Ockvale gold mine just to the north of us. North-northeast trending veins, open pit 2 k's to the north. You've got the Massam mine, again, north-northeast trending veins, 1.5 k's to the north of us. Now both of those deposits sit in a diorite intrusion. And then when you look at the colour in our area there, that's our gold and soil results. So we're able to delineate these quite massive gold and soil anomalies, really high grade, really contiguous, in about 5 areas. They're related to diorite intrusions, which are very similar to those that host the deposits to the north. And we're currently now systematically testing those with drilling. So we've completed our drilling at Rohav Mountain one, the one out to the west, North Central, the one in the middle there. North-northeast we're currently drilling, so the one closest to the Ockvale gold mine we're drilling at the moment. And then Strolo, which is one in the centre of the licence area. And I'll just show you a couple of slides on 3 of those prospect areas. So Rohav Mountain is the prospect out to the west. Just finished our drilling there. We've got some of our results back. It's a sort of north-northeast trending ridge, which has a basalt cap. So our geochemistry didn't work. There was nothing to see in our geochem. But there was one creek that cuts through the basalt and exposed mineralisation in the side of the creek. The rock chip sampling in there and some old Vietnamese workings, we were getting 24 grams gold, but also that intrusion-related gold signatures, so silver, zinc and lead. So 200 grams silver, 4% zinc plus lead. So we started drilling around that, and I suppose to our surprise, we've hit this large diorite intrusion. So this intrusion is incredibly altered. It's gold mineralised, 150 metres wide. We don't know the strike extent. We don't know where it's going at depth. But that's the target moving forward. So we still have 8 holes. We're waiting on assays for this. So over the coming weeks, we'll be very interested to see what comes out of those. So we have this intrusion, and then just downstream from that intrusion, we have the largest artisanal workings in the Nort project area. And what's interesting in those is that we're getting these angular gold nuggets. And we certainly think the source of that gold is an intrusion that we're starting to drill. And that's what they're getting, only 300 metres below the drilling that we're doing now. So nice angular gold grains, haven't travelled fast from the source. So this is the diorite intrusion at Rohav Mountain. I mean, we thought it was a sandstone when we first hit it. It's really pale, almost a white colour. The original diorite minerals have been almost totally replaced. So incredibly strong hydrothermal alteration, probably some of the strongest that I've seen in my career. So it's gold mineralised. We have a number of generations of quartz veins. So we have an early generation that doesn't seem to have a lot of gold, and then we have a later generation which is epithermal in character, where we find quartz, sphalerite, galena, plus the gold. So there's certainly going to be zinc and lead when we get results back. And that's going to be the generation of veining that we focus on moving forward. North Central is a central area central prospect area we've drilled. It's a large diorite intrusion, 1.5 k's by k. It has a coincident gold and soil anomaly with results up to 5,300 ppb gold. Completed 16 drill holes, and we've discovered a series of stacked shallow dipping zones of mineralisation. They range from 0.5 metre to 5 metres wide. Near surface we have half a dozen of those that are close to each other, and we're getting quite high grade intercepts in the veins that we've drilled so far. So some of those listed there. I suppose what excites us is the sort of near surface character of the veins and the fact that they show strong continuity. So some of the veins we have 4 or 5 intersections in the same vein, and they're still open at depth and along strike, and that's what they look like. So certainly very much an open pittable target and something that we're willing to look at moving forward. The one that we're drilling now is the closest to the Emerald Gold Mine, right on the boundary, large gold and soil anomaly, coincident arsenic anomaly. We're drilling 9 holes there, and that drilling should be completed in the next few weeks. Our second project in Cambodia is called Oplay. It sits out in the east of our gold mine in our Nort project, almost 200 square k's. There's some historical mining there, illegal mining. These guys were removed about 5-6 years ago, but not before they'd set up a processing plant, mine gold in a number of pits, which has been useful for us because it's exposed some of the mineralisation so that we can sample. So we've done a lot of soil sampling here. We've identified some really extensive gold and soil anomalies, sort of cover an area of about 2 by 3 k's, and you can see those on the slide there. And they sit at the northern end of quite a sizable granodiorite intrusion. Currently doing geophysics in this area, LiDAR, drone magnetics, and gradient array IP. That work will be completed towards the end of this month. Then we'll merge the geophysics and the geochemistry to identify our first drill targets in this area. And this is what one of the pits look like. I mean, what excited us is just the intensity of the stockwork mineralisation. I mean, it's quite incredible. So this area here is 40 metres in horizontal width. The strike is unknown, the strike is still open. We're getting 2 grams in our channel rock chips. And I suppose there's not many places in the world where you can find something like this that's never had a drill hole. So in Thailand, we have an asset in the northern part of the country, in the Loy Fold Belt. It's a copper-gold belt. So the Loy copper-gold belt, so we have 14 licence applications there, almost 200 square k's. It's sort of porphyry skarn styles mineralisation. Throughout the area, there's quite widespread copper and gold occurrences, some of them associated with gossans. The key thing there is that the largest copper deposit in the country, called Put 1, is in the centre of our licence package. Not in our package, but we totally surround it. So 900,000 tonnes of contained copper, nearly 800,000 ounces of contained gold. But when you look at that image there on the slide, so that's magnetics. That Put 1 deposit is associated with a diorite intrusion that's magnetic. And what excites us is these big magnetic anomalies that we have surrounding that in our licence areas. So there's 5 lookalike targets that haven't been drilled surrounding that Put 1 deposit. And that'll be the focus of our exploration moving forward. So in terms of the timetable, I mean, right now we're knocking off this 8,000 metre diamond drill program. Should be completed in the next 3 weeks or so. We've got a heap of assays to get back that will get out to the market in the coming weeks. We're finishing off our geophysical program on our Oplay project. Once that's complete, we'll get our drill targeting ready. And then we'll decide the next step on both, just how much drilling and when we do that. So if you want any more info, drop by booth 71 and give us a hoy. Thank you.
Well done. Oh, and he snuck out before I could get to him. I just saw Sean Russo was sitting up the back there, who's doing our commentating at the end tomorrow. He does his wrap up, and we just let him go because he's so interesting. So you got Rob in the morning, got Sean at the back. I was going to ask him what he thought of that one because he was taking little notes down. All right, we're going to take a little break for what do you reckon, half an hour? Sounds fair? So you hear the bell. When you hear the bell, come back this way. We've got 9 more company presentations up for your enjoyment, your investment enjoyment pleasure. And they're all 10-minute ones, so they'll be fairly quick and punchy all the way through. All right. I've just been having a cracker of a chat with some of our presenters over there. There really are some wonderful presentations. So well done those of you that have come in the room so early. I should have got you to get me a cup of tea down the back because I didn't get there. Look at this fella here. So we're going to start off. Now you would have remembered, was it last year we were talking about the company that you guys sold off? Latin Resources, your microphone there. So you did an awesome job with those ones. So this is Mitch Thomas, everyone. So he's the CEO of Solus Minerals. This year, you've moved to Brazil and you intend to repeat the effort. Would you please make him really welcome, everyone? Stick your hands together and give him a big RIU round of applause to welcome.
Yeah, so good afternoon, everybody. Look, thank you very much, Chrissy. And as always, look, a very big thank you to Vertical Events. It's been a fantastic week. So look, as a further introduction, my name is Mitch Thomas and I'm the CEO of Solus Minerals. And again, as Chrissy alluded to, today we will focus on lithium in Brazil because we just completed a transaction in that part of the world. The feedback from the share market has been strong. We're up nearly 300% in about 2 weeks. And the truth is there's a lot more potential there, which we'll go into in detail in this presentation. So as you can see on the map, look, the focus is on Brazil at the moment, and that's this lithium project that we've just acquired. We do have some copper exposure in Peru and 2 excellent porphyry targets that, if we have the time, I'll give a bit of background on. But again, the focus is really on this lithium project in Brazil, and really for probably 2 main reasons. One, it's a fantastic project, and we have a great track record in Brazil. So Latin Resources was a company that we sold last year. The deal completed in February of 2025, and we sold that for 600 mil. This project that we've acquired is adjacent to it, so just next door, and we're looking to do exactly the same thing, which is a big discovery. The second factor is lithium. It is absolutely ripping. We are lithium bulls. We think we're entering another cycle, and we'll go into that in a few slides' time. The second point is the team. So look, we're small, we're lean, but heavily experienced and heavily credentialed in South America. And from a personal perspective, look, I worked for Rio Tinto for 12 years. My last role at Rio Tinto was the CFO of Battery Materials based in Los Angeles. And that was basically focused on lithium. So look, we know the sector very well. I've lived and worked in Peru, Argentina, Brazil. So this is a part of the world that we know very well. And with the success that we had with Latin Resources last year, look, we're looking to replicate that. From a corporate perspective, look, very, I guess, low shares on issue compared to other companies in our kind of sector, which is great. It gives you lots of talk to the upside. And we've got about 2.5 mil in the bank at the moment. So funded for the drilling program that we're, I guess, starting very soon. So again, 3-pronged focus. So focused on this recent acquisition, which has seen us had a very good run in the last few weeks, but we do have some very good copper exposure in Peru. And look, lithium, copper, 2 pretty good places to be, as this slide alludes to. And look, very quickly on lithium, for those that have followed lithium for perhaps about the last 10 years, we've had 2 distinct cycles. So big run up in 2017, 2018, big run in 2022, 2023. But the key observation that I've had, and is pretty clear from the numbers, is that every single time we enter a cycle, the ceiling gets higher and the duration of the cycle goes longer. And as you can see from the chart, look, I can't predict the future, but it seems that we're heading into another, bull market upswing for lithium, again, which is great for us because we've just acquired this excellent lithium project in Brazil. So a little bit on the registry. PLS is our largest shareholder, and that's a shareholding they inherited from the Latin Resources divestment, but very supportive, and we stay in close contact with them. One thing to note here is that news flow over the past 2 weeks, for the past 6 months before the recent announcement on the acquisition was, look, a little bit light, and we take, full responsibility for that. We were trying to get this deal done. We've just got it done. News flow in Peru was a little bit slow, but the absolute commitment that we make to shareholders for the rest of the year, and this is on my shoulders, is that we're going to make news flow absolutely hit another level. We're going to start drilling in June 2026. So the rest of the year we think looks very, very strong. And look, as you can see on this chart, volumes, share price have increased significantly in the last 2 weeks. So we're looking to really, I guess, consolidate that momentum. Okay, so the board. So not a lot of time. I'll mention Chris. He's here today, so you might get a chance to speak with him. But he founded Latin Resources, which we sold last year, and he's very energised by the fact that we're back in Brazil. We're looking for lithium, and he brings a lot of skills and experience that we can leverage in that part of the world. The other person I'll mention is Tony Greenaway. So he's a Ned. He sits in the office next to me, actually back in Perth, but he's an excellent geologist. And the thing that I really like about Tony is that he's very black and white. When he doesn't like something, he tells you very quickly. But the project that we've just brought in, which I'll get to soon, he was really the architect in bringing that into our company. And fortunately for us, he was the geologist and led the team that found the Colina lithium project in Brazil, which we sold to PLS last year. And the fact that he's really endorsed and got behind this project that we've just brought in gives us a lot of technical, confidence in what we're looking at. So the Brazil lithium project, so this is what we've acquired. And, we call it a project, but it really is a district. So it's over 93,000 hectares, which is an absolute massive land holding in a very attractive, it's actually called the Lithium Valley in Brazil. And I think probably the most important postcode for hard rock lithium in South America. What we've purchased, so there are about 7 targets, and there are 2 advanced that have excellent surface geochemistry. So I'll get into some of the technical detail in a little bit, but we purchased this project from Rio Tinto. And they were exploring and doing their work for about 3 years. And look, having worked for Rio Tinto and knowing the company very well, they did excellent work, and that's all been transferred to us. So we can leverage the work. The projects are now drill ready, again, because they were doing surface work from auger, soil, rock chips for about 3 years. All we have to do now is drill, and again, the market's very supportive. The third thing I've got on this slide to mention is that the concessions that we've just purchased are adjacent to PLS, and that's also our largest shareholder. But I think that's most important for us in terms of our objective, which is a large discovery, is that we understand the geological signature, the formations, the rock types very, very well. And again, talking about Tony, he's been studying this area for the last 6 years, and he's very confident about what we've just acquired in this blue area that you can see on the image on the right. I mentioned lithium's absolutely ripping. A shareholder just sent me a text that spod out of China at the moment is 2,800 a tonne. So, heading in absolutely the right direction for what we're undertaking in terms of lithium exploration. And this was a low-cost acquisition, so $500,000, which, for a junior, very good entry point for a project with immense potential. Very quickly on the time frame of Latin Resources, just as context, in that we went from starting drilling in early 2022 to signing a binding divestment in mid-2024. So 2.5 years from commencing drilling to selling, and not to say that we'll do exactly the same. Look, our objective is to get a big discovery and do that through exploration, but it goes to show that things can move very fast in Brazil, which excites us. Okay, so talking about, the broader project area, and look, with the geophysics overlaid here to the right, you can perhaps make out Mandacaru and Campo Grande, which reside in the middle of this concession area. These are the 2 advanced targets. We have other regional targets that we'll be looking at in parallel, but the 2 main targets that are drill ready are Mandacaru and Campo Grande. So if we zoom in a bit on Mandacaru, and this, again, apologies if it can't be made out, but what you can see by these kind of red and magenta dots on this image on the left is a high concentration of surface geochemistry of lithium. So we're kind of seeing grades of about 300 to 350 ppm lithium. And on a lithium oxide basis, you multiply it by about 2.2, you're seeing about 0.9 to 1% lithium at surface, which, again, taken from soils, is very encouraging. One thing that I really like is that there's a big footprint here. 1 kilometre by about 400 metres. So we need to find, the source of what we think is a spodumene system, and that's what our drilling program will target. As a reference point, I've got a screenshot from a Latin Resources announcement from back in the day, from 2021, and the sorts of grades that we were seeing at a precursor resource to the eventual Colina deposit, pale in comparison to what we're seeing at this target. So again, a lot of confidence here that if we drill, there's potential to have a big discovery. On the ground doing DD, we've got pegmatites at surface, which are great vectors for helping us with our drilling program. This is the second target that, look, we're progressing to drill readiness in parallel, and it's only about 18 kilometres away from Mandacaru. Again, great surface geochemistry. All we have to do now is drill, which we aim to commence very shortly. Again, just an image showing that they're about 18 kilometres apart. The one thing that we're very proud of is that we move very quick. I mean, news flow is everything. For us, we have to move very fast to, I guess, feed the market. We were on the ground, getting the team ready, getting ready for drilling in June 2026, a week after announcement. So look, very quickly on copper, look, Sinto, this is a project with excellent surface geochemistry next to 3 large porphyries, and when the time is right, we will drill that. Kucho, another project, it had 7 drill holes in 2014. Very strong evidence here of a large porphyry system. Again, we'll drill this when the time is right. But basically, look, the story for the next quarter will be on lithium exploration. We have excellent targets. We've got money in the bank. We have a team who has delivered results in this part of the world. So overall, very exciting time for shareholders, and thank you very much for your time today. Cheers.
Thanks, Mitch. Thank you very much. I've just been reminded, not for you personally, because I know you'll be there, but MST Financial have got the drinks, so you'll be there.
Thanks very much, Chrissy.
Excellent. Cheers. You'll be there to chat to people, so the rest of you need to remember that as well. All right, let's talk an acronym, shall we? Let's talk AR3, ANSTOs. Let's talk about a new world-class pilot-scale rare earth processing facility. Whereabouts in Sydney is that?
That's ANSTO's facility out at Lucas Heights.
That is amazing. All right, so you guys are the first ones to partner with them on this, Travis, aren't you? This is Travis
Benke,
close. We're going to talk about Australian rare earths and some of the interesting things they're doing in uranium and also in rare earths. Please make him welcome, everyone.
Thanks, Chrissy, and thanks for having us today. So at Australian Rare Earths, we think it's a pretty exciting time to be in the rare earth space, and this was really highlighted by a significant transaction just a few weeks ago with USA Rare Earths acquiring Serra Verde for $2.8 billion US. Serra Verde is the only Western ionic clay deposit in operation today. That's a deposit style like our Copper-Mara rare earth project, and we think it highlights the strategic value in securing Western feedstock of rare earth supply into the market, and why we continue to be excited about progressing our Copper-Mara rare earth project. So it's a big year for the company this year. We've got a lot to deliver. With the project, we are in the closing stages of completing a pre-feasibility study for Copper-Mara, which will be released by the end of June. We will, as Chrissy mentioned, just roll straight into a pilot operation with ANSTO at their new facility being built at Lucas Heights. So, two really key catalysts that over the next couple of months that we will be working on. What is important about Copper-Mara, the strategic value is around the heavy rare earths. There are a lot of light rare earth projects around the world today that could fill that supply cap in the West, but today pretty much all of the heavies come from the ionic clay deposits in China or controlled by China. So ionic clay projects like Copper-Mara with access to the heavies are going to be an important feedstock. Also, the way that we're looking at developing the project, we're taking a really simple approach, driving technical risk and capital risk down, and we think this will be the best way to deliver this project. We also have an exploration portfolio that we've been building out primarily in early stage rare earth projects, but also in uranium projects in South Australia, our home state. From a funding perspective, we exited the March quarter with just under $7 million in cash. We are also still to receive around $2 million from an Australian federal government grant that we received about 18 months ago. So the next instalment in August is another $2 million. We have about another $1.6 million in options that are in the money that have been exercised progressively. So we've got a clear $10 or $11 million runway to deliver on all our key priorities this year. So really strong position to be in. I think we've probably all heard by now, China spent the last 3 decades building out control of the rare earth supply chain, and not only of the supply chain, but control of the pricing. I guess what we've seen over the last 12 months or so is a significant change there. So the ball got rolling in the US with MP Materials securing a price floor with the US government at $110 a kilo for neodymium praseodymium. And then just back in March, Lynas inked the deal, 12-year contract with Japan. Again, $110 a kilo for NdPr, but also a price-sharing mechanism above $150, sorry. And then with the USA Rare Earth Serra Verde transaction, that also came with a 15-year offtake, again, $110 a kilo for NdPr, but more importantly, this was the first contract on term that set a price floor for the heavies, the much sought after heavies, with dysprosium at $575 a kilo and terbium at around $2,000 a kilo. That's almost double the current rare earth pricing, and really important signals for the market on what's required to incentivise new supply. And then importantly, we've got the Australian Government's Critical Minerals Strategic Reserve, which will include rare earths and is likely to, when it's operational in the second half of this year, also have government offtake on term, potentially also with price floors. So some really positive signals to incentivise new supply into the supply chain. So just on the project itself, it's located in the southeast of South Australia. We have drilled out a very large resource of some 240 million tonnes. What we're really focused on is our initial development stage, and that's focused on a higher grade subset of around 1,000 ppm material, which will still have decades of production from that. So we aren't going to be resource constrained. We are going to be able to add tonnes over time, but right now the focus is on developing the project. We have a non-binding MOU with Neo Performance Materials for half of our stage 1 production. That's been a really important partnership from day one. Neo are pretty much the only Western, or have been up until more recently, the only Western company that has decades of capability in downstream separation, metallisation and magnet making. So having them as a technical support as we develop the project has been fantastic. And one of the things about the location of the project, which also helps us keep capital costs down, is the location. Whereas, a handful of kilometres away from the main highway, got good access to a couple of ports. We don't need to build a camp or an airstrip. So all of these things really help in keeping a capital cost down, which is going to be important for projects like this. The other way that we're looking at keeping that capital cost down has been our approach in how we're going to develop the project. So we've driven, I guess, simplicity across it. So we're developing the project via a heap leach, which will then rapidly rehabilitate the pits to hand the land back to the landowners so they can continue on with their existing land use, which will be really important. But with that and our approach, we've certainly looked to de-risk the project from a technical perspective, which we think, when compared to a lot of rare earth projects around the world today, they are technically complex, the chemistry, the processing route. So that's been a big focus of the team, and something that is going to be important as we unlock value through developing this project. We've been hard at work at a bunch of optimisation with ANSTO on the flow sheet, so the team's busy building that all back into the pre-feasibility study, which we're close to completing. So that has been delivering us operational and capital cost efficiencies with some of the improvements we've made in recent times. So we really look forward to getting that PFS out shortly with more detail on the project. One of the other changes and one of the other points of difference with our project is the final product that we're looking to sell into the market. We're looking to sell now a mixed rare earth oxide rather than a mixed rare earth carbonate. What that means is it is a higher purity product. So rather than a carbonate being around 40 to 50% TREO, a mixed rare earth oxide will run in the high 90% TREO. One of the other important aspects of rare earth projects is the rare earth assemblage, that basket of the elements that makes up that product. We're blessed with a really good assemblage of both the light rare earths, but more importantly the heavies, the dysprosium and terbium at 3% of our 25% magnet rare earths. Really strategically important and something of value to customers. The other emerging elements within that basket that has really taken prominence since April last year when China put additional export controls around some of the heavies has been an increasing focus from the West around accessing, yttrium, samarium, gadolinium and lutetium. So these are other potential value drivers for the project that we see coming up. As I said, pilot plant is going to be away within the next month or two. So we're about to truck 30 tonne of material from Adelaide to Sydney to ANSTO's facility. That'll be on the truck on Friday and here next Monday. We are the first industry partner to use this fantastic new facility, which we're really looking forward to. One of the other advantages of that is that we will have sufficient final product to share with customers over time to further that offtake engagement. PFS out by the end of this quarter, and really our first opportunity to share and demonstrate the significant value of the project. So we're looking forward to that. I'll just be really quick on our exploration projects and overland. It's our uranium project in South Australia where we've built out a large footprint. If you make a discovery in uranium, you want it to be in a jurisdiction where you can develop it. South Australia is the only jurisdiction with 3 operating mines in Australia today. We have a drill rig out there as of last week testing 2 new targets. So we'll have some news flow over the coming weeks with results from that. So we're looking forward to sharing that with you. And then to wrap it up, a big year, like I said, for the project. PFS in the next couple of months, demo plant or pilot plant underway, and then into some mining lease application. And I think I'm out of time. So thank you very much.
Well done, Travis. Well done, buddy. Good stuff. Thank you, sir. Watch those steps on the way down. Coming up now. In my job, I told you to Talkback Radio, and I've been involved in some very interesting discussions on uranium, providing baseload power, and it's got around to different jurisdictions in Australia, particularly the Northern Territory, and the things that they're doing to make it a critical mineral. And I've also had this really interesting discussion recently on bitumen, because there's a shortage of bitumen, believe it or not. It's a real thing. And coincidentally, believe it or not, on our rundown, this next company, Greenvale, are exposed to both. I wonder if that could benefit your investment portfolio. Let's make him very welcome, everyone. This is the fabulous CEO, Alex Cheeseman.
Thanks, Chrissy. When I put this presentation together, I realised it was going to be sort of later in the afternoon. It's pretty warm. It's been a long day for everyone, so bear with me for 10 minutes. But I thought at the end I've got a bit of Q&A. Chrissy's just given the answer away to one of the questions, so thanks. But we'll see if we can get it out of the crowd anyway. That's all good. Greenvale, I don't think Greenvale has actually presented in this forum at this conference before, so I will sort of treat it as a bit of an introduction to the company, keep it all fairly high level. I am here with our exploration manager and one of our marketing people, so we've been on the booth for the rest of the afternoon. We'll be here tomorrow. Please stop by. If you want to get technical, I'm not a geo, but Asha is an excellent uranium geo, and she will talk about rocks until you tell her to shut up. The company itself, we really are focused on uranium in terms of our exploration effort, and we sort of position ourselves as an exploration company. We do have a more advanced project, which I will talk about, but our exploration effort, the single commodity focus for exploration, is on uranium. Quick corporate overview. We're sitting sort of bouncing between 3.6 to sort of 3.7 cents, around $22, $23 million market cap. We've got a number of projects and all sort of focused on a clean energy and sort of critical infrastructure theme. For the purpose of today and only having a pretty short period of time, I'm only going to talk about 2. So the Douglas River project in the NT and also the Alpha project in Queensland. The reason I've decided to talk about these 2 is this is where we're going to be most active over the next sort of 3 to 6 months. So from an investor perspective, where we're going to be putting our time, effort and focus to create value. So the board, again, I'll sort of sit on this for a while just to introduce you to the company. Neil Biddle was the founding director of Pilbara Minerals. He's our chairman. He's also our largest shareholder. Leo Khoury is our non-executive director. Both Leo and Neil have held executive roles with the company over the previous sort of 5 to 10 years. I started in May last year as the CEO and moved into the MD role about 4 weeks ago. 3-man board, keep it pretty lean. We run the whole company very lean, and that's deliberate. So when we're not out in the field exploring, our overheads are pretty low. Asher, as I mentioned, is our consulting geologist, competent person for uranium exploration. I change her job title sort of as it suits me, and she's very frustrated by that, but she's a uranium expert when it comes to exploration. She has spent a lot of time in Australia and overseas working for a range of juniors up to the likes of Boss Energy and Cameco. She has spent a fair bit of time in the NT where Douglas River is located, and it's her level of confidence and sort of interest in the prospectivity of the project that is driving our focus in this project right now. Carla Healy just joined us as our COSEC CFO last week. She's been great. And Sam, I always get Sam's last name pronounced wrong, but I call him Sam Magage. He is our process engineer. He started life as a coal metallurgist, and that comes into play when we talk about the work he's doing with the Alpha project. So to Douglas River project. I won't talk about the uranium market too much. I think if anyone is interested in uranium, you know where it sits at the moment. There's obviously a heap of instability in the world at the moment around future energy supply and what we need. I suppose the resurgence in uranium and nuclear energy started before everything sort of kicked off in the Middle East this year. The US was doubling down on its intention to build out additional nuclear capability. So is China. So is the most of Europe that have already adopters of nuclear energy. There's a huge build out and investment of new nuclear capability, and we sit with a very much a starved environment from a exploration project development point of view for uranium projects globally. The charts here provided by Shaw and Partners, they released sort of an update of their forecast where they're now starting to model current supply, but also the supply that is dwindling as mines obviously reach their end of life, and then factor in the time to find, discover, develop, commission and ramp up new projects. We're staring at a massive gap in uranium supply. Uranium spot price is currently sitting in sort of high 80s to $90 US dollars a pound. That's good, but most of the industry would say we need it well above $100 to really incentivise new development activity. And until that happens, the big end of town are not moving. So it just exacerbates the supply crunch when it comes. Douglas River, we have had this project for a while, and we didn't get on the ground at all last year. We were limited to some geophysics techniques from aircraft, and that's because we were working through a land access sort of negotiations with the Northern Land Council, and I didn't want to sort of promote and highlight our excitement for the project while we were negotiating access. But the project itself is sitting in the Pine Creek region. It is genuinely a world-class region for uranium projects, uranium deposits and previous history of uranium mining. We have a fairly significant land package. We are well clear of the national park. If you look at DevEx Resources, they've built a large land holding in the sort of northern part of the Pine Creek region, and we're looking to replicate a similar thing in the southern part. So the project itself, again, all we've been able to do is remote sensing and geophysics techniques. So we use some satellite data. We looked at regional geology. But what's really changed for us is the northern tenement. I don't know if that comes up, but EL 34157 was granted in February this year. It kind of surprised us. There was no conditions, no objections, no carve-outs for the project. It just came through. Your licence is granted, and that's a green light for us to be able to get on the ground. So we are flying airborne radiometrics over that project in the next fortnight. We've already put in applications to permit a follow-up mapping and sampling activities, which we expect to commence in June, and we will be spending the next 3 to 4 months on the ground, teams in the field, scouring all the targets we've been able to identify, looking to make a discovery. Again, just sort of highlighting some of our target areas. This was done before the claim was granted, which is very fortunate that the most prospective bit of ground was granted in February. So for the project, that gap there is our radiometrics gap. That's what we're flying just to fill it in. There is obviously quite a lot of uranium occurrences around us, and we have been looking at a long time at how we can continue to grow our footprint and also potentially hoover up some existing uranium resources in and around the area. This is the next one that I've rushed to get to here because I need a bit of audience participation with this one. The Alpha project. Now, any long-term shareholders of Greenvale will know about this, but hopefully this is a bit of a lesson and an education for those of you that aren't familiar with the story. So, obviously there's a huge issue and global sort of lack of security around crude oil at the moment. If anyone subscribes to the Australian Flexible Pavements Association, who knew we had one of those, newsletter mail outs, you would have seen more information coming out from them in the last 2 months than I think you've seen in the last 2 years. But can anyone tell me what the primary use of residue from crude oil refining is used to make? The answer was given out before. Bitumen, that's right. Next question. How reliant is Australia on imports for its bitumen supply? 100%, yeah, this guy knows it. But also, that's great. What's the size of the Australia's domestic bitumen market? How much did we spend on buying bitumen in 2024? $1.9 billion. That's the domestic market opportunity. It's currently 100% imported, if you can get it imported. So we've been advised by AFPA that supply contracts were cancelled. Australia's also just had to adjust its specification to take a lesser quality bitumen into service our roads. Most commentators are saying, well, that's going to shorten the lifespan of the roads by about 50%. So, the Alpha project, it's been with Greenbelt for a long time, and it has had a bit of a checkered past, I'm not going to lie. We've been working through process development for the last 4 years. We're currently on test program 7, again, it's been going for a long time, seeking to take the torbanite and canalite that we have and produce bitumen to the C170 Australian spec. Again, test program 7 started before I started with the company, but we're at the final moments of that right now. So the product has been produced, a bulk sample, it's sitting in New Zealand working with our bitumen advisor there, a company called Technics, who are world experts in this space. And we expect that we will finally achieve this certification in the next probably 4 to 8 weeks. Everyone asks me when, but it's an iterative gated testing process we're going through, so I can't give a definitive timeline. But we're about as close as we've ever been. That really unlocks the ability for us to then value the project. So we can make the commercial product, we can put a scoping study around it and define the value we have here. The reality is there's nothing else like this in Australia. There's very few deposits like this in the world, and we think it's incredibly valuable even without what's happened in the Middle East. So what are we doing for the next few months? Why should you pay attention to us? A lot of activity happening in Douglas River. We're very excited about the prospectivity there, and some certification test work happening with Alpha, which has eluded the company for years. And if we manage to crack that at the point in time where this issue is happening with crude oil supply, I think it's an absolute ripper for us. 8 seconds to spare.
Impressive. Was that good? I just thought that was fascinating that there was this fellow with the bitumen. I thought that was really impressive. So 2 very diverse items on the project, but nevertheless, go and have a chat with him afterwards. Andrew Lawson, Invert Graphite's Andrew Lawson. Now, graphite, as we all know, is critical to the energy transition, controlled by China, and no one is really talking about it that much, and Andrew intends to change that. So join him on the conversation, make him welcome, and put your hands together.
Thank you very much. It's good afternoon. It's a pleasure to be here. As said, I'm Andrew Lawson, the Managing Director of Invert Graphite. Invert Graphite, we are planning to be a graphite-focused critical minerals explorer, and we already have a high-quality graphite tenement in Tanzania and some upside exploration tenements for rare earths in South Australia. What I would like to go through today, very simply, is why graphite is so important, and particularly right now, why we've got the quality of our project and our team, what we've done in our short life to date, and what we're going to do going forward. I won't dwell on the disclaimer. Please read at your leisure. So there's 4 reasons why I think you should be interested in Invert right now. First of all, we have an extremely strong board and management with a large track record, or very experienced in African exploration, in downstream processing, and in capital markets, access to US capital markets. We have exposure to 2 macro-themed minerals in graphite and rare earth elements, both of which are considered critical minerals by all Western jurisdictions. We have done our maiden drilling program. We got that done in 4 months and within budget, which I think demonstrates our ability to execute. And we have a low enterprise value of approximately 8 million, which is pretty cheap considering the quality of our assets and of our team. And so I think you're highly leveraged to our exploration success and the work we've been doing on downstream processing. As I said, our corporate history is pretty short. We listed last June, but since that time, we completed the acquisition of the Morogoro graphite project in Tanzania and of the White Hill rare earth licenses in South Australia. We raised $3.5 million as part of the raising. We completed the drilling. We started drilling soon after listing and completed that in December before the onset of the wet season. And we've been doing a lot of work behind the scenes on our downstream strategy, and I hope to sort of enlighten you more on that as we go forward. But basically, we've gone from an unlisted shell to a serious critical minerals explorer in less than 1 year. I want to really again highlight our team. We have a very strong team, as I said, African exploration experience, operational experience, downstream processing and capital markets experience. These guys have been around and done a lot. I'll notice in our board we have the two key architects of Hyperion X, which is a multi-billion-dollar listed titanium producer and processor based in the US, and they give us a lot of great insights on how to move forward and open a lot of doors in the United States. But our board, across the board, is very strong. It has a pedigree of Stellar Resources, Piedmont Lithium, Oklo, Papillon and Glencore. So I think that is a team that really understands, is experienced in what it's doing, and knows that this is more than just a tonnage game, that we have to provide real value downstream. So graphite, why is it important? Well, graphite makes up 95% of the anode material in all lithium-ion batteries. Each EV contains an average of, the average EV contains approximately 60 kilograms of graphitic anode material, and that is one of the key drivers behind the demand that we expect between now and 2030, where we expect a doubling in graphite demand. It's beyond EVs as well. It has a traditional industry, steel and so forth, but also we are seeing it used a lot in stationary storage, in military and in data centres as well. And the demand is structural. We may have seen some EV adoption moderate last year, although I think we're seeing some significant reversals on that with the geopolitical situation right now. Stationary storage and other applications are important, and there is no near-term substitute. And lithium-ion batteries still remain at the forefront of the battery chemistry technology. Just last week, CATL, the major Chinese battery manufacturer, announced that it had created an EV battery with a range of 1,500 kilometres that charges in just 6 minutes, which is simply incredible. The thing that is changing, though, is the demand for greener graphite. Right now, the majority of graphite is highly carbon intensive or uses hydrofluoric acid for its beneficiation or both. And that is becoming a bigger and bigger problem for the OEMs, and they are looking at green solutions for that. And that's where I think a Western jurisdiction based with a good natural graphite product can actually take real advantage. Supply is where you really start to see the starkness of the situation. China controls the majority of production of both natural and synthetic graphite, and in a staggering figure, it controls 98% of global graphite processing. And given the demand that's required over the next 10 years, that's going to becoming a major issue. China recognises this. It's one of its geopolitical tools. It put in last year or the year before export controls. It has permitting friction around graphite and is using it to its advantage. The OEMs recognise this, but they don't have much choice at the moment. They have to buy from China, and they're recognising that they have a single jurisdiction risk. So right now, again, a non-Chinese based graphite producer that can go downstream, I think, has a big future. The Morogoro project in Tanzania, you can see on the top left, is based 25 kilometres south of the township of Morogoro and is just 200 kilometres away from Dar es Salaam, which is the commercial capital and deepwater port of Tanzania. We're very close to existing jurisdiction. We have access to sealed roads. We're 30 kilometres away from the new rail line, and we are 60 kilometres away from the hydropower plant, which was commissioned just 2 years ago. A big advantage in our downstream processing in a reduction of carbon intensity there. We have 3 granted prospecting licences and 5 applications over 386 square kilometres, 60 kilometres of mapped strike length of graphite across those prospects. Our initial grab samples and metallurgy got us excited about this, and we commenced the drilling program and found some wide zones of graphite. Since that time, in that 4 months that I mentioned, we've completed 20 reverse circulation drill holes and 4 diamond holes. We produced some excellent results there. In summary, we're around 8 to 10% average total graphitic content. In summary, we have wide zones of graphite, we have continuity, and we have areas where graphite content exceeds 20%. I mentioned metallurgy. We did it on a basic flow sheet, which was not optimised towards our product, but we got some excellent results, which gives us comfort that we will not face excess complexity when we do our processing. Just trying to go forward. I will not dwell too much on rare earths. I think everyone understands that China dominates in the rare earth space, although ironically not nearly to the same extent that it does in graphite. We have the 2 exploration licences over 1,300 square kilometres in South Australia. We've got some historical data there. We're doing a little bit of work there, but we consider this to be optional upside for us, and we'll take advantage of that as the market dictates. So going forward for us, we are now out of the wet season. We will continue our drill program, and we expect that we are very close to releasing a maiden mineral resource estimate once we finalise some of our models. We've got extra work to do, particularly in that some battery test work, which will help us really refine our downstream strategy and connect us to where we need to go. Also not on there, as I mentioned, that we've done a lot of work on the downstream processing, and I fully expect to be able to provide more information about that in the next few months to really define what our strategy is and how we're going to achieve value for shareholders. So in summary, a few points. Graphite is critical for the energy transition for the future economy. It is controlled by China, and that is a geopolitical risk right now, and one that seems to be very much understated. We have an excellent asset at Morogoro and an excellent team that's able to exploit it. And we're cheap right now, so please have a look at us, and I look forward to keeping you updated as we go forward. Thank you very much.
Right, Andrew. Okay, so you started the conversation on graphite. You now know that we can do that here in Australia as well. Next up, we're going to dig into the Eyre Peninsula, and our target is new copper resources. This is our guide. He is the head of the well-placed team at Lincoln Minerals, Chris Wilcox. Please make him welcome, everyone.
Good afternoon, and thanks for taking the time to be here today. Lincoln is a copper-focused discovery company with projects in the Gawler Craton in South Australia, and our Minbury copper project is one that I'm pretty excited about, and hopefully by the end of this talk you'll be equally excited. Standard disclaimer. So just starting with a bit of a summary of Lincoln, the identification of a discovery-type intersection of copper, lead, zinc and silver at the Minbury project has, in historic diamond drilling, has reinvigorated our exploration on South Australia's Eyre Peninsula. We're actively focused on drilling at Minbury to test the potential for copper and base metals over the 17 kilometres of prospective strike identified to date. Beyond this though, Lincoln has a large tenement holding on the Eyre Peninsula, and these tenements are largely underexplored for copper and base metals, and the plan is to extend the learnings from Minbury across these tenements to identify new drill targets. So Lincoln's focused on copper discovery, and why copper? Well, I won't dwell on it, but The physical properties of copper make it critical to modern society, particularly as our demand for energy increases. And the convergence of global supply challenges and insufficient new discoveries coming through with this growing demand means that over the next 15 years, demand is forecast to outpace supply. And this scenario should be a positive catalyst for the copper price. In a regional context, South Australia, and particularly the Gawler Craton in central South Australia, hosts 66% of Australia's copper resources. The best place to explore for new resources is the underexplored areas of geological terrains with existing significant deposits. So Lincoln has approximately 1,100 square kilometres of tenements in the Gawler Craton, which are close to major infrastructure, and there's been very little, if any, focus on copper and base metal exploration on these tenements in the last 30 years. The Eyre Peninsula has the right ingredients for right geology for base metal discoveries. In the eastern Eyre Peninsula, we see the structures and intrusive rocks that are key for developing base metal mineralisation, and we see the same suite of intrusions that host Olympic Dam and Carrapateena. In world-class copper belts, we expect to see a range of mineralisation styles, and the eastern Gawler Craton is no different. There's IOCGs, epithermals, skarns, sediment-hosted mineralisation, and the mineralisation we see at Mimbri is not unexpected within a significant copper belt like the Gawler Craton. So the Mimbri project is located about an hour south of Whyalla, near the town of Cowell, which is known for its oysters and deposits of jade. Last year, a review of historic magnetite-focused drilling at Mimbri identified and then re-assayed an intercept of 29.5 metres at 0.8% copper, 7.5% lead, 1.9% zinc and 9 grams per tonne silver from 131 metres depth at Eagle Ridge. About 30% of the magnetite holes have been re-logged to date, and there are a number of holes with anomalous copper and base metals over approximately 7 kilometres of strike that's been historically drilled. But this hole at Eagle Ridge is what I refer to as a discovery type intercept, just for the amount of metal that's in that hole. And it's at a pretty shallow depth relative to most modern discoveries. So looking at the discovery hole in section, the mineralisation we see in Eagle Ridge has been ineffectively tested down dip. So the magnetite drilling generally didn't go past the magnetite unit, as the company that drilled those holes previously only held the rights to iron ore. And then looking along strike, you can see in the map on the right that the holes to the south of Eagle Ridge either didn't go deep enough or were drilled in the opposite direction to the target zone. So it's clear from this picture that the copper potential at Eagle Ridge has not been effectively followed up, and there's 1.7 kilometres of completely untested strike at Eagle Ridge. Discovery type intersections they don't come along every day, and particularly ones at shallow depth that are yet to see effective follow-up drilling. And for this reason, the copper potential at Eagle Ridge is something I'm genuinely excited about. The Eagle Ridge discovery is just the tip of the iceberg though. While 7 kilometres of strike was historically drilled, the stratigraphy that hosts Eagle Ridge is interpreted to extend for approximately 17 kilometres within our tenement. So this 17 kilometres of strike is largely untested, and given the potential for mineralisation demonstrated by the Eagle Ridge hole, identifying targets across the whole belt is a priority. And given the size of the target zone, our immediate plan is to drill lines of air core over this target zone on existing tracks. Using the existing tracks will give us lines of between 500 metres and a kilometre apart, and doing it this way minimises our impact on the farmers whose land we're working on. The results of the air core drilling will then be used to plan follow-up diamond drilling, and this approach will allow us to test the potential for scale. Mimbri is an exciting discovery, and I want to leave no stone unturned in realising the potential here. In addition to Minbury, though, we recently identified historic high-grade surface samples at the Southern Air project. In the 80s, there was rock chip samples that graded up to 11% copper and 0.9 grams per tonne gold, but they were not properly followed up, and over the last 30 years, there's been very little copper exploration, with most companies in this time focusing on iron ore and graphite. This area has a similar geological setting to Minbury, though, and the surface, it's not been effectively followed up. So while this project is at an earlier stage of exploration compared to Minbury, it just demonstrates the potential for further discovery across our Eyre Peninsula tenements. Looking forward to our upcoming work and news flow, so we're going to obviously be focused on Minbury, and first we're going to drill the wide-spaced Eyre core starting late May, early June, with the assays expected about 4 weeks after that. We'll also recommence the re-logging and re-assaying of the historic core at Minbury. Diamond drilling is expensive, so collecting geology and multi-element data from existing drill core is a huge cost saving for identifying targets. And the targets we generate from both the Eyre core drilling and the re-logging will then be ranked, and the best targets, including Eagle Ridge, will be tested with diamond drilling later this year. And then we'll also be identifying new drill targets on our southern Eyre tenements and assessing the potential for bringing a new copper project into Lincoln, which complements Minbury. So Lincoln has an experienced team to deliver the programs. Collectively, the board and management have skills across mineral exploration, project development, governance and investment banking, to name just a few, and we're supported by a number of well-respected expert consultants. So just to wrap up, we're excited by the discovery potential at the Minbury project, and I'm looking forward to sharing the results of our upcoming drilling with you. If you want to chat about our project in more detail, please drop by our booth. You can also keep up to date with what we're up to through our website, and I encourage you to follow our social media accounts. And with that, thanks for your time today.
Well done, Chris. Thank you very much. Oh God, that person never ever ages. Now, I don't know how many times I see him. He's a bit of an enigma. Go and ask him how old he really is. Christopher Cairns, your time starts almost now. This is Staveley Minerals, some very, very big targets on their gold, copper and nickel radar. It's going to be a little bit like trying to condense War and Peace into Reader's Digest, but you are the man that can do it. Let's make him welcome. His time starts now.
Thank you very much, Christy, and thanks to Stuart and Jackson and the team for asking us to present here. I've not been in the conference. I've had a lurgy for a couple of days, so I've been sparing everybody the displeasure of having it themselves. This is on our website. It's listed with, lodged with the ASX. We do have large targets. I won't be talking today about the Hawkstone project. It's a nickel-copper sulfide project, but talking mainly about Staveley project in Western Victoria today. We've just updated our mineral resource estimate to 60 million tonnes at 0.58% copper equivalent, and we're currently using that as the basis for a 2026 scoping study. It's due for release prior to mid-year, so we're busy on that at the very moment. And our objective beyond that is to discover more copper and gold resources. We've got 130 kilometres of volcanic belt in Western Victoria, and effectively we dominate that Staveley volcanic belt. Discovery opportunities really headlined by the Freddy's Find gold discovery. It's under 50 metres of basalt, so there's no old-timers workings. We are the first people to see the rocks underneath that basalt, and we drilled a nice hole last year that we're proposing to follow up. Right next to that is what we're calling the S4 porphyry target. It's very early stage. Again, we're looking to progress that through the various stages of exploration, but it looks very exciting. So our mineral resource estimate, the Cayley lode discovered in 2019, took us 2 years to drill it out. It's high grade, almost 10 million tonnes. I noticed the graphic in the previous presenter was absent, a fairly large spot in the middle of Western Victoria that is the Cayley lode. with total resources of 60 million tonnes at 0.58% copper equivalent. That is in a constrained open pit optimization containing 280,000 tonnes of copper over 170,000 ounces of gold and 5.4 million ounces of silver. And it remains open at depth. The increase really is a function of increase in metals prices quite substantially since our 2022 resource estimate. The constraining open pit got quite a bit larger and captured a large volume of lower grade material to the extent that the tonnage has gone up over 100%, the copper contained 30%, and silver and gold about 70% each. This is what it looks like in long section, obviously surface with all the drill collars up the top there, but the squiggly white line going across the page there is a low angle structure as it comes through the plane and slightly offsets the mineralization above and below. Most of the material down below would be subject of an underground. Most of the material above would be open pit. This is what it looks like in plan, multiple loads on the Cayley lode, all numbered there as per the resource wireframes. And flying off to the left there is what we call the north-south structure, also mineralized, part of which is captured by the open pit, but still largely undrilled. And the brown material down at the bottom is really the deeper material in the underground. So the difference between 2022 and 2026 resource estimates largely is the low-grade material, and there is a low-grade halo around the Cayley lodes shown in that pink shape. So that's come into resources, as well as on this figure over to the left, this is the block model, so those blue blocks over to the left are some more low-grade material that's come into the model. That is not as densely drilled as the area on the right-hand side where the Cayley lode is. Cayley lode drilled to about 40 by 40. On the other side, 80 by 80. And there is a suggestion on that other side that there is a lode in amongst that material as it comes up into the chalcocite blanket, which is secondary copper enrichment. We do see hints of higher grade material suggesting that lode coming up near surface. So we'll drill that out as part of the pre-feasibility. Scoping study, well, the opportunities there, do the MRE, which we have completed. That's all done, 60 million tonnes at our disposal. We'll look at several production options, including a 3 million tonne per annum processing plant. The potential to do additional test work, there were recommendations from the first round that we did to increase metal recoveries. But one of the real free kicks that we've come across is that smelters are now accepting 18% copper concentrate as a saleable concentrate. That means you don't have to wash or clean your concentrate as many times in the process plant to get up to a saleable grade, and it means that you don't lose as much metal in the process. So you've got lower processing cost and higher throughput. So we did a second open pit optimization, not using future-looking prices as we did with the resource, but to use consensus pricing provided to us by an independent party. Those prices are highlighted on the screen, but that open pit captured 34 million tonnes of 0.74% copper equivalent. And that realistically gives us a good indication of what the volume of material that we might be dealing with in the scoping study. Realistically, that didn't include metallurgical recoveries based at 18%. They were the 24% copper recoveries. And so we should get a little bit more of a free kick in terms of optimization based on those other metallurgical standards. So to look at the breakdown then of that 34 million tonne scoping study based consensus pricing open pit, approximately 80% of the tonnage in total in copper contained, in gold contained, and silver contained is in 80% of that is in the indicated resources category that is higher confidence. The implication then is that we will be able to confidently move into the scoping study phase and release production targets and financial outcomes as per the ASX. So that's a pleasing outcome. So that's coming soon. That's to be released prior to mid-year. And we're anxiously looking forward to the outcomes of that. We think it will surprise a lot of people, the NPV and cash flow associated at current metal prices. Those increased recoveries, these are the optimization parameters that we've got in a table on the left-hand side there. These are the recoveries that we used based on metallurgical test work for a 24% copper concentrate. When we look at we asked the metallurgists, okay, if we were doing an 18% copper concentrate, what would you expect the recoveries to be in terms of metal recoveries? And so 86% copper recovery in the primary material goes to 90%. So you get about a 5% free kick for less work, fundamentally, in your process plant. So that's very good news. And surprisingly, because you don't have to scrub it so many times, the copper recovery is increased by 20%. So we're very pleased to have that metal back into the equation. The concentrate sale would be a very clean product. It's very low in arsenic, cadmium, mercury, so it'd be very highly sought after and attract a premium price. And Victoria is open for business. They've approved 2 mines, 2 underground declines, so they're no longer the laggard in Australia. But just want to touch on very shortly exploration opportunities. We've got a lot of opportunities around Thursday's Gossan. Note the gravity low there. That is the big hydrothermal system turning everything to clay. A whole bunch of others. And this one, Freddy's Find S4, is what I'll focus on for the remainder of the talk. So on the left-hand side, the magnetics, 2 magnetic lows, which is hydrothermal destruction of magnetite. On the right-hand side, gravity high. We think it's because of the density of sulfides that we've got there. Neat little target, 2 kilometers long, and drilling prior to last year, 400-meter spaced air core. We put an RC hole underneath some reasonable looking material, got some grade intercepts, 16 meters at just over a gram gold equivalent, and another 16 meters at 1.2 grams gold equivalent in the same hole. That hole under 50 meters of basalt, as I say, we're the first people to see this material. In total, 122 meters at half a gram gold equivalent from base of basalt to end of hole. 2 styles of mineralization. At the top, the gray zones there I've highlighted have a chalcophile affinity, gold, silver, copper, moly. And then the pink zone there, gold, silver, arsenic, antimony with higher grade silver. So overprinting styles of mineralization. And just point to you up in here, the Boda discovery in the upper phyllic zone. Hole 71 and hole 80 got broad zones of low-grade gold. We got 122 meters at 0.5, and we're just about to start drilling underneath that. So we like it because it's early stage. It's got all the signatures of a multi-phase system. And there's a porphyry next door, which we'll test with RC. So thank you very much.
I needed a little walk then. Well done. Okay. What do you know about Sweden, team, as our next presenter comes up on stage? You know that it's got Volvo, IKEA, meatballs, and also the Nobel Prize. I'm going to add another 2 for you. It's also the location where most of the rare earths were first found. So you didn't call it scandium for nothing, did they? There you go, Scandi. They've got massive amounts of rare earth, and these guys, Ragnar Metals, are well and truly placed to make the most of it. This is Eddie King. Please make him very welcome.
Thank you for the kind introduction. You're not wrong about the meatballs. They're amazing everywhere, even the most random parts of the country. But anyway, I know it's late, so I'm going to keep this a very simple story in Ragnar, and I won't take the full 10 minutes. Whoever's next, just make sure you're ready. So apart from the code, RAG, I only need you to remember 3 things about the company. 1, we're capped at about 12, 13 million. But we have a low EV of 1.7 mil. 2, and the reason for this low EV is we have about $10 million worth of investments in ASX gold producers. And 3, the low EV means, we are being shown plenty of projects, we're being treated like a shell, but we're not sitting around waiting for a deal. We've leveraged our Swedish experience. We've found a great gold project, which we're drilling right now, and it's an incredibly prospective target, and assays are due this month. I'll give a shout out to the legal sponsors, Nova Legal. They helped prepare that one. And so re-emphasising the three things, because I want everyone to remember that as I do my presentation. Low EV, 10 million investments, and we're drilling. So gold assays are due, and so I believe the company is at an inflection point right now. Cap structure. So one of the things that stands out here is obviously the cash and investments number of, call it 11 mil. So we have about 9 million tied up in an ASX gold producer called Kaiser Reef, KAU. It's a fairly liquid stock. Our share price trend largely follows theirs. And our quarterly stated we've got 840 grand, but I've been approached quite a few times today asking when I need money. Whenever we need money, we'll just sell down our positions gently. We do have listed options. They're all excisable at 3 cents, expiring in December. So successful drilling, or if we let Kaiser do its thing, then those could be well in the money by then. We also have some fantastic major shareholders, including those investors on the screen. Our top 20 holds about 50%, so it's pretty tightly held. Now, one of the questions I usually get is, how did Ragnar end up with 10 million cash? And it's largely to do with Steve Formica. He was instrumental in closing a sale of a Tolsta nickel project in Sweden for 10 mil. He even convinced BHP to throw in a $10 million royalty buyout. And believe it or not, that's a happy shot of Steve. We're all looking pretty happy there. All those were taken before the Iran war. But as you can see, none of us are geologists and none of us are Swedish. So how are we exploring effectively in Sweden? Well, we have the best Swedish technical team that money can buy. And we have been using GeoVista for the last 9 years. This group is tier 1 advisors in Sweden. BHP, Rio Tinto use them. And we use them for everything exploration related, in particular understanding permitting and any community issues. So the second gentleman and last gentleman, John and Axel, are both from GeoVista and based in Sweden. That's a summary of our assets. I'll only go through the ones in white, but you can see we're Sweden focused, so why Sweden? So Sweden consistently ranks as a top 10 jurisdiction in the world for investment attractiveness, using factors such as political stability and geological knowledge. Our technical team always refers to Sweden as champagne geology. Everyone's always wanting to do a site visit there. But more importantly, that map on the right, I know it's not a great map, but I wanted to put it in to show one thing, which is that, my laser pointer's not working. Anyway, if you can see the border just below the mine, that border is very important. Anything north of that is pro-mining, and anything south of that is similar to Greens or Labor voters. So we're in a great position there in Värmland County. So what are we drilling? The Harness Gold Project. We entered into an option with these guys. They're, for lack of a better word, they're gold hobbyists, great bunch of Swedes. They've held this asset for 7 years, taken it as far as they can, but they need cash, they need knowledge, they need a bit of equity capital markets know-how. And so Axel from the technical team has been pretty intimately involved with the guys, and and he brought it to us when we had 10 million from the BHP sale. So there's some fantastic numbers there, but I just want to highlight that core on the bottom left. So that is what 7.8 grams per tonne looks like. So in the past 6 months since we've entered into the deal, we've done quite a bit. But the main thing there is we've developed a drill campaign for 12 to 13 holes, which we're drilling now. And assays are expected this month. So the drill program's pretty simple. So if you can see this diagram, the red is the mineralization that we can see, that we've mapped. And you can see the pit outline, and they sort of stop in the northern border. Now, the reason they stopped there is in 1990, they didn't own the northern part of the tenement. So it's a pretty steep pit wall. So we're testing the northern part. The drill holes are off the map. And we're also testing the depth of the vein by drilling under the pit. So 11 holes there from 4 or 5 drill pads. And so if drilling works out, we'll have some regional targets to follow up and hopefully prove up scale at Harness. So I mentioned, the second point I mentioned is that we have 10 mil in investments. 2 things I just want to really emphasize here is one, Kaiser have stated they're the lowest EV per ounce producer in Australia. And 2, the price targets from these 2 research notes are 70 cents plus. So it's currently at 25 cents. We think there's obviously amazing upside, and any upside in Kaiser already justifies our market cap, considering our EV is 1.7 at these prices. HTM is a smaller investment, but they're developing a little pretty nice pit at surface, so that should be cash flow positive by end of the year. And so, like I said, simple news flow for us. We're waiting on assays. We're doing a bit of work on another regional project, and we're keeping eye on our investments. So again, 3 things to sum up why Ragnar: low EV, 10 mil investments in gold producers, and we're waiting for our assays this month. Thank you.
Yes, lots of meatballs over there, aren't there? Many meatballs. It's so interesting with the RIUs there. I wonder if Mr. Trump will see that and think he needs to take over that one as well. All right, I don't really know if I want to speak to you, Brendan Cummins, or not, because I know you've been chipping away up in the Pilbara for the last 5 years on manganese.
Yep.
And then the share price does keep going up. But who listened last year and invested after they saw Brendan last year?
Anyone?
One
Even
of you.
my mum's in the audience there somewhere,
Yeah,
maybe.
if we didn't already have a sponsor for drinks tonight, that would be you. Let's see what Black Canyon has to still offer us in the development pipeline. Please make Brendan very welcome, everyone.
Thanks, Chrissy. Appreciate it. Yes, I'll bring you into the world of manganese. It does turn out I'm the only manganese presenter here at this RIU conference this year, so a bit of a captive audience. Bear with me. We've only got another 20 minutes and drinks are outside. I really like this photo that I've got here in front of us. This is the culmination of a good 18 months' work. Prior to us doing this drill out, you can see those drill lines. They're about 50 metres apart. It goes for about 2 kilometres to the south and also about 600 metres to the north, to the west as well. So a very big mineralisation system that we've been very fortunate to discover up there in the Pilbara. Investment highlights are pretty simple to talk about. We're a manganese-focused company. We've always looked for manganese since listing in May 2021, and we've been very fortunate that we've found the biggest manganese deposits in Western Australia, and then we also found Wandanya, which is a smaller but very high-grade manganese deposit. At the moment, we're really racing through the pre-development activities, doing a resource drill out, leading to mineral resource estimate and then scoping study. And we're growing the team slowly. Everybody you get in, joining the team, that's a lot of money. So what we're doing at the moment, we have been keeping our team very lean and cost effective. I'm a geologist. I've been on the rig multiple times myself, drilling this deposit, which has been excellent because every hole you drill, black manganese is coming up. So it's a really rewarding part of the process. $10 million cash in bank, very tight capital structure, and a very supportive share register as well. Let's look at the share prices Chrissy was referring to. So this time last year, I was probably a little bit sad. We're only a 5-cent company, about a 5 million market cap. Today, things have muchly improved, and we're a 65 million market cap. The share price is around 35, 40 cents. So I think that's been a great result for shareholders, and it's really recognition of a true discovery of manganese. One of the brokers I spoke to, once we found the Wandanya project, they actually said this is the best manganese discovery for a long time in Western Australia, and it's actually hard to argue with that. So institutional shareholders, we've got Nero, Perennial, Lower Resource Fund in there as well, who hold about 28% of the company. So that also gives us a lot more confidence about the process that we're running here. Very tight capital structure, 162 million shares on issue. So Wandanya, Greenfields discovery, never been sampled, mapped, anything prior to Black Canyon coming along. That'd be me. Looking at Google Earth, I could see there was manganese at surface. pegged the ground, it was vacant ground, went out rock chip sampling, get very good results out of that. And then we just started drilling, and it's a very continuous zone of mineralisation. We're located about 520 k's south of Port Hedland. Port Hedland's a 28 million tonne per annum port. A lot of capacity there to take extra feedstock from our project over time. We actually started drilling manganese in May 2021 when we listed the company, and we have delineated the biggest manganese resources in Western Australia, second largest in Australia as well. We've done it very efficiently in terms of capital use. This sort of shows a bit of the history of the company since May 2021. I've also identified the capital raises that we've done in the company since that time, and when you add all those up, we've actually raised $23 million, of which we've got $10 million in the bank. So we've run the company for 5 years, $13 million, made all these amazing discoveries, and Wandania's really been the icing on the cake for the company. So I'm tight with money. I'll get you something. If you don't know what manganese is for, it's used in steel. It's an everyday commodity. It's used in everyday life. About 10 kilos of manganese in every tonne of steel that's ever produced. It's in all the buildings. It's irreplaceable. It's essential for steel. Also used in batteries. It's an evolving feast, I guess, in the chemistry of batteries these days. But there does seem to be more indication that we are going to move to a manganese-rich cathode chemistry over time. What's it worth? Everyone seems to know what the value of Everyone seems to know what the value of iron is. It's about $100 a tonne. That equates to about $1.61 a DMTU. Manganese is measured in DMTU, and currently it's around $5 a tonne, which equates to $221, so almost twice as valuable as iron ore. But when you convert that to Australian dollars, that's about $316 a tonne for manganese. And that's at $5. Traditionally, the manganese price averages around $5.50, so we are below the long-term average. And where does all this manganese oxide come from? Mostly comes from Mawanda in Gabon, also comes from Groote Eylandt up in the Northern Territory, and Woody Woody. So all things being equal, and we keep on progressing and kicking goals with this project, we could be the third manganese mine here in Australia. Let's look at the project. The whole system's 9 kilometres long. We've only drilled 3 kilometres of that mineralisation right there. That's what I call our base case scenario. But what's really important about Wandania is its key development attributes. It's a designer ore body. It's outcropping at surface, very predictable mineralisation, 4 to 5 metres thick for kilometres, north-south, east-west, 500-600 metres east-west. So very large, consistent mineralisation for both manganese and iron. I haven't even talked about the iron yet. That's the free set of steak knives with this project. Shallow depth, so it's very easy to mine. It's at surface to less than 20 metres deep as well. Simple beneficiation. Some of the grades of manganese are DSO, so direct shipped ore for the iron ore and for the manganese as well. Open in multiple directions. So we've got certainly got upside to the north and to the south and to the east. Quickly looking at the scale of the base case, 3 kilometres long. This is that area to the north. This is all the manganese intersects. There's multiple manganese intersects through here. I could completely flood the screen and you'd probably get bored looking at all these intersects. But these are fantastic grades of manganese, firstly, and also really good thicknesses of manganese as well. Iron ore, very similar. Just up on the slope a bit further, you're getting good thicknesses of iron mineralisation there as well, at very good grades. Probably around 58% iron content. Very simple geology. That's your manganese outcrop there. As you can see, these holes are drilled to 18 metres deep. And then the iron mineralisation there as well. Just skipping down section, 600 metres to the south. Very similar story. The manganese there sitting close to surface and the iron mineralisation just up dip as well. This is what it looks like. Hematite red, manganese black. Very easy to separate in the mining sense as well. Let's have a look at the manganese. And this is why it upgrades so readily. It's a lumpy, hard product. So you can separate it from the white material, which is the waste, and also the hematite. That is unbelievably high-grade hematite, more than 62%, so very hard ore as well. So what's really important is the metallurgy. None of this means anything if you can't produce a product for manganese, so it's really important. So the average feed grade that we're looking at is around 30%, and what we did find is that we could produce a 40% product using DMS, using a dense media separation process, at a very high recovery, around 87%. So massive tick for the project. And the other parameter is the specification of the manganese, high-grade manganese, low iron content, low aluminium content, super low phos content. So that is evidently marketable in the manganese market, which is why I'm getting a lot of inquiries from investment firms with marketing arms, offtake companies, alloy smelters. They're showing a lot of interest in the products we can produce. So it's a super exciting phase for the company. So what are we doing in the next 6 months? Drill. That central area, that base case 3 kilometres, we're drilling that on 50 by 50 grid. 15,000 metres of drilling. We're about 5,000 metres through that already. It's very quick drilling. And then after that, we'll start looking to the north and to the south as well. But with the drilling completion, we'll go into the mineral resource estimate phase, then go to a scoping study. And we hope to do that by the end of the year as well. Greenfields exploration to the north and south, as I mentioned previously, this is a 9 kilometre long system. We've only drilled 3 kilometres of it. There's a lot of potential to discover more manganese mineralisation. I just got to emphasise, no one had explored this area before we got there. So it's been a massive opportunity for Black Canyon to get onto this. And then de-risking activities, you have to be able to identify the risk very early in a project, and then you have to figure out the way how you're going to, I guess, work around that, manage it, and de-risk those activities. So transport logistics is a bulk commodity, very important for the project. Mining, process design, site layouts as well. And we're also going through the permitting environmental approvals phase. We've just completed our first environmental survey through here. We've done a lot of heritage work. The heritage group that we deal with out there up in the Pilbara, the Kalkania Pali people, we've been working very closely with them over the last 2 years to find the really safe areas in terms of heritage that we can operate in, and they're happy for us to operate in those areas as well. And just ongoing strategic discussions with a lot of these marketing groups as well. The response has been really quite positive and a little bit overwhelming as well. So in terms of the timing of the news flow, we've got 5,000 samples in the lab at the moment. We should start getting results out of those in the next couple of weeks. That'll be the maiden mineral resource for us as well. Growth potential to the north and south when we do further drilling on that full 9 kilometres, and then advancing the pre-development studies as well. So a pretty full year ahead of us. I think that's about it. Perfect.
Yeah, that's about it. Well done.
Yeah,
Go.
thank you.
Thanks, Brendan. You had a cracker of a year. That was great. All right, now I've shared a lift with this fella the other day, platonically, purely platonically. Looked at him, he's sitting there. I thought, what is happening? What is happening, Mr. Dunbar? Emerson Resources. And then I heard. So you've got a bit to talk about, so I'll sit down and let's do this 10 minutes. And just a reminder too that if you want to see any of these presentations again, they are all online. The company's got their presentations up on their site, and the team down the back will be cutting them up over the next few days, so you'll be able to look at each of these presentations individually. And believe it or not, we've got 1,100 people here. We've got 1,000 people online watching. That's pretty impressive, isn't it? So well done to the team for that. Thanks, guys.
Thanks, Chrissy, and thanks to Jackson and everybody behind the scenes in giving us the presentation, the opportunity to present. I am aware that I'm the last speaker, so I'm going to try and keep this as short as I possibly can. However, I can probably summarise the Emerson story in one slide, and that's it. So those of you who know my chairman, Mark Connolly, he's known for getting good opportunities, identifying companies that there are obvious ways to transact and move forward, and Mark's certainly come on board with us and helped us in that process as well. So I will go through a few more slides, so it won't just be the one slide. We will ignore that one. Corporate snapshot. So who's Emerson? We've been around for around 18 years, working in the Tennant Creek district of Northern Territory. We've got a good board management, as I mentioned, Mark Connolly, Alan Tate and myself on the board, and we've had a really good year. So we started this year soon after identifying the White Devil gold mine, and I'll talk a fair bit about White Devil, and that's really been underpinning the opportunities at Emerson and why we've now been going through a sale process. So around about 12 months ago, we came out with our first resource at White Devil. Fast forward a few months, and you can see the share price jumped up as a result of that one was as a result of the scoping study completed at White Devil. This next one was really important. That's when I actually took annual leave. So a lot of shareholders suggested I should have done that years ago rather than waiting until then. Fast forward some more updates of resource and White Devil. And then finally, in March of this year, our joint venture partner, Pan African Resources, approached us with a scheme of arrangement to take over Emerson and consolidate the Tennant Creek mineral field. So a number of people have been asking and should ask, who are Pan African? I'll come to that in a few more slides. However, the summary of the transaction, we're being acquired for $311 million was the valuation at the time we announced it, with over $300 million. This transaction allows the consolidation of the entire Tennant Creek mineral field, which is a high-grade field. And I'm very limited as to what I can and can't say, thanks to the rules and regulations under a scheme of arrangement. So I do encourage people and shareholders to read the scheme booklet when it comes out next week, because that's a really important document, and we suggest reading that in detail. On top of that, it transitions Emerson from explorer straight to producer, and we retain ongoing exposure through our shareholding in Pan African Resources when this deal completes for the operation and development of projects around the Tennant Creek field. Pan African provides a attractive premium, exposure to very long life assets, a significant high margin and highly profitable gold business in Pan African. And I'll go through that in more details in 2 slides. However, there are a few details of the scheme that really need to be looked at. This is all on our website. I wouldn't expect people to read it now, but it's a scheme of arrangement whereby we get shares in Pan African Resources, and Pan African will list on the Australian Exchange, and we'll get what is termed CDI listed shares in Pan African on the Australian market. The board unanimously supports the transaction, obviously with the traditional carve-outs that I won't read through, but we believe it's certainly in our shareholders' best interests. To that end, 3 of our largest shareholders have supported the deal and signed agreements whereby they will support the deal going forward, which is obviously a good move for us and an important part of moving the company forward. The scheme is obviously conditional on a number of items, including shareholder approval. That shareholder approval will be the scheme booklet we're expecting out of ASIC in the coming days, first court date as part of that process, again in the coming days. Scheme booklet should be distributed to shareholders next week with a scheme meeting in mid-June. So who are Pan African? Not many people in Australia know Pan African. They are a diversified gold mining company producing around 300,000 ounces from their South African projects and doing it very profitably, and have been paying dividends for a long period of time. A couple of things on this slide, and on the bottom bullet point there, they're not typos. The resource base that Pan African has got, when they list on the Australian market, will be the 2nd largest resource base of any Australian listed company, second only to Northern Star. Larger than Evolution, larger than the Vault Regis merger when that completes, larger than Ramelius, so a very large organisation with a large resource base. It's also got the 2nd largest reserve base that will be listed on the Australian market. So we're talking a very substantial resource base with very long life assets. They've got an extremely good management team who have been running the business incredibly profitably for a long period of time. Proven management team. As I mentioned, they have been a dividend payer for the last, I think it's 9 years, and a very, very good dividend payments as well. So their operations in South Africa, I'll go through those relatively quickly. They really can be broken into 3 separate areas. The Barberton deposit, as well as the tailings retreatment at Barberton, the Evander and Ilakulu projects, MTR rather, and last, and probably most importantly for us, is the Tennant Mines projects in the Tennant Creek region. So why do they come into Tennant Creek? Because the Tennant Creek field is one of the highest grade, undeveloped and underexplored gold fields in Australia. They've identified long life assets through our joint venture with Pan African. They were our joint venture partner and still are until completion. They have commenced production. They've already built a processing plant there and are producing gold and have been for almost a year. Dominant land position thanks to our joint venture and massively underexplored area. So having a quick snapshot of the tenement portfolio and our tenements around the Tennant Creek region. So Tennant Creek is in the middle of that tenement package. Within 20 kilometres of their processing plant that they've already built is operating and producing gold. They've got a number of deposits. First of all, Pan African has the Juno deposit, very high-grade underground mine, and they've got the Warrego copper gold deposit further to the northwest. Emerson, and as part of the transaction, they get complete control of our smaller mines, a number of high-grade deposits there, Chariot, Eldorado, Golden 40, etc. But probably most importantly, and the thing I'll speak for the next couple of minutes on, is the White Devil gold mine. We identified that a couple of years ago, and as a result of that have now moved through with that project. White Devil is the highest grade undeveloped open pit in Australia. It's hard to believe when I first joined the company a couple of years ago that I'd be saying that. It's quite a remarkable position to have. 600,000 ounces at 4.1 grams in the resource on a granted mining lease. A high portion of that resource is already indicated, around 90% is already indicated. Very good infrastructure in place, sealed roads, gas pipelines, rail lines, and all of the infrastructure you'd expect from a regional township like Tennant Creek, hospitals, etc., etc. Granted mining lease, as I mentioned, and only 48 kilometres away from the processing plant that is already operational. We've completed a scoping study in the last year, just under 480,000 ounces in the mine plan, and that really just underpins why Pan African want to merge or take us over. The outcomes of that study, we've assumed 650,000 tonnes per annum, providing additional capacity for the higher grade underground mines that they also have in the portfolio. Conceptual production of 450,000 ounces of gold, very low capital cost because the processing plant is already built. Very, very low pre-production capital because of the shallow mineralisation. The pit optimisations have already been completed and have been done at $3,600 Australian dollar gold price, not the 6,400 that it is today. And the economics and the study really has highlighted an incredibly strong and high margin operation and opportunity in White Devil. Huge amount of exploration upside as well. It continues to a depth of around 450 metres, and you can see a number of high-grade extensions at depth. The Warrego deposit extends to a depth of 900 metres. This has only been tested to 450. And so given that there's 1.4 million ounces in the top 450 metres of this deposit, it's clear that there's opportunity to at least double that over time. So in summary, we've been sold, or we are in the process of being sold. As a result of this, we consolidate the field. We transition directly from explorer to producer, and our shareholders get an attractive premium, exposure to incredibly long life assets in Pan African's assets, and we can now move forward with confidence as to how we move forward. So thank you very much for your time.
On behalf of us all at RIU, it's been a pleasure, sir. Congratulations and best of luck in the future. That'll be exciting. Well done. Team, that is day 2. You've done absolutely stunningly. Once again, the hurleys are on fire. Kay's done really well down the front here. We're going to be back tomorrow morning. We've got 30 presentations. We are finishing a bit earlier, so we're finishing up around about 4-ish. That said, I've squeezed one extra item into the program, so remember, it's not on your program. Rob's very generously said he'll come in here tomorrow morning at 8:20. He'll do a bit of rap about some of the people that have been up on stage and any questions you want to throw at him as well, because Rob doesn't have his own booth out there, so we thought it's just an opportunity for you to all just pepper him with questions, and I'll run around with the microphone, or I'll ask him some insightful questions that will help my portfolio. It's up to all of you. And we're finishing off tomorrow with Sean Rosso. Now, he's been in and out of the room watching our presenters, and he's got a 20-minute slot at the end, but I think he'll just stay until you've had enough. And I love Sean, so I don't think that'll be a very early prospect either. Come out and join us for drinks enjoy some a little bit of downtime with some friends, because we do make new friends here, which is lovely. And for those of you who are online, we look forward to catching up with you again tomorrow morning. We'll start broadcasting at 8:30. Thank you.